budgetary control. Now, the past trend indicates that this chapter, which earlier was tested for more for theory, is now getting tested also in the practical segment of it. Earlier, if you see, in the initial first, till now 9 attempts have been completed till ever since the new syllabus got introduced. Out of that, in the first 6 attempts, definitely you can find one theory question from this chapter in question number 6. Always, be it zero-based budgeting, whatever it is, always there will be one theory question from this chapter. Then slightly after that, in the last 3 attempts, they have been testing this in the practical side also. Then and there it comes and goes. So this 10 mark or 5 mark or whatever it is, generally 10 mark comes in. So this chapter can actually be tested either in this practical area for 10 marks or maybe 5 marks or definitely in the under theory area. But definitely this chapter is being tested whatsoever. Since we have only just about 15 chapters and they have 100 marks, 100 marks means they have so many questions that can be asked. So Institute is happily making use of all this. So certain chapters indicate a trend. Certain chapters you need to definitely, you need to make out that, fine, looking at the past few attempts trend itself, it clearly indicates that from the Institute's viewpoint, this chapter is kind of, they are slowly drifting from theory portion to this chapter, which was earlier tested in theory portion, is now slowly being tested under the practical area. So again, the surprise element could be there. It's not regularly coming, but doesn't mean that you can skip it. Fine. Just today, 2-hour session. Let us just try to finish this chapter. Nothing big is there. Just whatever I'm telling you right now, you just make use of that, whatever knowledge that I'm giving you right now. Go home, practice sums just like usual, and you're done with this chapter. Okay? It's all conceptual. The best part of this chapter is, in some way or the other, we have already finished this chapter. Broadly, this chapter has 2 segments. I will tell you. One is called as functional budget, flexible budget. The other one, functional budget, is similar to cost sheet chapter. Flexible budget is similar to your marginal costing chapter. Basically, we've already done it. Then why are we seeing it here? I will give you a direction and we'll see it in a structured format. And there are certain sums that we'll be doing only here. Are you clear with this? So basically, this is something that we've already covered. So it's going to be a light session. It's not going to be very, very serious concepts and all. Something that we've already done. We're just going to brush it up and give some direction to it. So let's try to finish it up today. So that's the agenda for today's session. Now, in this chapter, I told you, broadly, this chapter can be classified into 2 areas. One is called as functional budget. The other area is called as flexible budget. Apart from that, you also have one more independent concept called as budget ratios. We'll first see that budget ratios and close off. That budget ratios, some 6 ratios they would have given. You just need to know what these ratios are, and there is only one sum in the study material that I've given you here. We will see the logic for that and we will just get going. Are you clear with this? So this is going to be the agenda. So functional budget, flexible budget, and one independent concept called as budget ratios. Some people, I think budget ratios, what they do is, they treat it as a part of standard costing chapter. But ideally in your study material, it is given only under budgeting chapter. So we will also do it only here. That's why I didn't do it under standard costing. Clear? Yes, guys, clear with this? If at all this budget ratio comes, that is only one sum in the study material. That sum we will do it in the classroom. 6 formulas you just need to remember. I will give you the logic as usual. You just remember those 6 formulas. We will do an illustration and close it off. That's all. The budget ratio part will be done. After that, I will just get into the actual part of the particular chapter called as functional budget and flexible budget. That's where we actually get started with it. Okay? Clear with this, guys? Clear with this? Now, what do you mean by a budget? In layman words, what do you mean by a budget? A budget is nothing but, you can say, a target. You can call it a plan of action. You guys generally budget, no? You have your budget, correct? Every day you have your budget, like for the amount that you spend, you have your budget. For the time that you spend, you have your budget. Beyond this, I don't have time to spend. Yes. So budget in normal parlance, it only means that it's a plan of action or it's some target that you are having. As simple as that. Now, I told you there are 3 objectives of this particular subject. What are the 3 objectives? Stock valuation, profit computation, decision making, and control. Now, this chapter helps you achieve 2 objectives: decision making and control. decision making and control. I will tell you how. I will tell you how. I will tell you how. Now, you know that in any organization, what they do is first they set some targets. And based on this target, only the actual performance get compared. Correct or not? Correct or not? We saw it in standard costing, no? Now, standard costing, you guys computed standard hours, standard rate. Where did you get that from? From the budgeted data, no? Correct or not? So, unless and until you prepare a budget, you can't set your targets and compare it with your actual performance. This way, you are achieving the objective of control. Are you clear with this? Are you clear with this? But then, how will you arrive at the standards? Or how will you arrive at the budget? Let's say, for example, the company says in the current period, they are telling the sales department, you should sell 50,000 units. You should sell 50,000 units. Let's say at the rate of 50,000 units should be sold at the rate of 100. Okay. Now, what happens if you see, even in our budget, no, in our country's budget, your budget of Finance Act and all comes, there people sit in the Lok Sabha and they discuss, no? Yes, that's how even it happens in top level companies and all. There will be multiple set of people who will propose their own budget. Ultimately, they will decide and they will go for the one that is best. Now, what happens? I am sitting in a board meeting. One set of people say, sir, in the next year, what we should do is, we should sell 50,000 units by fixing the selling price at 100 rupees. Correct? Now, what happens? Another set of people come and say, no, sir, let's not do this. What we will do is, let's make use of the law of demand and supply in economics. Let us slightly reduce the price to 95 rupees so that we will achieve more volume. Let's say 55,000 units. Correct? So, one set of people say, sir, fix 50,000 units at the rate of 100. Another set of people say, fix 55,000 units at the rate of 95. Now, when I am fixing my budget, I will have multiple alternatives. Between those alternatives, I need to choose the best alternative. No, out of these two, which one will I choose? It depends. Whichever alternative gives me the maximum profit, I will go for that. Correct? So this way, but for fixing a budget, I need to choose between multiple alternatives. This way, it helps me achieve the objective of decision making. Are you clear with this? So choosing between multiple alternatives is how I help achieve the objective of decision making. Having said that as my target, when I'm comparing it with my actual, it helps in my control. So broadly, this chapter has two objectives. Are you all clear with this? Are you all clear with this? So this is what, that's why I told you, every chapter when you learn the objective why we are studying it, so that you will have a crystal clear clarity on that. Clear with this, guys? Are you all clear with this? Perfect. Done. So this is about the introduction of this particular chapter. Now, what I will do is, first we will go to budget ratios. It's an independent topic. It need not be attached to any particular chapter. But anyway, since in the study material they have given it under this chapter, what we will do is, we will study it first. And then I will tell you, I will go to the next two segments. That is your flexible functional budget and all. I will tell you what it is. I will give you a background. We will do some and close it there. That's all. Clear with this? So let's go to the next part of this particular, the first part of this particular chapter called as your ratios, budget ratios, also called as your performance ratios. Now, guys, I want you to remember these 6 formulas. These 6 formulas. Please don't think that it's not important. I myself have seen in one attempt they tested this. They tested in question number 1, mandatory question, they tested this. You can't, that's why I'm telling you, question number 1 is always unpredictable. To reasonable extent, you can predict that material and your marginal costing and process and joint and buy. These chapters generally come, still you are left with 1 or 2 more questions in the question number 1 area. So there you can have subdivision. Any 1 or 2 questions can come from any area, any concept from the entire syllabus. So basically, once I saw this question was asked. This question means this question that we are going to see right now. It was asked for 5 marks in question number 1. What will you do? If you omit? So classroom itself will finish this area. It doesn't even require a practice. This is that kind of a particular area. Classroom itself will finish it, so that at least you are equipped with this. Okay, clear? Now, first formula you guys already know. First formula you guys already know. Efficiency ratio. What is the formula? Standard by actuals. I told you, I am allowing him 100 hours, but actually he has taken only 80 hours, which means his efficiency is 125. That is, he is over efficient. Should be beyond 100% or beyond 1 if you want to put it in decimal. Correct? This formula you guys know, standard by actuals. Yes. Activity ratio, also called as volume ratio. What is this? Now, simple. Let's say I budgeted so many hours. Okay, first of all, what do you mean by standard hours? The time allowed for the actual production. Correct? What do you mean by budgeted hours? The time allowed for the budgeted production. Correct or not? Basically, what they are trying to find out is the time allowed for actual production divided by the time allowed for budgeted production. Basically, what they are trying to find out of total what you have budgeted, what is the actual, that is, what is the standard for actual that you are actually, the activity at which you are actually operating. What they are trying to find out is, let's say I budgeted for 1000 hours, and let us say that the standard hours is only 800, which means what? The activity that I am planning itself is only 80% of the capacity. I am planning to operate only at 80% capacity. Are you clear with this? This is called as activity ratio. Standard hours by budgeted hours. Clear? Logical? I am trying to find out what is the activity at which I am trying to actually work. Are you clear? Yes. Next, calendar ratio. Does it ring any bell? Yes. Where did we see this? Calendar variance, fixed overhead cost variance. Under that, volume variance, you had 3 subdivisions: capacity, calendar, and efficiency. Under that, I told you possible budget fixed overheads minus budget, wherein we saw 21 days, 20 days and all. You remember? Basically, but this is nothing but available working days divided by budgeted working days. In that example, if I'm not wrong, there we budgeted how much? We budgeted 20 days, but only 19 days for us, something like that. Something 21 and 20, 22, 20. So whatever it is. So available working days divided by budgeted working days. Are you clear with this? Days in the sense hours. Every day has same number of hours. So yes, you can do it in terms of number of hours. Available working hours divided by your budget working hours. This is similar to your calendar variance that we have seen before. Guys, are you clear with this? Yes. Next, standard capacity usage ratio. Now, what is this they are saying? Let's say I have a factory and I can utilize a total of 1000 hours. But practically, I know I can't utilize the entire 1000 hours. Correct? So based on this, I budget only to use 900 hours. This is what they mean. Budgeted hours divided by maximum possible budgeted hours. Out of your maximum capacity, how much is you are budgeting? How much is it that you are budgeting? That is only called as standard capacity usage ratio. Out of the maximum possible, how much is it that you are budgeting? Then what do you mean by actual capacity usage ratio? Out of the maximum budgeted hours, how much is it that you are actually using? So actual hours divided by maximum budgeted hours. Are you clear with this? And actual usage of budgeted capacity ratio, the word itself tells you what to do. Actual working hours divided by budgeted hours. So these are some 6 formulas, independent formulas that they have asked. Logically, if you think you can get it. So efficiency ratio, standard hours divided by actual hours. Your activity or volume ratio is standard divided by budgeted hours. Your calendar ratio is actual working hours divided by budgeted working hours. Your standard capacity usage ratio is budgeted hours divided by maximum possible hours. Actual capacity usage ratio is actual working hours divided by maximum possible hours. And your actual usage of budgeted capacity. This is the most easiest. This itself tells you what to do. This itself tells you what to do. Actual usage of budgeted capacity ratio is nothing but actual working hours divided by your budgeted hours. So these 6 formulas alone, can you just remember? So whatever logic that I've given you, with that you just try to remember. It's a standalone area. Application and all will not be there. Okay, don't worry about this. Fine, shall we just do one illustration and close it off? It was a 5-mark question in past exam. So let's just make a use of it. Now, what have they asked in this question? They have told you, following is the data available for DKG and company. Standard working hours, 8 hours per day of 5 days per week. maximum capacity 50 employees, actual working 40 employees, actual hours expected to be worked for a period of 4 weeks 6,400, standard hours expected to be earned for 4 weeks 8,000, actual hours worked is 6,000, and actual hours earned in the 4-week period is going to be 7,000. The related period is of 4 weeks, meaning 1 month. In this period, there was one special day holiday due to national event. Okay, so this will have an impact on your calendar ratio, correct? Then calculate all the ratios they have given: efficiency, activity, calendar, standard, and all these things. Okay, now first you tell me, guys. Now I want you guys to look at the particular question. Don't look at the answer. Look at the question. Just answer to whatever I say. First, can anyone tell me what is the maximum hours available in this question? Can anyone tell me what is the maximum hours available in the question? Do the calculation. 50. So, very good. So, can I say maximum hours? Maybe you can also write it down. Please write down. The book itself, write down. Maximum hours is nothing but 50 employees into 8 hours a day into 5 days a week. Like that, I have 4 weeks a month. Correct or not? Correct or not? 50 employees is the maximum possible employees into 8 hours a day into 5 days a week into 4 weeks a month. So how much is this? 8,000 hours. Guys, correct or not? Hello? Hello? Yes? Are you clear with this? Next. What's your budgeted hours? What's your budgeted hours? Now, how many employees I'm budgeting? I know that only 40 employees can work. Correct or not? So 40 employees into 8 hours a day into 5 days a week into 4 weeks a month. So how much is this? 6,400 hours is the budget hours. Correct or not? Guys, are you all understanding this? Are you all understanding this? Next. What is the actual hours? I think it's given in the question. 6,000 hours. It's 6,000 hours given in the question. Correct or not? Given in the question. Correct, guys? Yes. 6,000 hours is given in the question. Next. What is the standard hours? I think that is also given in the question. 7,000 hours. 7,000 hours. I think that is also given in the question. Next, what is the budgeted days? What is the budgeted days in a month? What is the budgeted days? 28. 4 weeks. In a week, 5 days are there. So it is 20 days. Correct? But what is the actual days? It's going to be 19 days. How you got this 90 days? 20 minus 1. Correct? Now you have all the data with you. Just exactly do like this in the exam. First you gather all the data required for the sum. Just a matter of substituting the formula. First ratio. Standard hours by actual hours. How much by how much? Standard hours 7,000. Actual hours 6,000. So 7,000 by 6,000, 116.67. Are you clear? If you have the data with you, it's going to be a cakewalk. Very, very simple. Next, activity ratio. Standard hours by budgeted hours. 7,000 divided by budgeted is 6,400. 7,000 by 6,400. 109.373%. Are you clear? Next, calendar ratio. Actual working days by budgeted working days. So it's 19 by 20. You get this. Are you clear? Next, standard capacity usage ratio. Budgeted hours by maximum hours. Budgeted hours is 6,400. Maximum hours is 8,000. So 6,400 by 8,000 gives you 80%. Simple, guys. That's why I told you there is no much of application. You just need to get the figures and plug it. That's all. Next, your actual capacity usage ratio is going to be actual hours divided by maximum. Actual hours is 6,000. Maximum is 8,000. So 6,000 by 8,000 gives you 75%. Next, actual capacity usage ratio. It's nothing but actual hours by budgeted hours. So it's 6,000 divided by 6,400, right? It's going to be 93.75%. Are you clear with this? There is nothing great in this area. If at all they will only ask these 6 formulas, and you need to compute only these particular, the data required, input required for the sum. You just have to do it this way and close it off. Nothing great and all, But I am doing this here in the classroom just to tell you that it has been tested once in the exam. So please don't miss out on that. Are you clear with this? So with this budget ratio and all is done. I think in the standard costing, whatever sums I gave you, in one sum it came, no? Yes, in one sum it came, no? Yes. So that is only this sum that we did in budgeting, that we are doing here in budgeting area. So maybe you can just go home and do it. No, you need not do it also. It's the same sum only. But if you want to try it on your own once, and basically you just need to know the formula, and you need to get all this input data. Once you do that, the entire sum is over. That's all. It's not like standard costing where you need every single thing and application and all. Okay, done. Okay, guys, shall we proceed? Shall we proceed to the other segment? Shall we proceed, guys? Yes, shall we proceed? Okay, fine. Now let's get started with the next part of this particular chapter, which is called as flexible budget. We'll do flexible budget first, and then we'll go to functional budget. Okay, so let's do flexible budget. Please take the heading flexible budget. Flexible budget. Flexible budget. Now, guys, what is this flexible budget area? Let me take an example. Let's say, for example, the following data is given to you. The following data is given. Let's say 80,000 units. For 80,000 units of volume level, they are giving you the following data. Direct material cost, everything is given on a per unit, 8 rupees. Direct wages, 4 rupees. Variable production overheads, let's say it's 6 rupees. Fixed production overheads is, let's say, 2 rupees. Fixed production overheads, let's say, is 2 rupees. Then variable selling overheads, it's going to be 2 rupees. Fixed admin overheads, it's going to be, let's say, 5 rupees. And your let's say fixed selling overheads is going to be 3 rupees. Example, this is just an example, random example I'm just taking. Okay, now what they are asking you, they have given you the cost data for one particular volume level. They are asking you to find out what will be the cost, total cost, and the cost per unit if I am operating at 90,000 units volume level. Can you find out? No, just don't start doing the answer, but wait, I'm just telling you about the concept. We have a sum, don't worry about it. Now what has been given is the cost data of one particular volume level. Using the cost data of one particular volume level, you should arrive at the cost data for any other volume level. The cost data that is given for one single volume level is called as a static budget. Meaning what? For a given volume level, what is the budget? Static means it will not change. Based on the data given in the static budget, you need to prepare the budgeted cost for another volume level. That is called as flexible budget. Are you clear with this? So based on the inputs that you gather from a static budget, you need to prepare a budget for another volume level, which is called as flexible budget. Are you clear with this? Now, in this sum, you tell me what you will do. Now, they have given direct wages 8 rupees per unit. First step, what will you do? When there is a flexible budget question, what you should strike your mind? 3 things. Number 1, variable cost should always remain constant per unit. Fixed cost should always remain constant in total. In case it is neither remaining constant in a per unit level nor on a total level, segregate the semi-variable cost into fixed and variable portion. Clear? Now, direct material is variable or fixed? Variable. So what I will do, here I will say, okay, it's going to be variable here. Then direct wages 4 rupees. Variable production overhead 6 rupees. Fixed production overhead, it doesn't make sense if I put this 2 here. So what will I do? This 2 immediately I will multiply with 80,000. How much is it? Well, so I will present it here as 1,60,000 rupees. I am not preparing the budget. I am just giving the inputs for this particular data. Are you clear? So these are all, whatever is my variable cost, I will put it on a per unit level. Whatever is a fixed cost, I will put it in total, so that with this I can easily prepare a budget for 90,000 units of volume. Are you clear with this? Guys? Yes. Next, variable selling overheads, I will retain it in per unit. Fixed admin overheads, 5 into 80,000. How much is that? 4 lakh rupees, correct? So I will put this 4 lakh rupees here. Then you have another fixed selling overheads, 3 into 80,000. How much is that? 2,40,000. Now what I will do with this data, I can prepare the budget for any volume level. Forget 90,000, any volume level. I know that if it is going to be for 90,000, so all the units that are mentioned on a per unit level, all the components mentioned on a per unit level, I will multiply with the respective volume. All the data that is available on total, I will keep it as such. So with this, I can prepare the total cost for any volume data, correct? So this is called as flexible budget. Are you clear? So how did you get all these figures? From the static budget. Using these input, you are going to prepare budget for any different volume levels. It's called as flexing the budget or flexible budget. Are you clear with this? Are you clear with this? Guys, are you all understanding? Nothing more. We have already done all these things. We have already done all these things. Segregation of semi-variable costs. How will you do? Change in delta cost divided by delta units gives you the variable cost per unit. Once you find out the variable cost unit, total cost minus variable cost gives you your fixed cost. We did this where? First, no. Overheads, I told you. Overheads, first segment. Turn back the page and see. First segment, we started overheads chapter only with this semi-variable cost. Do you remember? It is chapter number 2 that we did here in our classroom. Correct? Yes, first thing that we did here was segregation of semi-variable cost. You remember, it will start on left side bottom, right side full page it would have been given. Correct or not? You remember that? Yes, we did it fully. I told you it's actually a part of flexible budget, but still we are doing it here. I told you. I told that also. Yes. Guys, are you clear with this? Fine. So basically, flexible budget is all nothing. Basically, from a static budget, find out, arrive at the variable cost on a per unit level, arrive at the fixed cost in total. With this data, you can prepare the budget for any volume level. Are you clear with this? Are you all clear with this, guys? Is everyone understanding? Yes? Is everyone understanding this? Guys? Yes, guys? Yes? Fine. So, shall we just go to the problem and do this? Shall we just go to the problem? That's all. That's all. Nothing more. So, if you want to give, you can just keep on practicing. That's all. We will do one sum and we are done with this particular segment. That's all. Clear? Shall we go, guys? Shall we go and do it? So, just take question number 1. It's on page number 78. This question is a past RTP question. It's RTP May 19 question. It's RTP May 19 question. So let's just have a look at this particular question. S Limited has prepared a budget for the coming year for its two products A and B. So product A, product B, they have given the data. Production and sales, 6,000 units, 9,000 units. So I'm not reading out these figures or not. So it's not relevant anyways. We will be reading it when we are doing the sum. They have given the production and sales in units. Raw material cost per unit, direct labor cost per unit, variable overhead cost per unit, fixed overhead cost per unit, selling price per unit. These are the data that are available product wise. Clear? After some marketing efforts, the sales quantity of product A and B can be increased by 1500 units and 500 units respectively. What they are saying, if they do some marketing, they can increase their output by 1500 and 500 of A and B respectively. But this doesn't come free of cost. But for this purpose, the variable overhead and the fixed overhead will be increased by 10% and 5% respectively for both the products. You are required to prepare a flexible budget for both the products. Why is it flexible budget? Because now the output changes now for you. Correct? The output now changes. As instead of 6,000, you will prepare it for 7,500. Instead of 9,000, you will prepare it for 9,500. Correct or not? Fine. So A and B respectively is going to be 7,500 and 9,500. For this volume level, you need to find out the cost after the price revision. Are you clear? So from the flexible budget, you will take the original data. Plus there is some cost revision happening that should also be considered while preparing it. Fine. So what they are asking you is, you are required to prepare a flexible budget for both the products before marketing efforts, after marketing efforts. Sir, before marketing efforts, they themselves have given in the question. No, they have not given it. They have only given everything in per unit. Fine. So you need to put it in total and also that's what something that we need to do. Fine. Just take 20 seconds time. Quickly go through this question. Go through this question once and let's solve it quickly. Together we will solve. Okay, shall we start? Shall we start? Shall we start? Now always remember, when you are doing these sums in a flexible budget, always remember maintain 2 columns for every product, per unit and total. Why, sir? Because because from the static budget, whatever is the variable cost, go and immediately fill it on the per unit column. Whatever is a fixed cost, go and directly fill it on the total column, so that you can directly multiply with the quantity or divide with the quantity to arrive at the total or per unit respectively. Clear? Are you clear with this? Always follow this. It will be very simple. So let's quickly just finish this. I think this came for 10 marks, I guess. I don't know. I think so. I mean, if it comes for 10 marks generally, or 5 marks is too less for this. 10 marks is 2 more for this. Maybe 6 plus 4, something like that they can have. Yes. I have seen 6 plus 4 and all. Yes, they will come. Or maybe what they will do is, they will merge this along with marginal costing. They will test this for 5 marks. Marginal costing, one small sum they will put inside this break even and all they will ask. So 6 plus 4, 7 plus 3, they can do anyways. So you don't worry about it. If they want to test, they will test it. Don't worry about it. Okay, fine. Let's start. This is what question number 1 on page number 78. Guys, this is one vanilla sum. We should do it together quickly. Let's do it quickly. Page 78. So write down. First part, write down part 1. Part 1. What is part 1? Flexible budget before marketing efforts. Before marketing efforts. Flexible budget before marketing efforts. So what you need to do right now is prepare particulars and 4 columns. That is product A inside that per unit total, product B inside that per unit total. Make it fast. So let me try my luck today with the scale. See how beautifully it has come. Okay, fine. Do it guys. I know I wasted a lot of time. Instead, my scribbling itself will be good only. Anyways. Okay, write down. Particulars. Particulars. Then you have, you have 2 product A and product B. Under that, per unit total or amount, per unit and amount. Actually, this per unit is also in amount only. Per unit and total. Okay, per unit and total. Let's start. First. Okay, first sales. Okay, by the way, let's put units on the top. Product A, how many units? This is before marketing efforts. 6,000 units. How many units of product B? 9,000 units. Okay, right, perfect. Now tell me sales, how much is it? Per unit. So what I will do is, first we will just fill the figures alone. Whatever is the relevant figures that we will fill. Okay, for B it is going to be 78, correct? Don't fill the total column. I'll tell you, don't fill the total column. 78, okay? Then you can just put a dash here. Fine. Put a dash here. Then we are going to cost. First cost. Raw material cost. Is it variable or fixed? Variable. So fill only the per unit column. How much? 60, 42. Guys, do it the same way in exam. Habits die hard. So do it in the same way. You will follow the same thing in exam also. Next, raw material cost. After that, direct labor. Variable, fixed? Variable. So fill the per unit column. Remains constant per unit. 18. Then variable overheads. How much is that? 12 and 6. Then fixed overhead. Is it what? What is it? Fixed. So basically, convert it into total figure and plug the total column. How much? 48,000. How you got 48,000? 8 into 6,000. Similarly, here it's going to be 36,000. How you got that? 4 into 9,000. Correct? Guys, correct or not? Yes. Always remember, when you are filling it, when you are preparing a flexible budget, variable cost components fill only the per unit column. Fixed cost components fill the total column and keep it. After that, you can do whatever you want. Clear? Because we are going by the cost behavior. That is the right way of doing it. Fine. This sum is easy. Maybe if you're getting a more complicated sum, you should know that this is how you should do it. Next, total cost. Okay, fine. You can have a total cost. Total cost. This can't be totaled right now unless and until we get it. Fine. Then finally write down profit. Profit. This also you can't get it right now unless and until you finish the sales figure and your profit. Now, shall we just go up and fill the figures, guys? Yes. So now tell me, 120 to 6,000 sales value, how much? Yes, this is going to be 7,20,000. So horizontal or vertical? Vertical. So you put 6,000 into and finish it off. Okay, 60 is equal to how much? 3,60,000. Yeah. Yes. Then 30 is equal to how much? 1,80,000. Then 12 is equal to how much? 72,000. Okay, fine. Then 48,000 divided by 6,000. How much is that? 8. Okay, 8. So tell me, what is the total cost? One second. 13, is it? Okay. So tell me, how much is it? 6,60,000 per unit is 110. Per unit is 110. Yes. So what's your profit? 10 rupees per unit, and this is going to be 60,000. Correct, guys? Nothing great. No rocket science here. Clear? Okay, done. Move to the next one. Next. Here, fill this column. Fill this column. Come on. 9,000 into 78. 9,000 into 78 is equal to how much? It's going to be 702,000. Okay. Then 42 is equal to 378,000. Then 1,62,000. Then 54,000. What's the total? 6,30,000. Correct. And then what's going to be your profit? 72,000. Done. Are you all clear with this? And of course, we'll also fill the per unit. So fix it over as per unit. How much is it? 4. What's the total cost? 70. 70. Okay. And it's going to be 8. Fine. Clear with this, guys? Nothing great here. The same thing, same sum. We've just finished it on a per unit and total column basis. Are you clear? Shall we move to the next one? Shall we move to the next one, guys? Yes. Shall we move to the next one? So let's go to the next one. Now this is very difficult. Let me do what? I have an idea now. You guys start filling the template. Please start filling the template, guys. Please start filling the template. Please start filling the template. Make it fast. That's about it. Okay, so let's go to part 2. Yes, now it is neat, no? Credits to Microsoft. Okay, right. So go to part 2. So what's your part 2, guys? Yes, so flexible budget after marketing efforts, right? So write down flexible budget after marketing efforts. Flexible budget after marketing efforts. Flexible budget after marketing efforts. Now first write down. Guys, come on, let's do it together. I'm using a blue ink. You take only a black ink. Okay, I'm using it here because the grids are in black, so that's why. First, sales. Tell me, guys, sales per unit, does it change? Okay, on the top first, how many number of units now? 7,500 units of product A. How about B? 9,500 units of product B. Correct? Now, what's the per unit selling price? Hello, that does not change. 120. And here, how much is it? 78. Are you clear? Next, so you can just put a double line here, just to show that after the sale, we are going to go for cost. First cost is what? Raw material cost. Is there any change in raw material cost? No. Is it a variable or a fixed cost? Variable. So fill the per unit column. 60 and 42. Correct? Next. Yes, next is going to be direct labor. Direct labor. So direct labor, is there any change in direct labor? No. Fixed variable, 30 and 18. Correct. Next. Variable overheads. Is there any change in variable overheads? No. Yes, no. It increases by how much? 10%. So what will you do? Per unit currently how much is it? 12. So it becomes 12 into 110%. How much is that? 13.2. How about product B? 6 rupees into 110%. 6.6. Are you clear? Understand, guys? Understand? Variable cost increase should be increased on a per unit level. Fixed cost increase should only be increased on a total level. Are you clear with this? Sorry? What 5%? This is variable cost, no? Variable cost increases by 10. Fixed cost only increases by how much? For 5%. Yes, so this is what? 10% increase. Next is what? Fixed overhead. You tell me, guys, fixed overhead, what will you do? Per unit or total? Total. Originally, how much is the total fixed overhead? 48,000, but now they are saying that increases by 5%. So tell me, how much is the figure? 48 into 1.05. How much? 50,400. Similarly, here what you have for product B, it was originally 36,000 into 1.05. How much is that? 37,800. Correct? So if you add it up, if you add all these things up, you get something called as a total cost. So from that you can arrive at your profit. So now let's go fill up the figures. Sales value, guys. 7,500 into 120 is equal to how much? Hello, how much? 9 lakhs, huh? Yes, 9 lakhs. Then what? 4,50,000. Then 2,25,000. Then 99,000. Okay, 99,000. Then here 5,400 divided by 7,500. How much is it? This is 6.72. Only to represent I am putting it here. So what is the total cost per unit? Okay, so total is 824,400. Per unit is 109.92. So what's my profit here? 10.08 and 75,600. Are you clear with this? Yes, guys, it's fairly simple, no? One thing that you need to know is any increase in variable cost should be applied on the per unit column. Any increase in fixed cost should be applied on the total column. Are you clear? What students do is they take the per unit and into they will do 1.05. No, fixed cost by nature remains fixed in total, constant in total. Clear with this? Let's go to product B and close it off. Nothing great in the sum. So tell me 9,500 into 78 is equal to how much? 741. Guys, please be a little louder. 741. Then 3,99,000. Then 1,71,000. Then 62,700. Then what's the fixed overhead cost per unit? 37,800 by 95. How much? 3.98. So what's your total cost? 70.58. And what's your total? 670,500. So what's your profit per unit is going to be 7.42, and this is going to be 70,500. Are you clear with this, guys? Yes. Are you all understanding this? Yes. Are you guys understanding it? Guys, ideally in exam, the format has to be like this. You know, when you are putting all this dabba and all, since you can do it in your notebook with the scale, here it's difficult for me even to use this pen. So that's why all these things. So anyways, I just tried up with this Excel. Of course, it's coming well, but it takes time every time. We don't have the luxury of time. So basically in exam, do it properly like this. Put the tabular column, just a few more seconds. You need not do shading and all. And some people do this. On the top column, they do the shading. Just to say presentation. This is not presentation. This is waste of time. Abnormal idle time. Don't do that. This is, please just have it in a proper statement format. The only thing is, you should communicate well to the examiner. That's about it. Clear with this? Guys, clear with this? Fine. With this, we are done with this particular concept. Nothing. From a static budget, all the variable costs, put it in per unit column. All the fixed costs, put it in total column. Any price revision in variable cost, do it only in the per unit column. Any price revision in the fixed cost, do it in the total column. With that, you can prepare a flexible budget for any output level. That's all it is. Clear? Guys, clear? Are you all understanding this? Are you all understanding this? So in this segment, we use the concept of variable and fixed cost. Now, this is why I said it's similar to marginal costing area. Are you clear? This is something that we all know, no? It's not something that we don't know. Just that as a sum, we are doing it together right now. As simple as that. Clear? Guys, clear with this? Shall we move to the next sum? Shall we move to the next concept? Let's move to the next concept. Let's move to the next concept. Now, guys, let me give you this particular area. Let's get into this particular area called as functional budget. Functional budget. Functional budget. I told you this is similar to your cost sheet area. Okay. So I will tell you the background and I will give you the conceptual things and all. And after that, we will do one sum and that's about it. That's about it. So this area, this chapter is only about it. And some theory portion is there that I'll tell you how to prepare on the last day. I told you in employee cost and budgeting, these two chapters alone, we have some theory extra, that theory focus, because generally these two chapters theory comes apart from the first chapter. That goes without saying. First chapter is only theory. Fine. I will tell you how to do that and all in the last class. Last class is day after tomorrow. I will do it. I'll tell you day after tomorrow. So don't worry about that. Fine. For the time being, let's get more into the practical segment, how to solve sums. So that's what we are concerned about right now. Don't worry. I will handle theory. I will tell you how to crack theory. I will also tell you to whatever extent the value addition can be made from my side. I will tell you. Beyond that, even if I keep reading, you will also keep reading along with me. That is something that I don't want. You can read it better than me. I know. I admit it. Okay. Fine. So I will tell you how to prepare for that. I will give you strategies and all. Certain areas, if they are conceptual and it has not been covered before, that I will pick and do it. Don't worry about it. Are you clear? So you need not worry about it. Right now, just focus only on the practical part. I will tell you when to focus and how to focus on the theory part. Now, functional budget. What do you mean by a functional budget? Now, in an organization, there are many functions. Like production is a function, sale is a function, correct? Material purchase is a function, material consumption is a function, correct? When I prepare a budget for each of the functions in my organization, that is called as a functional budget. Are you clear with this? Functions means what's activity, basically activity, correct? Every single activity, every single function, or each and every function. For production is a function. For that, if I prepare a budget, that's called as production budget. Sales is a function. If I prepare a budget for that, it's called as a sales budget, and so on. Are you clear with this? Are you clear with this? Now, what are the different types of functional budget that we will be seeing in our area? Please note it down in the same order. Please note it down in the same order. Order is very important. First, sales budget. Second, production budget. Third, material consumption budget. Consumption, I'm using a short form. Consumption budget. Fourth, material purchase budget. Fifth, wages budget. Sixth, production overhead budget. Seventh, AOH and SOH budget. Eighth, master budget. Yes, done, and it should be in the same sequence. It should be in the same sequence. It should be in the same sequence. I will give you all the logic and all. Please note it down quickly. Please note it down quickly. See, apart from this, you also have two more budget. Apart from that, you also have two more budget called as cash budget and capex, capital expenditure budget. These are a part of your financial management, not a part of our subject. But in the study material, they have just mentioned and leave it there. No sums and all in this area, but they have just mentioned and leave it there. There's something called as cash budget. It's nothing but a cash flow statement, which we'll be seeing. You anyways will be seeing it in your accounts. But yes, it's also there in your FM, working capital management. Yes, in that you have something called as a cash budget. And of course, there is another thing called as capex budget. That's basically your capital budgeting chapter. There you have a lot of capturing your present value of cash inflows and all, NPV, IRR and all those things. Okay, so in that place, in that area, you'll be having it. Anyways, forget that. In our subject for costing, only these are the costing related budget. Apart from that, you should also know that there are other budgets that are not a part of costing subject. Now, sir, all these budget, every activity you have given one budget, I agree. But why should it be in the same sequence? Why should it be in the same sequence? Understand, it's very important. It's very important. Now, always remember, when I am budgeting, let's say you are the company's managing director. A fresh year is starting right in front of you. You are in the month of March. Okay, for us, year is 1/4 to 31/3 only, correct? In India, we follow that April to March, right? So, for the next forthcoming year, April, from 1st April onwards, one new year is going to start. So, what I'm going to do, before that, you are the managing director. Put yourself in the shoes of managing director. Assume you are running a business, your family business, you are only running. Fine. Now, what will you do? Now, for the next year, I need to plan it accordingly. Correct? You are doing a production. You are in a production setup. You are manufacturing something. Let's say you are a garment manufacturer, something you are manufacturing. Fine. Now, how will you start preparing the budget? How will you said so many budgets, sir. But which budget? Can I do any budget that I want beginning itself? No. First, if you are the owner of a company, what you will do is, you will first call the marketing team. You will call the marketing team. Ask them, in the forthcoming year, how much demand you are predicting? How is the market? How many units you are expecting to sell? Obviously, he can't predict to the last unit. He will say, sir, overall, looking at the market trend and all, and looking at the overall seasonal business nature and all, generally, let's say I will sell 1 lakh units or whatever it is. The first step begins with a sales budget. That's why sales budget is the first step. Why? Because only based on that, what I do. Let's take an example. Let's say the marketing manager comes and says, sir, next period, the sales will be 1 lakh unit. This is what we are expecting, 1 lakh unit. Now, what I am planning to do is, in your financial management, you will study. You will decide how much of stock to keep. That's called as working capital management. In that one area is called as, there is a area called as working capital management. A very interesting area. There you will see how much to stock, how many days of sales or consumption to stock or not. Basically, now let's assume based on that, totally, now I got an input from my marketing team that next year I'm going to sell how much? 1 lakh units. Now, let's say I want to keep a closing FG of, let us say, 20,000 units. 20,000 units. I want to keep an FG of 20,000 units, closing FG, correct? So, basically, I should produce how much? 1,20,000, correct? But wait, I already have an opening FG of 10,000. I already have an opening FG of 10,000, which means current year, how much I need to produce? 1,10,000 units. Now, you tell me, I started with the sales budget, and only if I know how many units I'm going to sell, I can arrive at the production budget, correct? Now only I can go and tell my production manager, look, I will not ask him, I will tell him, this year I want you to produce 1,10,000 units, that's all. Clear? How did I get this base from? First, it has to originate from my sales team or my marketing team. Are you clear with this? Are you clear with this? So first I ask this fellow, he will tell me what is the sale. From that, add a closing stock minus opening stock. You will get the total production requirement for the current year. And always remember, production budget is the base for all other budget. It is the base for all other budget. Now, because all your costs will be incurred only with respect to production, correct or not? We saw cost sheet. All the components of cost are tied to production, correct or not? Let's say, for example, every unit of output requires, 1 unit of output requires 2 kgs of raw material. Can you tell me what is the total raw material I will be consuming in the next year? 2,20,000. Correct or not? 2,20,000 kgs I will be consuming. This is called as raw material consumption budget. Clear? So this is how I moved to the next budget. From sales I went to production. From production I went to material consumption. Clear? Clear. Now they are saying, now you also need to maintain a closing raw material stock. A closing raw material stock, let's say an example of 30,000 kgs, and you need to maintain, you already have an opening raw material stock, let us say of, let's say 50,000 kgs. 50,000 kgs. So tell me, in the current year, how much should I purchase? How much should I purchase? I should purchase how much? For 2,20,000 I am going to consume, plus 30,000 I should store. So 2,50,000. But wait, already I have 50,000 in my godown, which means the current period I have to purchase a raw material to the extent of 2 lakh kgs, correct? So from this I arrived at my, from material consumption I arrived at my material purchase. Are you clear? So this order needs to be maintained. And parallelly, they are saying the current year how many units I am going to produce? 1,10,000. They are saying every unit requires 5 labor hours. So what will you do? 1,10,000 into 5. So 5,50,000 labor hours you need. Accordingly, you will tell the HR department. Correct or not? Correct or not? Similarly, your production overheads. Why is this required? Now you will arrive at your absorption rate and all. Remember, I told you what rate, absorption rate you will use. Budget or actuals? Budget or actuals? Budget. Where do you get that from? Here only. Are you clear? Are you clear with this? Similarly for AOH and all. So all these budgets you will prepare. And finally, there is something called as master budget. What do you mean by master budget? Very simple. This is nothing but a budgeted P&L account where I will be having the component of cost on the debit side and I will have the sales on the credit side, and each of the components how I got will be a working note. So all the previous budgets will be a working note for a master budget. Are you clear with this? So using the budgeted data, if I prepare my P&L, it's called as a master budget, and in my master budget, the working notes or my notes to accounts, my notes will be every single individual functional budget. Are you clear with this? And that's about this area. Are you clear with this, guys? Are you clear with this? So basically in exam, how they will ask this question is, they will first tell you how many units to be sold. Based on it, you will arrive at the units to be purchased. From there, you should arrive at your raw material consumption. From that, all these things you will go. So from your sales, you will go to raw material production. From that, you will go to raw material consumption. From sales, you go to production. Production to raw material consumption to raw material purchase, and so on. Similarly, from production directly, you will get other limbs and all. Your wages budget, manpower budget and all. Are you clear with this? Now, sir, what is the big deal in this area? It's simple only, no? If you get a link, you can do it. Correct. It is simple only, no doubt. But at times, what happened? Finding out the units sold. Always remember in this chapter, what is the first base? You need to find out sale units. That sale units will not be given directly. You need to use some brainstorming to find out the units sold. If you get that unit sold, the entire question answer, you will get it. But if you don't get that unit sold, you will not get the entire answer. Not even one step you can proceed. That is the catch that is there in this particular area. Are you clear with this? Are you clear with this? So what you should find out? Units sold. So in case there is a multi-product and all, there can be multi-product, no? Product wise, you should know the units sold. That should be the base. From that, add closing FG minus opening FG, you will get your units produced. With that units produced, you can find out the raw material consumption, and life becomes simple from there. But the first step is what? Finding out the units sold, and that is where the catch is kept. Are you clear with this? Are you clear with this? So what they will do is, the company deals in 3 different types of output, FG, and 4 different types of raw material. So product wise, you need to maintain and prepare all the budgets. Are you clear with this, guys? Now, shall we just go to the sums? Now, this is nothing but cost sheet. I told you the flow of cost, flow of cost. First day I told you. You remember flow of cost? How cost sheet is arrived and all. I showed 3 places in a factory: stores, factory, shop, and your warehouse and all. I told you how cost moves. The same thing is only with something that we are doing right now. Yes, guys, are you all clear with this? This is something that we are going to do right now. A very interesting area, and I have an excellent sum. An excellent sum. This sum was there in your study material, not my invention. I am not picking it from elsewhere, foreign author and all. I've just picked it from your study material. It was also tested once for 10 marks. Very good sum. Very, very good sum. Very good sum. In my opinion, again, I'm telling you, if I were in the position of an examiner, in this area, if I want to test, I will touch this sum. Okay. So, this much amount of thing I'm telling you right now, I don't want to break the suspense. Let us see how many people are getting it right. It's a very good question. Very good question. No rocket science and all. If you just observe a bit, you will get it. That's all. Let's get started. Let's get started. So, here we go. Question number 2 on page number 80. Question number 2 on page number 80. Okay, so let me read this question. It's a 10-mark question. It's a 10-mark question, past exam. Mark it as important. This sum, definitely refer to the sum the day before your exam. Please do that. Please do that. Okay. Now, somehow I feel this sum might come. I don't know. I told you one more sum like that, no? What sum I told? Correct. Very good. Very good. Very good. Very good. Yes, you are right. Shoe sum. I told you that Kaju Katli example. I told you, no, that multi-product cost sheet. Similarly, this area also I feel somehow something makes me feel that because it's been a while since they tested this. So I think this might come. It might not come also, but I'm just telling you a gut feel. That's all. Don't ask me if it doesn't come. Please don't ask me. There you only told it will come and all. I'm no God to predict all this. Just telling you it's a gut feel. That's all. At times it can come correct. At times it might not. But that this whatever trend I told you, that's not gut feel. That is worked out. That is worked out past trend analysis. Some ways prediction and all, no one can do. Okay, I'm just giving you my opinion. I feel it might come. Okay, right. Fine. A company is engaged in manufacture of specialized sub-assemblies required for certain electronic equipments. The company envisages that in the forthcoming month, December 20x1, the sales will take a pattern in the ratio of 3:4:2, respectively, of sub-assemblies ABC, MCB, and DP. The following is the schedule of components required for manufacture. So basically, what is the company dealing in? They are dealing in manufacture of sub-assembly. Their output's name is ACB, MCB, and DP. Selling price for each of the components is 520, 500, 350. What are the components required? You can just remove this line. It needs 4 types of raw material. Baseboard IC08, IC12, and IC26. What do you mean by an IC? Integrated circuit. Have you seen this in your system, computer, that motherboard is there, no? It will be like green color base on which you will have some silicon chips and all. In childhood, I don't know whether you did. I used to look at like this and it will be like buildings and all. Yes, it will be like buildings and all. So that is called as integrated circuits. Fine. So what they are saying, for every, so this is one type of motherboard. This is another type of motherboard. This is another type of motherboard. For each motherboard, you need a baseboard, you know. That is a green color board. On top of it, this is one type of building. This is another type of building block. This is another type of building block. Correct? That silicon chips are all scattered. Okay. Are you clear with this? Now, are you able to understand how it looks like? How it looks like? Yes. Are you able to understand? Fine. They are saying for them to manufacture one ACB, they require one baseboard, 8 IC08 components, 4 IC12 components, and 2 IC26 components. Similarly, for MCB and DP, they have given the quantity of raw materials required. Okay, clear? And here they have given the price per raw material. Baseboard cost rupees 60, IC08 cost rupees 20. Meaning what? For ACB it will be 20 into 8. For MCB it will be 20 into 2. For DP it will be 20 into 2. Correct? Are you understanding, guys? Similarly, IC12 costs 12 rupees per whatever is the piece. And IC26 costs 8 rupees per piece of IC26. Are you clear? They have given you that they have 3 different types of FG. And each of the type of FG requires 4 types of raw material. Are you clear with this? Now, the direct labor time and variable overheads required for each of the assemblies. Assemblies means what? FG. They have given each and every FG requires 2 types of labor, grade A, grade B. Let's say skilled and unskilled. Okay. So it requires 8 hours of grade A, 16 hours of grade B. Similarly, they have given for the other 2 products. They have said every hour of grade A is paid at the rate of 5 rupees. Every hour of grade B is paid at the rate of 4 rupees. Are you clear? So this is what? These columns are all hours. And they have given the rate. Fine. If you multiply respectively, you will get the labor cost per unit. Are you clear with this? Are you clear with this? Apart from that, they have directly given the variable overheads in rupees. You need not multiply and all. They themselves have directly given what is the variable overhead cost per unit of each of the 3 different types of FG. Are you clear with this? Now, the laborers work 8 hours a day, 25 days a month. Okay. The opening stocks of sub-assemblies. Sub-assemblies means what? FG. And the components, meaning what? Raw material, are given below. Opening stock of FG. Each of the FG, what is the opening stock they have given? Closing stock of, opening stock of raw material. This also they have given. Are you clear with this? Fixed overheads amount to some rupees they have given. Guys, this is FG, this is RM. Okay. Fixed overheads they have given per month, and the monthly profit target is 12 lakh rupees. The company is eager for a reduction of closing inventories of sub-assemblies and components by 10%. Meaning what? Your closing stock is 90% of your opening stock. Are you clear with this? What have they given here? Look at this. The company is eager for a reduction of closing inventories of sub-assemblies and components by 10% of quantities as compared to opening stock. Clear? Meaning what? Opening stock they have given. Closing stock is 90% of opening stock. Ideally, closing stock is also given. Clear? For what? Both FG and RM. Are you clear with this? Prepare sales budget, production budget, component usage, that is material consumption, material purchase, and manpower budget. This is what is given in the question. Very simple. Very simple. I don't want you to answer any of these four. That I will take care. Just answer me. How much is the sales budget? Units I want. How many units of ACB, MCB, and DP is the company planning to sell? If you get that right, the entire sum you will get it right. Come on, guys. I'll give you 2 minutes time. Figure out. Figure out. Figure out. Use all the knowledge you've got and figure out. Whatever we have learned, you figure out. Whatever we have learned, you figure out. First, is the sale units given directly in the question? How are we going to do it? Come on. Try it. Try it. You will get it. You will get it. I'm sure you will get it. Whoever gets it, excellent. Really good. Really good. Whoever gets it, excellent. Has anyone got the answer? Not it? Okay, okay. Do it, guys. I'll be very happy if someone gives me an answer. Of course, right answer. Do it. Come on, do it. Attempt. Don't give up. Try something, you will get it. Just see how you can crack. Whatever data is given, how is it relevant for me to find out? Try doing it. It's not a single product, it's a multi-product. Do it, guys. Come on. Very good, guys. Very good. Others, don't worry. I'll tell you what to do. Excellent line of thinking. There's only one way to do this sum. No other way to do this sum. All gates are blocked. There is only one way to do this sum. Excellent line of thinking. Excellent line of thinking. I appreciate that. Excellent line of thinking. Very good. Now, first, in this question, what is the problem? Units are not given. Sales units, if you find this sum is very simple. Finding the sales unit is what is the biggest challenge in this question. Now, what have they given with respect to sales? I only have what? Sales mix. I don't have anything else, no. If you tell me the total units, then I can say, okay, sales mix and all. Now, recall your marginal costing concept. Recall your marginal costing concept. Wait. Now, in this question, I have total fixed cost is given. Total profit is given. Fixed cost plus profit gives me what? Total contribution. Correct. I have my total contribution with me. Correct. Now, product wise, I have selling price. Product wise, I have all the variable cost components. Product wise, I have the contribution per unit. Correct. And I also have the sales mix. So I can find out the weighted contribution per unit. Correct. Total contribution divided by weighted contribution per unit gives me the number of units in total that I need to segregate in the ratio of 3:4:2. I get product wise number of units. Are you clear with this? Is that a rocket science? Didn't we do this already? You know, if I'm telling you, are you able to understand? It means that you already know the concept. It requires presence of mind. The moment you look at it, had I been an examiner, the first thing I would have done is, I would have put fixed overheads on the top and profit on the bottom. In a single line, if someone gives fixed cost and profit, obviously you will be tempted to add and you will get the answer right. In fact, to make it more challenging, if these two are given in two separate places, it would have been more challenging. But I thought at least you could figure this out. No problem. Are you understanding what we just did? Fixed cost plus profit is equal to total contribution. Product wise, you have contribution per unit. Find the contribution per unit, and you have the sales mix also you have. So you just multiply that, you will get the weighted contribution per unit. Total contribution divided by weighted contribution per unit, you get the total units. That total units is what? BMW. Total units, car plus bike plus whatever put together. Now segregated once again in the ratio of whatever is given in the question. You will 3:4:2. You will get ACB, MCB, and DP product wise units. And from there, the sum is very easy. Are you clear with this? Guys, are you clear with this? Excellent sum. Excellent sum. Brilliant sum. If you got it on your own, hats off. Hats off. Really good. Don't take it to your head. Please don't take it to your head. Yes, you have got it. Yes, that's all. Leave it there. And if you have not got it, don't take it to your heart. Just leave it there. Stay balanced always. Just keep it as such. You have learned something. That's all. If you didn't know, you have learned something. As simple as that. Clear with this, guys? Clear with this? Very good. Very good. So let's get started with this particular question. Let's get started. These kind of questions, I'm telling you why the examiner will be tempted. Single question, they are testing you both on marginal costing concept as well as on your functional budget. Number one, not even flexible, functional budget, which is cost sheet related. So look at this, functional budget with marginal costing, that too using sales mix. So look at the beauty of this question, how they can actually frame it. Whoever framed this question, brilliantly framed. And practically you can have this kind of a scenario, no? And this is there in your study material. I'm just picked from study material, past exam question. 3-4 attempts back, maybe again it may do around here. It might do around here. Many students got this wrong. Examiner's comments, I saw many students got this wrong. If you get the first step right, only the rest of the sum makes sense. If you got this wrong, you will be working on a wrong figure. So obviously they won't give you marks. Are you clear with the approach, the solution? That's why I said in this question, I wanted the answer because I wanted to know if you are getting the entire approach as well as the computation right. Because broadly, if you get the approach right, generally that itself will tell you the conceptual understanding. So I just wanted to know how many of you are able to actually relate that. It's not that you guys are, you guys don't have the knowledge. That's why I'm telling you these kind of problems, apart from the knowledge, it requires presence of mind. Sir, teach me presence of mind. I'm sorry, I can't teach it. Presence of mind comes only by practice. It comes only by practice. I can tell you the rules of Sudoku game. Immediately, can you solve a hard question? Obviously not. It comes only by practice. It comes only by practice. That's why what I'm doing here is I'm giving you some sums for practice. Do that. Do that with whatever concept you are learning in the class. This will be sufficient. For an exemption, this is definitely be sufficient. In fact, more than that itself, you can score. With the knowledge that we've been spending for the last 8 days, including today, whatever it is, definitely I'm sure that it will be sufficient for your exam to score really well. Really well. Fine. So let's get started with this particular question. Let's get started with this particular question. Write down step 1. This is what? Question number 2 on page number 80, right? 80. Yes. The 10-mark exam question. Watch out for this. Mark it as important. Please watch out for this. Okay. So this is question number 2 on page number 80. Please write down step 1. Step 1. Contribution per unit. Contribution per unit. This is the first step. You need to find out the contribution per unit. Okay. So write down particulars in 3 columns, ACB, MCB and DP. Write down particulars and 3 columns. ACB, MCB and DP. ACB, MCB and DP. Fine. First, selling price. How much? Guys, I want you guys to pick it up and tell me. 520, 500 and 350. Right. Put a double dash here. Next. Write down VC, that is variable cost. Under that first baseboard. Can anyone tell me how much? 16 to 1. Correct or not? So 60. Put it here. 60 and 60. Next, what will you write? IC08. Integrated circuit 08. How much? How much? How much? So, yes, it's nothing but 20 into 8, 20 into 2, 20 into 2. So, it's 160, 40 and 40, yeah? Yes, it's 160, 40 and 40. Are you clear with this? Next. I see 1, 2, okay, I see 1, 2. How much? 48, 48, 120 and 48. Next. I see 26. How much? 16, 48 and 64. Correct? So, okay, maybe if you want, you can put a bracket on these two sides. These are all direct materials. Correct? Next, what do you have? Direct labor. What are they? Grade A labor. How much? 40, 30 and 20. Correct? 40, 30 and 20. Guys, are you all understanding how we got 40, 30, 20? Yes. Next, grade B labor. How much? 64, 48 and 32. Fine. So maybe if you want, you can put a bracket here and call it as direct wages. This is only for your understanding, just so that you're not missing out on anything. Then what is it? VOH. It's given directly in the question. 36, 24 and 24. Correct? It's given in the question, no? Yes. So what's your total variable cost? Total your variable cost alone. Don't tell total your selling price also. It's going to be 424, 370 and 288. Correct? Guys, do your own calculation. Please do your own calculation. Next, tell me what's your CPU? Selling price minus variable cost. How much? So 520 minus 424 gives you 96. Then 500 minus 370 gives you 130. Then your 300 minus 288 gives you 62. Are you clear with this? Product wise, you've got contribution per unit. Correct, guys? Hello? Yes, you've got product wise contribution per unit. Yes. Now what you do? Are we done? No. Just come down and write weighted contribution per unit. It's also called as composite contribution per unit. So what ratio have they given? 3:4:2. Put it down. 3:4:2. So how will you compute? This is nothing but, so 3 plus 4 is how much? 7 plus 2 is 9. Okay. So 3 plus 4 plus 2 is 9. Okay. So write down 96 into 3 by 9 plus 130 into 4 by 9 plus 62 into 2 by 9. Why are we doing this? Do you guys remember sales mix and all? I told you how to do that. Correct? One representative unit has 3/9 of product A, 4/9 of product B and 2/9 of product C inside it. That's why we are merging everything together. So tell me, how much is this? How much is this? Okay, so 32, 57.78, 13.78. So if you add these three, you get to how much? Rupees 103.5555. Okay, maybe you can just retain the decimals in your calculator that you need. Put an M plus and retain it. Before you put that M plus, you should click MRC twice. Yes, you know that, no? Because if it MRC means memory recall, if you click it twice, it clears your memory, not your memory, calculator memory. Yes, that if you do it, then you can add your M plus any number of times and you can get it. Clear, fine. Then now go to step 2. Guys, are you all understanding what we're doing here? Yes, write down step 2. What's your step 2? Write down calculation of units to be sold to earn a profit of rupees 12 lakhs. That's what they have given, no? Profit of rupees 12 lakhs. Yes, guys, look how marginal costing is used here. Blending is done. Marginal costing inside a functional budget. Beautiful sum. Yes. Now, first write down contribution. Contribution is equal to what plus what? Fixed cost plus profit. Correct? Fixed cost plus profit. You guys know this, no? Sales minus variable cost is equal to contribution minus fixed cost is equal to profit. If you are coming from down, I will say fixed cost plus profit. Fixed cost plus profit gives you contribution. Correct? So now in this case, what's your fixed cost? 757,200. Perfect. And what's your profit? It's going to be 12 lakhs, right? Required to earn a profit of 12 lakhs. So tell me, what is the required or desired contribution? Rupees 19,57,200. Yes? Perfect. Are you all clear with this? Are you all clear with this? Guys, are you all clear with this? So now, this is the step. This is the step. Sales in units is nothing but contribution divided by weighted contribution per unit. Correct or not? Correct or not? Correct or not? Contribution per unit into units is only going to be my contribution. So contribution divided by contribution per unit gives me units. In this case, weighted contribution per unit, because more than one product. So tell me, how much by how much? Rupees 19,57,200 divided by rupees 103.5555. Retain the decimals in your calculator. So tell me, how many units in total? 18,900 units to be sold. 18,900 units of what? ACB, MCB, DP. All three put together. So now what I need to do, this 18,900, I again need to apportion in the ratio of 3:4:2. So do it. ACB, MCB and DP. How will you do it? So 18,900 divided by 9 is equal to, you will get something into 3 is equal to write down, 4 is equal to write down, 2 is equal to write down. How much? 6,300 units, 8,400 units, and then 4,200 units. Are you all clear with this? Guys, are you all clear with this? Is everyone understanding? From here, life is simple. Let's anyways quickly finish it off. Not a problem. We will do it. Are you clear with this? Are you all clear with this? It's simple, no, guys? Yes, this is something that you guys already knew. Just that it needs to be put in a particular format. You just need to have the line of thinking. And if you get it, that's all. That's all. You're done with the question. Are you clear? So let's quickly finish off the balance. Go to step 3. Let's prepare a sales budget, because they have asked you to prepare a sales budget in units and value. So multiply the units with the selling price per unit, you'll get your value. So write down, what is the next thing? Step 3. Step 3. Step 3 is going to be a what? Sales budget. Sales budget. Now have products, units, selling price and sales in rupees. So tell me, products. What are the products that you've got? How many products? 4, right? 4 products, correct? Only 3. 4 are raw material. Okay. Product you have only 3. Yes. So what and what? ACB, MCB and DP. Just now we found out. How much? 6,300, 8,400, 4,200, and total is how much? You should not total this, no. ACB plus a monkey, donkey, how will you add together? Correct. You will be tempted to add in the exam. That's why I also misled you. You also fell for it. Next, selling price. How much? 520, 500, 350. So tell me, what's the sales value? 32,76,000. Then 42 lakhs. Then 14,70,000. Can I add these 3? No. These 3 are in rupees. These 3 can be added. Yes. 89,46,000 rupees is the total sales value. Value can be added, no, madam. Yes. Are you clear with this? Are you clear with this? Guys, are you all clear with this? So the sales budget is through. Are you clear with this? Guys, are you all understanding? Are you all understanding this? Yes. Shall we move to the next one? What is the next one? They have asked you for production budget. Shall we move to the next step? Have you all completed till this? Go to step number 4, production budget. Step 4, production budget. Production budget. Write down particulars in 3 columns: ABC, MCB and DP. Particulars and 3 columns: ACB, MCB, DP. Fine. So now tell me guys, first sales, how many units? Hello, how I got this from step 3? 6,300, 8,400, 4,200. Then to this I should add closing stock minus opening stock. Opening stock is given in the question. How much? It is given as 800, 1,200, 2,800. Closing stock is given in the question, not directly, but they are saying that closing stock should be 10% less than what is maintained as opening stock. Or basically, can I say, it is 90% of opening stock, correct? 0.9 into 800 is equal to write down, 1,200 is equal to write down, 2,800 is equal to write down. How much? 720, 1080, 2520. Perfect. This is nothing but 90% of opening stock. Are you clear? You should definitely write it, all these things in the question. In the answer, you should write it. Why? Because only then you will know how, only then you will communicate to the examiner how you got these figures. Correct? Otherwise, examiner will think that you copied all these figures from the next person. But most of the time, when you do that, the next person would have only done it wrong. So you would have also copied that. But I'm pass I don't. Okay, right. So this gets you your total production, correct? So if you adjust for this, you get your total production. How much? 6220, 8280 and 3920. Are you all clear with this? Are you all clear with this, guys? Yes. Now the next one, step 5 is what? Component usage budget, that is material consumption budget. Correct, guys? Shall we do this? Hello? Shall we do it? Yes. So I'll tell you this, we can do it in a different template. If you want, you can also do it just like how you wish. So write down component usage budget. Component usage budget, particulars and 4 columns. I'll tell you 4 columns. Please write down on the top ACB, MCB, DP and total. I know that ACB, MCP and DP are all FG only. Fine. But here we are doing it like this. So we will add it up. If we do the sum, you will know, you will understand what I'm trying to. If you want to do it also, you can put 4 things here. Baseboard, IC, whatever, all the 3 ICs, you can also do it like this. I'm doing it this way. Fine. So first what you do is write down production. How many units of ACB, MCB and DP are produced? 6220, 8280, 3920. Total? No total. You cannot add these 3. Okay. Put a double dash here. Now, first, what is your baseboard? First component is your baseboard, correct? BB. You need how many components? 1 component each. So tell me how many baseboards you need for ACB? 6220. Here 8280. Here 3920. Can I total this? This I can total. Tell me how much? It is 18,420. Guys, are you understanding why we are totaling this? I require 6220 baseboards for ACB, 8280 baseboards for MCB and 3920 baseboards for DP. So now I can add the total baseboards required. This you can't add. This is production, but this you can add. Clear with this? Next. Next, IC08. IC08. How much do you need? They are saying 8 units, 2 units and 2 units respectively. So accordingly, just multiply 8 into 6220, 2 into 8280 and 2 into 3920. How much? 49,760, then 16,560, then 7,840. Total it up. How much is it? 74,160 IC08 you need in total. Are you clear? Hey, are you guys understanding what we are doing here? Yes? Last row, Abba, you are understanding? Abba, understanding? Are you able to follow? You are also able to follow? Yes, you guys are able to follow this, no? Yes? She is able to follow? You are able to understand this? Yeah? Fine. Next. IC12. How much? They said 4 units, 10 units and 4 units. So tell me how much, 6220 into 4, 8280 into 10 and 3920 into 4. How much? 24,880, 82,800, 15,680. So totally how much is it? 123,360. Correct? Guys, is everyone getting this? Is everyone getting this? Is everyone getting this? Please do your own calculation. Next, what is the next one? IC26. IC26, 2 units, 6 units and 8 units. So how much? 12,440, 49,680, 31,360, 93,480. So component wise you got what is the total requirement. Are you getting it? Guys, are you all understanding this? Let's go to the next one. Component purchases budget. Shall we, guys? Write down. Component purchases budget. It is going to be step number 6. Okay. So component usage budget, that is also done. So let's go to component purchases budget. Component purchases budget. Component purchases budget. So write down particulars and 4 columns. The 4 columns are for the raw materials only. Guys, come on, write down. Let's finish this quickly. Particulars and 4 columns. Baseboard, IC08, IC12, IC26. First, what will you write down? First, usage or consumption. How much? Just to pick it from the previous step. 18,420, 74,160, 123,360 and 93,480. Correct? To this you will add a closing stock minus opening stock. First in this question, opening stock is given. Yes, how much? 1,600, 1,200, 6,000 and 4,000, right? Now, what's your closing stock? They've given you it's 90% of opening stock, or they've given it as 10% less than your closing stock. So 0.9 into 1,600 is equal to 1,200 is equal to 6,000 is equal to 4,000 is equal to how much? Huh? Yes, it's 1,440, then 1,080, then 5,400, then 3,600. Correct? Fine. So if you net this off, you get your purchase in quantity. Purchase in quantity. How much? 18,260 units. 18,260. Sounded a point in, I have corrected. Okay. Then 74,040. Then 122,760. Then 93,080. Okay. Fine. Then write down purchase price. Purchase price will arrive at the amount also. Purchase price per unit of BB, how much is it? It's given no 60, 20, 12 and 8. 12 and 8. Yes. So finally, this is going to be your purchase price. What's your purchase price? 10 lakh 90. Sorry, that's not purchase price. I'm sorry. It's purchase value. 10,95,600 rupees. Correct. Then 14,80,800 rupees. Then 14,73,120. Then 7,44,600. Sorry. 7,44,640. 7,44,640. Are you clear with this? Yes. Then they have also asked you for something. No. They have asked you for manpower budget. No. We should do that also. Can you do that as a homework? So line wise, you will have grade A, grade B. So for every output wise, you will just need to multiply with the respective columns and you will get the answer. In fact, if I'm not wrong, this This answer will be there in the questions that I will be sharing you. Ideally, it should be there. Let us see. But can you do that as a homework? The manpower budget, units multiplied by the respective hours. That's all. Or you want me to do it? You will do it, Online, guys. How about you all? Does anyone want me to do it now, or you guys can do it? You guys can do it. No, it's fairly simple. The main step is only here. Okay, right. Fine. 1 minute, guys. 1 minute. Let me give this completion. Let's finish this chapter properly. Fine. That's all. No sums and all here. I'm just taking if covered everything. Okay, just a minute. So basically, all these things, types of budgeting are all is okay. Fine. So we finished this ratios. This is also done. Illustration done. Then these are all some theory areas that I told you. I will share it later. Then we did one question on flexible budget. Podum for the day, sir. Okay, fine, Madhumita. Taken. Yes, we are done. Let me just give a proper completion. That's all. I didn't tell you that I'm going with the next chapter. Okay, don't worry about it. I'm just finishing it up. Okay, then sequence and all I've told you. Yes, this is done. And theories only is there. Okay, done. And the difference between flexible budget and fixed and flexible, I told you fixed is nothing but the static budget. From that budget only you will derive all the output and you will derive all the inputs and then you will use it for any volume level. Correct or not? Yes, variable cost remains constant per unit, fixed cost remains constant in total. Semi-variable cost segregate into variable and fixed using the formula delta cost by delta units. So that's what is given. If you just read it once, you will understand. And then this problem 2 was about your flexible budget, your functional budget with marginal costing. I told you, watch out for this. So yes, with this, we are done with this particular chapter. Cost accounting systems. What is this chapter? Actually, this chapter is also called as cost ledger accounting. This is also called as cost ledger accounting. So what is this chapter all about? And I told you, based on the past exam trends, this chapter is regularly being tested as a 5-mark area throughout the paper, somewhere or the other. Between this question 2 to question 5, generally we are inserting one 5-mark from the last 3 attempts. It has been regularly tested. So as per the trend, this chapter gets tested for 5 marks. At times it is also getting tested for 10 marks. That is unpredictable. But yes, generally for the last 3 attempts, it's been tested for 5 marks each. Now, what is this chapter all about? Now, the first chapter that we saw was cost sheet, right? The same cost sheet chapter, cost sheet was in a statement format. The same cost sheet chapter, if you draw ledgers for each items of cost sheet, it is called as cost accounting system. So basically, only in this chapter we will get introduced to formal system of cost accounting. So we will draw up ledgers. You will draw up ledgers and draw the entire and each and every item of your cost sheet. You will place it in a ledger format, and finally you will prepare your costing P&L, that's for your financials. Are you clear with this? So this is the overall objective of this particular chapter. Okay guys, are you all clear with this? Simple, same as cost sheet, but blend it with your accounting knowledge of debit and credit. So the prerequisite for this chapter is cost sheet and basic debit and credit of accounts. That's all you need to know. If you know this, automatically this chapter is sorted. Okay, clear? 5 marks, sure shot if it is coming. Let us finish it off in the classroom itself. That's about it. And of course, I'll give you a few sums. You just practice that and we are done with this chapter. Clear, guys? Clear? The best part of this chapter is that you already know it fully. Just that I will give you some rules and all. I'll tell you the rules of the game. You need to play along with the rules of the game. That's all. With the debit and credit cost sheet knowledge that you have. Prerequisite is only that. Debit, credit and cost sheet. If you blend the two, you get this chapter called as cost accounting systems. Are you clear with this? Now, I will give you an introduction. That's pretty much important. Now, let's assume that your dad is a salaried person. Okay? Your dad is a salaried person. Now, you tell me, does your dad maintain books of accounts, prepare P&L and balance sheet for his personal self? Does he do that every day? Or every year? No. Why does your dad not do it? Basically because it is not required under the law. Correct or not? Correct or not? Have you seen your parents prepare balance sheet, P&L, submitting it to some authority and all? Absolutely not. Why? Because it's not a legal requirement. Correct? Then why do companies and business entities alone do that? Because it's a legal requirement. So first of all, why are we maintaining books of accounts? Books of accounts maintenance has its own advantages, but above all that, it is a legal requirement. So only because it's a legal requirement, we all are maintaining books of accounts. Now, sir, legal requirement under what law? Under what law? I'm just giving you a background. Fine. So now you have something called as Companies Act. You have something called as Companies Act. Yes. Yes, you guys know. It's a part of your syllabus, right? Paper 2, law, right? So Companies Act is something called as Companies Act is there. That you know, no? Yeah, that is enough. Okay. Now, in that, if you see, I'm not getting too technical into it. I'm just giving you a bird's eye view. There is a section called as Section 2, Clause 13 that talks about maintenance of books of accounts. Maintenance of books of accounts. It says every company should maintain books of accounts with respect to its income and expenditure. This is basically your P&L. Then number 2, they should maintain records with respect to receipts and payments. This is nothing but your cash flow statement or your cash book. Then they say with respect to assets and liabilities, this is nothing but your balance sheet. And it doesn't stop there. It doesn't stop there. It goes on to say that if a company is engaged in manufacturing or mining or production related sector, if a company is operating in manufacturing or mining or production sector, they need to maintain detailed records with respect to utilization of material, labor, overheads, etc. These are the wordings given in the act. They are saying if a company is into manufacturing, mining or production sector, they need to maintain detailed sets of record with respect to utilization of material, labor, overheads. That is utilization of cost components. Now, I've already told you in your financial accounts, from your raw material moves from stores area to factory shop. Do you pass an entry? No, it happens within a factory. Concept of mutuality is not there. Your financial accounts, you will record a transaction only if a company deals with an outsider or a third party. Whereas inside utilization entry is never getting passed in your financial accounts. That is an exclusive scope of cost accounts. Are you clear? Basically, your company law is asking you to prepare. Your company law is asking you to prepare cost records with respect to manufacturing sector. Are you clear with this? So basically, your cost accounting, reason why you have something called as cost accounting stems from this particular section of the company law. It says pass entries or maintain records with respect to utilization of expenses. Are you clear? Utilization of expenses is taken care of only under cost accounting. Guys, are you all clear with this? Are you all clear with this? So basically, this is the reason why we have something called as cost accounts, cost accounting. Are you clear with this? Yes? Are you all clear with this? Now, should all companies maintain cost records? No. In your Companies Act, it clearly mentions only certain classes of companies that are notified by the central government. If it exceeds a certain threshold limit, let's say 500 crores of turnover, something like that. So turnover threshold, capital threshold and all, you might have seen some threshold limits are given. If it is a big manufacturing company that satisfies the requirement as mentioned by the central government, these companies need to separately maintain one complete cost records. They need to have one complete cost records in place. Are you clear with this? And you all know that financial accounts gets audited by whom? By whom? By auditor. What auditor? Who? What is the qualification? What is the qualification? Chartered accountant. Similarly, this is covered under section 139, just by the way. Now, similarly, your cost accounts gets audited by a cost and management accountant. This is covered under section 148 of the Companies Act. Fine, the section and all is not relevant, but I am just giving you a proper backdrop. That's all. Are you clear with this? For our subject, it's not requirement, but you should know when someone is asking you, why are you learning this subject? Apart from the advantages that this subject has, First thing, is it a legal requirement? Yes, it is a legal requirement. So basically, your financial accounts are maintained as per accounting standards, correct or not? Who prescribes accounting standards? There is a body called as NFRA. In consultation with your Institute of Chartered Accountants of India, they have some accounting standards that needs to be followed, correct or not? Similarly, if you see that there is something called as cost accounting standards that need to be maintained, that need to be followed when you are preparing your cost accounts. Now, this cost accounting standards are prescribed by the Institute of Cost and Management Accountants of India, or Cost and Works Accountants of India. They have recently changed the name to Institute of Cost and Management Accountants of India. Clear with this? Now, they have prescribed from some 24 standards. These standard numbers and all are not there for your syllabus. But is the content of the standard there for your syllabus? Yes. Yes. Nothing. We have already seen everything. Now, we saw the treatment of in your overheads. Now, you should always use a predetermined rate, correct? And under or over absorption, use of supplementary rate, all these are given only in your cost accounting standards. We didn't learn it by number, that's all, because it's not there for your syllabus. Whatever we have seen till now, every single thing is there only in your cost accounting standard. Else, if something like a cost accounting standard is not there, you will follow your own base, I will follow my own base. So there will not be any uniformity. The purpose of accounting itself gets defeated. Are you clear with this? So whatever we have covered till now, we have picked it all from our cost accounting standards without knowing the numbers of that, because it's not there for your syllabus. Are you clear with this? Are you clear with this? Now, why are companies required to maintain cost records? Because it's a part of your, not a part of your syllabus, it's a part of the law. It's a part of the law, and law says that you need to maintain. Now, the law says that you need to maintain cost records, correct or not? The law gives you two options. The law gives you two options. Now, you can maintain your costing records in two manners, in two systems. One is called as a non-integrated system. Non-integrated system. The other one is obviously called as integrated system. Integrated system. So one is called as a non-integrated system. The other one is called as an integrated system. The law gives you a choice to follow either of the two systems of cost accounting. What are these two systems, sir? Why do I have these two systems? Very simple. Now, anyways, a company needs to maintain financial records, correct? Now, over and above that, if you are satisfying the conditions, you should also maintain something called as cost records, correct or not? Now, if you are following a non-integrated system, what you will do is, in your company, you should have two separate departments. One is a finance department, the other one is a costing department. Now, the finance department will maintain only finance related books. The costing department will maintain only the cost related books. Meaning what? Your financial accounting and cost accounting are maintained by two different set of teams. They are not merged together. They are maintained by two different set of teams who concentrate only on their system of accounting. One guy follows only the financial accounting. He does paper number 1, correct? The other guy does only paper number 3. That's all. Clear with this? At the end of the period, these guys report a profit called as a financial profit. These guys report a profit called as a costing profit. Now, you have two profits, yes or no? Will these two profits match with each other? No, because we saw in our subject the profit we report is only operating profit. In your financial accounting, the profit you report is a net profit. And not just that, there are certain other things that could be a reason for a reconciliation. So what you need to do is, at the end of the period, you need to reconcile the difference between your financial profit and cost profit. Are you clear with this? This is about non-integrated system. Integrated means what? Together. Non-integrated means what? Not together. That's all. So I maintain my financial records and cost records independently, and I report a financial profit and a costing profit, and at the end of the year, I will look at the differences and I will reconcile them. Are you clear with this? Now, what do you mean by an integrated system? I will have only one team. Now, for costing and for financial records and all, I don't have two different teams. I don't have two different set of books. I will merge everything into a single set of books. I will merge everything into a single set of books. So parallelly, inside a single set of books, I will also pass entries for purchase, purchase and payment, plus I will also pass entries for utilization. So what I will do, in my financial account, I will add on my cost account, and I will merge everything put together, and I will maintain everything in an interlocked fashion. Now you tell me, here how many profits I report? Only one profit. I don't have two set of profit. Now if I report only one profit, is there a question of reconciliation? What I will reconcile with what? No. So first understand, the concept of reconciliation arises only if you are following a non-integrated system of accounting. Are you clear with this? And these are the three objectives of our subject. Maintenance of books of accounts as per non-integrated, maintenance of books of accounts as per integrated, and reconciliation statement in case of non-integrated. These are the three things that we are going to learn in this particular chapter. Are you clear with this? Are you clear with this? Many students, they don't know that reconciliation is applicable only for non-integrated. They say reconciliation statement is applicable throughout everywhere. First, to know why we have a reconciliation. Only when there are two sets of profit, only that can be reconciled. You report only one profit, you will reconcile that with what? No, there is nothing to be reconciled. Correct or not? Are you all understanding this, guys? Are you all understanding? So that's about the overview of this particular chapter, what we are going to see. Are you clear with this? And as I told you, the best part about this chapter is you already know it. You already know it. It's nothing but your cost sheet giving some accounting element of debit and credit to the items of cost sheet. So, sir, under integrated system, when they find operating profit separately, we will see it, no? We will see it. So, under integrated system, what they will do is, they will maintain the costing profit. So, till the level of operations, what they will do, they will maintain, they will have this costing P&L. They will have this costing P&L, operating profit. That operating profit will be transferred to your main P&L account, financial P&L. From there, they will also debit and credit non-operating items. They arrive at the net profit. We will see it later. Don't worry about it. Fine. So, basically, as I told you, you have two manners of maintaining your cost accounting records. One is non-integrated, that is separate sets, and the other one is integrated. And the concept of reconciliation arises only in case you're following a non-integrated system of cost accounting. Are you all clear with this? First thing, are you all clear with what we are going to study in this particular chapter? Clear, guys? And as I told you, it's repeatedly tested for 5 marks and all. Don't miss out on that. And at times, it has also come for 10 marks. So let's not take any chances. Let's do it here. Are you all clear with this, guys? Are you all clear with this? Now, so first let's go to the non-integrated system of accounting. Now, if we take time in understanding how to do this non-integrated system, simultaneously integrated system is also covered. Done, over, that's all. I will tell you how. When we are doing it, I will tell you how. That's all. It's very, very simple. If you know non-integrated, automatically you will know integrated. That's all. You need not separately do that. You need not separately, learn that. It is already covered under non-integrated. I will tell you how and all. Now, so take the heading. So the part 1 of this particular chapter is non-integrated system. Non-integrated system. Non-integrated system. What do you mean by non-integrated system? Costing records are maintained separately. Financial records are maintained separately. And we are going to prepare costing records alone. Separately. Are you clear with this? Are you clear with this? Are you clear with this? Fine. Now, you guys know what to debit, what to credit, no? Asset and expenses, increase will get debited, decrease will get credited. Then, liabilities and income, increase will get credited, decrease will get debited. Correct or not? These are the basics. These are the basics of accounting. Correct? And of course, if there is a capital account, increase credit, decrease debit. Of course, we will not be seeing any kind of capital account. Basically, there can only be 5 types of accounts. No. Now, I'm telling you honestly, when I was in my 11th, they were teaching me debit the receiver, credit the giver, real account, nominal account. Trust me, I didn't want all that. Whatever it is, max, there can only be 5 types of accounts. Correct? So, expense and asset, increase debit. Then liability and income, increase credit. Capital, increase credit. That's all. And if it is the other way around, you should credit or debit the otherwise. That's about it. This is all accounting is. Correct or not? Fine. Nothing great here. We all know the basics of accounting. Fine. So I generally don't use this real account, nominal account, personal account and all. I only use this way. These 5 ledgers, 5 different types of ledgers, increase, decrease, what you should do. If you know this, entire account is over. That's all. Correct? Clear with this? Fine. Now, this knowledge you guys have. Now, what I will tell you is, now, we will be seeing in a time from now, in a few seconds from now, I will tell you one particular transaction. You should tell me the journal entry for that. Can you tell me? Yes, based on whatever we have just seen, increase, decrease, debit or credit, correct? But there is only one rule for this game. There is only one rule for this game. There is only one rule for this game. Yes, the rule is, I will tell you a set of 11 ledger accounts. Okay, a set of 11 ledger accounts I will tell you. You can use only those 11 ledgers account for a debit or credit. Basically, whatever entry you want, you pass. But you should pass only using these 11 ledgers. That is, the debit or the credit should go to either of these 11 ledgers. Deal? Yes, that's all you need to do. And I will tell you the transactions then and there. As I keep telling you the transactions, you tell the entry and parallelly write it. All these in detail is not given in the material that I have given you. Clear? Then and there you do it and we are done with this area. That's about it. And of course, in between, I will tell you where all there are separate treatment that needs to be done. In fact, whatever chapters that we have studied till now, material, labor, overheads, every chapter gets converged here, and I will tell you how to give the accounting treatment for all that. That's the beauty of this chapter. So basically, we will converge whatever we have learned till now, and this chapter's objective is objective A, that is stock valuation and profit computation. We are trying to report the profit. Correct? Are you clear? This chapter's objective is not at all B or C. Are you clear with this? Fine. Decision making control is not at all there in this chapter. This chapter is wholly and solely about your objective A, your stock valuation and profit computation. Are you clear with this? So we are only talking about how to report your costing profits. Are you clear? Now, please note this down. Please note this down. List of ledger accounts. List of ledger accounts. Please note this down. It might be there in your material that I've given you, but please note it down. Please note it down. I'm telling it to you for a reason. Now, what are the ledger accounts that you have? Number one, stores ledger control account. I will call this as SLC. This is basically your raw material account. So raw material, increase debit, decrease credit and all you will know, correct? So raw material, tracking your raw material gets tracked under stores ledger control. Next, WIP control account. This is for your WIP, that is nothing but your factory shop, I told you, correct? Third, write down FG control account. This FG control is nothing but your FG stock, your warehouse area. Clear? Leave a line gap and write 4. Please leave a line gap and write 4. Wages control account. Then number 5, production overheads account, POH. Number 6, admin overheads account. Number 7, SOH, selling overheads account. Then leave a line gap. Number 8, abnormal loss account. Then leave a line gap. 9, cost of sales account. 10, costing P&L account. Leave a line gap and write number 11, general ledger adjustment account. It's also known as cost ledger control account. So GLA, also known as CLC. These are the 11 ledgers. Quickly note it down. Done. So what are the 11 ledgers account I told you? Your stores ledger control, WIP, FG. Then I've asked you to do wages, POH, AOH, SOH. Then one abnormal loss account. Then you have cost of sales, costing P&L, and finally you have your general ledger adjustment. Clear? Yes. Now what you do is maybe take another ink, maybe take a green ink, put a bracket within the first 3. put a bracket within the first three, across first three, and write it down, stock accounts. These are stock accounts. Stock accounts. Stock is what? An asset. Correct or not? These are stock accounts. Then put a bracket across 4 to 7. Items number 4 to 7 and write down expense accounts. Expense accounts. Expense account. Then abnormal loss is a loss account. Is a loss account. Then this cost of sale and costing P&L. Cost of sale and costing P&L. It is nothing but some consolidated accounts. Consolidated accounts. And finally, you have something called as a general ledger adjustment. General ledger adjustment. That is nothing but write down self-balancing ledger. Self-balancing ledger. Self-balancing ledger. I will tell you what each and everything is. Don't worry. Write down self-balancing ledger. Now, whatever is your costing related entry, I told you, you can only make use of these 11 ledgers. 11 ledgers. Now, raw material related stores control account. Your WAP related WAP ledger. FG related FG control account. Clear? These three are stocks. Then you have 4 items of expenses. Wages, POH, AOH and SOH. Are you clear with this? So then material cost, it gets tracked under stores ledger control. Are you clear? Are you clear? Yes, are you clear with this? Then you have one abnormal loss account. Remember, we opened abnormal loss. Which chapter? Process costing. Abnormal loss account, or you can also have an abnormal gain account. Clear? Yes. Normal loss, do you have an account? No. Why you don't have an account? Normal loss is not valued separately. Its presence is only felt by way of inflating the per unit cost of expected good units. That's why you don't have a ledger called as normal loss account. Are you clear? Are you clear with this? Then you have cost of sales. This is nothing but expired cost. Now I will collect all my expired costs together and then I will take it to my costing P&L. Correct or not? You tell me, when you are actually, let's say you are shifting your house from one place to another. What will you do? Option 1. You will put all your belongings in one truck and you will send the truck to the new house. Or option number 2, each and every item you will take it on your head and go, put it there, come again and again do it. Which option will you do? Option 1 or option 2? Option 1. Basically, you will use a truck to transport everything put together, and once the truck is full, you will send the truck. Maybe then you will send the truck back again for a second load. Correct? That is different. But what you will do is you will collect everything together and send it in a single shot. That's why we have a cost of sales account. What you will have is each of the components of cost individually, you will not take it to expired. Everything is an expired cost. Cost of goods sold is an expired cost. Selling overheads is an expired cost. Admin overheads is an expired cost. These 3 things, don't take it separately to the costing P&L. Ultimately, it goes there. Even I know that. What you should do is have a truck. The truck is called as cost of sales account. You park it in this truck and in a single shot you transfer it to the costing P&L. Are you clear with this? This is nothing but a truck account. Always it closes. Are you clear? And costing P&L, you know, debit side, credit side will have the sales. Debit side you will have all the expenses that is transported by way of this truck. Cost of sales. Correct or not? And you guys know, sales minus cost of sales is only a profit. Correct or not? Yes. So that's how the entire format of cost sheet is only getting placed here. Are you all getting a bird's eye view of this? Now, why do we have this ledger account called as general ledger adjustment? Now, for example, now guys, you tell me, purchase of raw material. What will be the entry in your financial accounts, in your accounts? Purchases account debit to cash or bank or maybe the supplier account, creditor account, correct? Now, what will be the entry in our subject? Now, when I purchase something, my raw material stock increases, asset increase gets debited, stores ledger control account debit to bank account. Let's say I'm paying by cash. Now, do we have bank account in any of the 10 ledgers till whatever we've seen till now? No. Now, this bank account is actually a financial, purely a financial particular financial ledger, correct? It's nowhere relating to costing, but we can't omit it. If you omit it, then you can't maintain double entry, correct or not? So, whatever ledger is not lying within the 10 ledgers that we have seen above, park it in a ledger called as general ledger adjustment, or it's also called as cost ledger control account. Are you clear? So whatever ledger is not covered in the above 10, park that debit or credit in the GLA account. Are you clear? For our classroom discussion, we will call it as GLA, General Ledger Adjustment. In exam, they can also give it as a cost ledger control. Watch out for that. Are you clear with this? Guys, are you clear with this? Yes. So now this is the rule that I am telling you. Whenever you want to pass a journal entry, use any of the 10 ledgers, park it there. If those 10 ledgers are not there, then you can park it in a general ledger adjustment account. Clear? Clear? As simple as that. That's about it. Are you clear with this? Now what I will do is, let's get into the transactions. I will tell you the transaction. I want you to tell me the journal entry and I will note it here. Parallelly, you should also note it along with me. I will not give you time to note down and all. It's something elementary thing. For us, it's an elementary thing that we already know. Just that using this rule, you need to do it. That's all. Are you clear with this? And then we will do one full comprehensive sum. Don't worry about that. Shall we, guys? Shall we get started? Shall we get started? Right. Now when you are doing this, visualize that factory. Visualize a factory in your mind. In a factory, you have how many locations? 3 locations. What are they? Stores, factory shop, and your warehouse. Correct? So this is a place where your raw material gets stored. This is a place where your WAP gets stored. This is a place where your FG gets stored. Visualize this. Whenever I tell you, ask you for an entry, visualize this place and answer. Because we have these 3 stock accounts. Correct or not? Visualize this in your mind and answer. You will definitely get it. You will definitely get it. Are you clear with this? And remember, these 3 are assets. These are not expenses. These 3 are assets. Stock, no? Stock. These 3 are assets. Are you clear? And these 3 ledgers you can't find anywhere in your financial accounts. That's why financial account, when you are purchasing, the entry will be purchases account debit to party account. When you are selling, it will be party account debit to sales. So you are debiting one item, one purchase account at the time of purchase, and you are crediting sales account at the time of sale. It is nowhere linked. Correct or not? That's why stock can never get valued in your financial accounts. Whereas we are maintaining stocks. We are maintaining stocks separately. These ledgers you will find nowhere in your financial accounts. Are you clear with this? Are you clear with this? Guys, are you all clear with this? Yes? Fine. That's why you can't track the movement in your financial accounts. And that's why they are saying utilization entry can be passed only in our subject, cost accounts. Are you clear with this? Guys, are you clear with this? Simple reason, the objective of accounts is different. The objective of our subject, costing, is different. Are you clear? That's why. Are you all clear with this? Fine. So now, first, let me just tell you, write on number one, raw material related entries. Raw material related entries. Under that, first, purchase of raw material. Tell me, what will be the entry, guys? What will be the entry? Come on. Source ledger control account debit to GLA, cash or bank or creditor. Since I don't have that, park it in the 12th man, 11th man we have, no? Yes, is nothing but your GLA account. Are you clear with this? Yes, write down the entry. SLC account debit to GLA. Are you clear? This GLA can either be a cash or bank or your creditor, whatever it is. We don't maintain all those ledgers. Are you clear with this? Guys, is it understandable? Yes. Shall we move to the next one? Write down. Number two, raw material issued to the factory for production. Now tell me, in financial accounts, what is the entry? In financial accounts, what is the entry? No entry at all, no? See, from my stores, I am issuing it to my factory shop. What will be the entry? Financial accounts will not track this. This is the consumption entry, utilization entry. But here, what will happen if I do that? What will be the entry? Your WAP stock will now increase, but your SLC stock will decrease. So you know, WAP increase, asset increase gets debited, and SLC decrease, asset decrease gets credited. So entry will be what? WIP account debit to SLC account. Are you clear with this, guys? As simple as that. Nothing great. You already know. Now we are blending cost sheet along with the knowledge of debit and credit that we have got. As simple as that. If you mug this up, please never ever do that. If someone mugs this, then the course name is Chartered Accountancy. Accounts. Never. Mugging up is a sin, it's a crime. We guys can't mug up accounts. In your 11th and 12th, maybe if you have done fine, it's okay. It's forgivable. CLA, you can't mug up accounts. Accounts is in our bloodstream. It's in our bloodline. You can't mug up accounts. Why I'm saying this is, I have conducted many interviews. First question I asked them, tell me sales entry, credit sale entry. That itself they are not able to say. You will not believe. You will not able to believe. CA Inter first group cleared students. They are not able to say sales, credit sale entry. They are saying creditors account, debit or something. What? Seriously, GST order, if I'm asking them, I'm only asking them for a normal entry so that I can at least know what is the level of knowledge. Yepra exam pass panna keta sir, that somehow we mugged up something. Definitely not. Then why are you sitting here? The very fact that we are sitting here, if you don't know something, you learn it. Please don't mug up. If you don't know something, don't feel bad about it. You learn it. Never mug up. Never mug up. Accounts are mug adikiranga. I'm telling you, I'm not telling this, because someone told me and all. First-hand experience. I have conducted many interviews for our own firm. And I saw this. Basic accounts entry they are not able to say. Your BCom graduates also. Some CA Inter first group cleared students also. I was surprised. Paper 1 has accounts. And the level of group 1 accounts is more than the 3 years of your BCom. How can you do that? I'm still not able to digest that fact. Simple entries keta kuda solla maatiranga. So please, if you, I am not pointing out anyone, but what I'm trying to say is, in case you are not strong in accounts, ensure that you learn it conceptually. You can easily learn. Now there are a lot of free courses on YouTube also for basic accounts and all. It's okay. If you are weak somewhere, it's okay. Take the extra efforts and do it. That's all. Clear? Please don't mug this up. Okay, fine. Because I've seen this, I couldn't tolerate. Really, I couldn't tolerate. How can someone mug up accounts? Where they are sona kuda parvala. Accounts, how can someone mug up sitting in this course? So I have seen it. That's why I'm telling you so much. Fine. Yes. Next one. Right. Third. Now, let's say you have issued more raw materials and that factory shop is returning the excess raw material. Let's say raw material returned to stores from factory. What will be the entry? Now, your SLC balance will increase. Guys, I want everyone to answer. Please keep your videos turned on also, I told you. Fine, please guys, please do that. Yes, good. Nikita and Yashwant, these two guys have kept their videos turned on. Others, please turn on your videos. Fine, look at this. So when it gets returned, so what will be the entry? SLC account debit to, that's all. SLC account debit to WAP account. Are you clear with this? That's about it. Next. Fourth point. Raw material returned to supplier. Purchase return. Logically think and tell me what will happen. Now, creditor account debit to your SLC. Since we don't have a creditor account, that will be your what? GLA account. So, GLA account debit to SLC. What, Vishal? Yes, you are understanding? Yes, okay, fine. So, write down. GLA account debit to SLC account. Are you clear with this? Guys, are you all clear with this? Yes, are you all clear with this? Next. Point number 5. Purchase of raw material for special order. For special orders. Now, this is how they will give in the exam. Purchase of raw material for special order. What is the entry? SLC to GLA. No. SLC account will not at all get impacted. I'll tell you. Correct. You're right. Krishna Priya. Yes, that is the right thing. Now wait. I know this might sound very, the wordings are very misleading. Special order. Guys. I'll tell you one example. Maybe then this will help you remember. Now, what happens generally in your house? Your mom is asking you to buy some groceries. What will you do? You will buy the groceries and keep it in a storeroom. If you don't say, sir, I don't have a storeroom in my house. You store it somewhere, no? You will just pour it directly, You will store it somewhere, no? That is called a storeroom, okay? I told you, a bin can be a small dabba or it can also be a room, fine? So you pour it and keep it somewhere, correct? You store it in a place and then you will use it. Your mom will use it whenever she wants, correct or not? So that's how generally in factories also it happens. Whenever you buy something, you store it in a stores area. Whenever the factory manager is asking, I will issue from the stores. Correct or not? Yes. Now, what happened? One day, a few guests came to your house, and these guests, you know what they are known for? Coming just before the day of exam. That's when they will come. So they will not say, can I come? They will say, I am going to come. So it's an information to us. So what you should do, you should go to library, correct? Okay, so basically for that they are giving you a heads up, you should also be very careful. Okay, anyways, so now what they will do, now let's assume your guests have come home, okay? Some 4 or 5 people have come home. Now these guests what they are saying, let's say an example, they are saying, if you don't serve biryani, then we will be mood out. So biryani kudukalena mood out aidum, correct? Okay, let's assume, fine, I'm a vegetarian, so let's assume it's a veg biryani, okay? Fine, right, okay, fine, veg biryani, guys, example, please, example kudavada vidamatenga, right? Okay, biryani is a very overrated food. I don't think it's like that much worth the hype and all, but anyways, okay, so let's say they are saying only if you give me biryani, then I will be satisfied, else I will go around and do my gossips as if they don't do it otherwise. Okay, so they will do all that. Okay, relatives, okay, right, okay, fine. So basically they came home, they said only if you want biryani, then only if you serve us biryani, we will be like, we'll be in good terms and all, okay? So what your mom is asking, your mom has said she's running out of stock. See, generally every day you will cook your normal rice with that basmati rice, no, that biryani has a separate rice, no, that basmati rice and all, that costs more than 100 rupees per kg, you know. So what she is asking you to go and buy it from a nearby shop. Just go and buy this basmati rice I want to cook. You go, you bought it. What? Your mom is asking you, so give that basmati rice to me. You said, no. What is the policy? I will go keep it in the store place. From there you go and collect it. Will you do that? Or directly now you will come. Today it's an urgency, no? Special order has come, no? Directly you will consume it. What will you do? Directly consume or go to the stores and then come back? Directly consume. This is called as a special order. In case there is some urgent order, now what you will tell is, you will tell the supplier to directly deliver it in the factory shop. You will not ask him to put it inside the stores and from the stores you will take it there. No, directly issue to the factory shop. Now tell me the entry. WAP account debit to GLA. Are you clear? Enna madam, GLA to WAP. Guru, how is GLA to WAP? Tappa type padichiya. Okay, Tirumala type padikana. Fine. So it is WAP account debit to GLA. WAP balance is increasing and your creditor balance is increasing. Creditor balance is not there, so you will credit your GLA. Clear with this, guys? Exam, they will give the word special order. You should know that it means directly issued to factory, directly to factory shop, directly to factory shop. This is what it stands for. Are you clear? In exam, remember biryani, okay? Right? This guest biryani, you just remember. Are you clear with this? Are you clear with this? That's why I'm giving all these kind of nonsense examples. Okay? Please, guys, understand. Right. Now. So the entry will be what? WAP account debit to GLA. To GLA. Okay? Clear? Next. Number 6. Now, in your stores ledger, you will only store, in your stores area, you will only store direct material, or you can also store indirect material. You will store all types of material, correct? If it is consumed directly, let's say I'm in a textile manufacturing company, I have cotton, correct? If I use this cotton for producing cloth, I will say that is a direct material, correct? Now, this cotton I can also use to wipe this particular machines and all, no? If I use it for that, it's going to be an indirect material, correct or not? Correct or not? So, write down the next one. Indirect material issued to production. Now, what will be the entry? Now, what was an asset now turns into an indirect expense. So, POH account debit to SLC account. Are you clear? Increase in expense, POH debit. Decrease in asset, SLC credit. Clear with this, guys? Clear with this? Are you clear with this? So, write down POH account debit to SLC. Are you clear with this? Don't mug up anything. Everything is logical here. Are you all clear with this? Next. Number 7. Write down raw material lost within bracket abnormal. Why normal? Already you know how to account for it. It gets accounted. It gets distributed between expected good units. Fine. There is no entry for that, but it inflates the per unit cost of expected good units. Abnormal loss. Some thief came, or because of some fire, it just got destroyed. Fine. What will be the entry? Now, abnormal loss account loss debited to SLC account. Why? Reduction of asset gets credited. Are you clear? As simple as that. Just write down. Abnormal loss account debit to SLC. Are you clear with this, guys? Are you clear with this? Isn't it easy? Isn't it easy? Damn easy. That's all. Yes. Eighth, the final thing. Now write down transfer of raw material from one job to another. Now guys, let's say I am in a job costing setup, meaning what? I manufacture customized products. Okay. Now let's say I am a company like BHEL. Now what business am I into? I am into the business of manufacturing machineries for my client. I manufacture machinery. Now let's say customer A is a textile manufacturer. So he is asking me to build one machinery for his business. Customer B is a stationery manufacturer, pen manufacturer. He is asking me to manufacture a machine for him to manufacture a pen. Are you clear? So for him, whatever is required, I will manufacture some specialized machine. You tell me, can I say I will incur the same amount of cost for both? No. So what I will do, his machine I will construct in a factory shop. Parallelly, simultaneously, I will be having another team to construct. So the other guy, this stationary guy's machinery, that also parallelly I will be manufacturing in the same factory. Correct or not? Now what happens? The type of raw materials needed and all will be different for both the products. Correct? Now, there can be certain common items that we'll be using. Correct? Let's say nuts and bolts. Now, let's say this is your factory shop. Now, you have machinery 1 manufacturing here, or say product 1 is getting manufactured here, product 2 is getting manufactured here. Your store place was there. Okay? Now, what you did was, from the stores, you issued some nuts and bolts to product number 1 and it was manufacturing. Now, let's say product number 1 has some excess nuts and bolts. Okay? Now, product number 2 requires some nuts and bolts. Now, you tell me, what will you do? These two are brothers standing nearby. Will I immediately transfer this? Logically, will I transfer this? Okay, I have some excess, you take it up. Or will I say, no, I will return it back to the stores. You go to the stores and take it back. What will I do? There itself, on the factory shop itself, from one job, I can transfer the materials to another. Correct or not? Now, in this case, basically, this is all a WAP ledger. It's all a WAP ledger, but job 1 account is a subledger, job 2 account is another subledger. For example, if I say debtors account, now you tell me guys, entry when your credit sales entry is what? Debtors account debit to sales, correct or not in your accounts? Now debtors account, will there be one account? No. When you are passing an entry, you will not say debtor account. You will say Mr. A account, Mr. B account, Mr. C account and so on, correct? If you merge everything for grouping purpose, you call it as sundry debtors. Similarly, in a job costing setup, WIP ledger is called as a main ledger. But if you see it, actually, there will be many sub-ledgers inside that. Job 1 account, job 2 account, job 3 account separately. Clear? So, in this case, if I am transferring some raw material from job 1 to job 2, what will be the entry? Job 2 account debit to job 1 account. That is the receiving job account debit to the giving job. On a broader level, the entry actually is WAP account debit to WAP only. But inside, if you see, within the two parties, there is a change. Are you clear with this? So don't tell me that, sir, job 1, job 2 is not within the 10 subledgers, 10 ledgers that you gave me. It is nothing but a WAP subledgers. Are you clear with this? Are you clear with this? So the entry will be what? Receiving job account debit to giving job, or in other words, transferee job account debit to transferor job. Transferee job debit to transferor job. Transferee job account debit to transferor job. That is, the receiving job will now have a more balance, so debit it. The giving job will now have a lesser balance, so credit it. Are you clear with this? Guys, are you all clear with this? Are you all clear with this? Is everyone clear with this, guys? Hello? Yes? You guys are clear with this? Now, let's move to the next one. Let's move to the next type of entries. Wages related entries. There are only two entries here. Wages related entries. There are only two entries in this area. Number one, incurrence of wages within bracket paid / outstanding. Paid / outstanding. Incurrence of wages. When I incur wages, what will be the entry in your financial accounts? Wages account debit to cash or bank, or wages account debit to outstanding wages. Correct? If you haven't paid. Correct? So here what will be the entry? Wages control account debit to GLA. Are you clear with this? That's about it. So write down wages control account debit to GLA. That GLA can be cash or bank or vendor, or it can be an outstanding wages, whatever it is. Are you clear with this? Are you clear with this, guys? Is everyone understanding this? Is everyone understanding this? Yes? Now, number two, utilization of wages. Utilization of wages. Now what happens, guys? Now what happens if you see, let's say I am maintaining a wages account. Okay, so to GLA, I would have given some figure on the debit side. Correct, guys? Correct or not? Now what happens? This wages need not necessarily be direct wages. All wages put together, I have put it in a single figure. Now, to the extent it is attributable to direct wages, I will transfer it to which account? WAP account. Correct or not? So I will transfer the direct wages component to WAP account. Then indirect manufacturing wages, I will transfer it to POH account. Correct or not? Then let us say I have indirect admin related overheads. I will transfer it to AOH. Indirect sell-in related overheads, I will transfer to SOH. Now, if there is any abnormal idle time, what will I do? Transfer it to abnormal loss account. Are you clear with this? I will transfer it to abnormal loss. So basically, if you see, whatever you have incurred, it will be a sum total of all these things. Are you clear with this? Always remember, wages account will tally and should tally. Why? Because you can't stock wages, no? It's not like raw material. You can't stock wages, correct or not? So any abnormal idle time, treatment of abnormal idle time, that's what I'm talking about here. Abnormal idle time, what will I do? I will transfer it to abnormal loss account. Are you clear? So abnormal loss account is a common account for tracking your abnormal material loss and abnormal idle time. Are you clear with this? Are you clear with this? So utilization of wages, what will be the entry? Write down WAP account debit. So this is with respect to direct wages. POH account debit. This is with respect to in factory supervisor. Example, factory supervisor. Then AOH account debit. Let's say this is office workers. SOH account debit. Let's say this is sales depot workers. Then abnormal loss account debit. This is abnormal idle time to wages control account. Are you clear? So to the extent attributable to the respective components, you will transfer it to the respective items. Guys, are you all clear with this? Are you all understanding this? Are you all understanding? Guys, please answer no something. Please, are you all understanding this? Yes? You guys are understanding this? Perfect. Right, guys? Very good. Are you all clear? Yes. Okay, fine. Madhubita. Yes. Others? Yes, you guys are clear with this? Yes. Okay, done. Are you all clear with this? So that's about your wages related entries. Now, one more component of prime cost is there. What is that? Direct expenses. Now, in the 10 ledgers, do we have a direct ledger expense account? Do we have a direct expense account? No. Correct? We don't have. Now, assume direct expense ledger was also there. Example solra. Just assume direct expense ledger was there. What would have been the entry? First, incurring direct expenses. Direct expense account debit to GLA. Assume it was there. This is not an entry. Okay. Now, why do you incur direct expenses? In your factory shop, correct? This will be transferred to where? WAP, correct or not? So, the entry will be WAP account debit to direct expense, correct or not? Correct or not? Basically, this direct expense gets cancelled. Or directly can I pass the entry WAP account debit to GLA? Are you clear? So, for direct expense, the entry is going to be WAP account debit to GLA. This is a pass-through ledger. What is the point in having it? So, they have decided not to have that ledger only. I have not decided like that. They have decided in cost accounting standards. Are you clear? So, you don't have a direct expenses ledger. Direct expenses are directly debited to your WAP account. The entry is going to be WAP account debit to GLA. Are you clear with this? Yes, guys. Are you all understanding this? Fairly simple. Yes. So, the components of prime cost are over. So, you know how to pass entries for that. Are you clear? Now comes the main part of the discussion. Your overheads, mainly your overheads. How do I account for overheads? That is the subject matter of discussion here. That's the, relatively complicated part. I wouldn't say complicated. You guys know how overheads operate. But whatever we saw in overheads chapter, now we are just going to put it in a ledger format. Are you clear with this? Let's get started. So the next one is going to be your overheads related entries. Overheads related entries. First, you tell me, guys, how many types of overheads do we have? How many types of overheads? 3 types. What are they? POH, AOH, and SOH. Correct. Fine. Now, we saw that these two are. No. For the time being, please don't go back to this format of cost sheet and say, sir, what happened to those 4 specific items and all? No. I told you, ideally, those 4 items of additions and all, they are actually a part of POH only. Now, that exclusive separate identity and all is there only for cost sheet chapter. When you are doing all this cost ledger accounting, everything gets merged into POH. That's why I told you, our institute wants to test it in that way. That's all. Even CMA institute doesn't have those 4 separate items and all. CMA exam, if you are sitting, this format of cost sheet itself is not there for you. Okay, it's separate. It's like you don't have that. Everything is merged into only one, your POH. So have this general thing that the knowledge that I gave you, the general logic behind it. So all these things, whatever cost incurred, indirect cost incurred inside the factory is POH. Indirect cost incurred inside your corporate office is your AOH, and sales area is your SOH. Are you clear? And you guys know that this is a period cost. Correct, guys? And this is a product cost, and this needs to enter into your product through the absorption route. Are you clear with this? And this is what we saw, absorption. These two are period costs, means they also get absorbed, but directly they just hit your costing P&L. Are you clear with this? Fine. Now what we will do is now, in each of these 3 overheads, whenever I say overheads, now I'm saying all the 3 overheads, generally, you have 3 phases of accounting in each of the category, be it production overheads or admin or selling overheads. You have 3 phases of accounting. Number 1, actual overheads, accounting for actual overheads. Number 2, accounting for absorbed overheads. And number 3, at the end of the year, you do what? Under absorption or over absorption. Correct? So, for all the 3 types of overheads, you have this common thing. Account for actual overheads, account for absorbed overheads, account for under or over absorption. Yes? Are you clear with this? Now, you might have a doubt, sir, you only told me overhead absorbed is only accounted. Overhead accounted. I told you, no, overhead absorbed is only overhead accounted, no? Yes, that is only accounted. How to do all these things, I will tell you right now. So just wait. Once we finish this, if you still have doubts, you can ask me. Clear with this? Now, let me just go take a POH account. Fine. Let me take a production overhead account. Now, guys, you tell me, guys. Now, actual incurrence of production overheads will increase the production overheads expense. Are you clear? It will get debited or credited? Debited. Correct or not? Now you tell me, production overheads, indirect materials, I will get it from SLC, correct or not? Issue of indirect materials, we saw. What was the entry? POH account debit to SLC. So can I say to SLC, this is my indirect material, some figure, correct? Then indirect wages, it would have been transferred from your wages control account, correct? POH account debit to wages control. Yes, Vishnu. Yes, correct. We saw the entry, no? Indirect wages, correct? So to what? Wages control account. Let's say some figure. Apart from that, any indirect expenses now you are incurring, what will be the entry? You are incurring an indirect expense right now. So production overheads account debit to GLA, correct or not? WAP varudhu. Actuals will go into your WAP directly. It can't get into your WAP directly, correct or not? Fine. So to GLA, correct or not? To GLA, I have some expense. Are you clear with this? Are you clear with this? So these are all actuals. This is indirect material. This is indirect labor. This is indirect expense. I told you all these three put together is called as production overheads. Are you clear with this? We drew all the line and all. I told you green ink item put together, bucketed together, prime cost. Red ink item put together, it's called as POH and all. I told you that how it is coming. Are you clear with this? Guys, please respond. Please respond. Yes. Now you tell me. Now you tell me. Now you tell me. Guys, now you tell me. Now, throughout this year, I keep incurring these expenses. Correct or not? Correct or not? Now, I need to value my every unit of product the moment it comes out of my machine. Correct? Now, can I wait for the year end and do that? No. Costing can't wait till year end. So what do? You arrive at something called as absorption rate, multiply with the actual base quantity consumed, and parallelly you absorb. That is, parallelly you charge. You remove it from your POH and take it into your WAP account. Correct or not? Correct or not? Guys, correct or not? Absorbed overheads. So what I will do, absorbed overheads will be by WIP some figure. The entry will be WIP account debit to production overheads account. Are you clear with this? Why? Because now I am taking it. Expense get reduced and it gets converted into an asset. It gets converted into an asset. I am charging the overheads into the product. Product means what? An asset. Are you clear with this? Are you clear with this? Now, let us assume. Now, you guys know that these three figures put together are actuals. Correct? Correct? This figure is what? Absorbed. Correct? Now, always remember, these three figures are actuals. This figure is absorbed. Correct? Let us say these three figures put together. Is, let us assume, this is going to be 60,000 in our example. Okay? Now, what I will be doing, now guys, look at this. The beauty of this production overhead ledger is that both the debit side and credit side will be parallelly ticking. That is, as and when I incur an expense, I will keep on debiting the ledger. And as and when I keep producing the unit, I will keep on be absorbing using my budgeted rate. So both the sides will be parallelly functioning. Are you clear with this? I will not wait for the actuals. I will do it based on absorbed. That's why I said overheads accounted into the product is only going to be absorbed. Actuals will get debited here. Actual will get debited here in your POH account. Clear? Now let's say I have absorbed a total of 50,000. Yes, we have used some budgeted rate and all, predetermined rate into actual base quantity. Correct? At the end of the year, will your actuals and absorbed be equal? Mostly not. Now in this case, if you see, I have debited 60, but only 50 went into the product. Correct or not? So it is a case of what? It is a case of what? Under absorption. I have absorbed only 50, but actually I have incurred 60. Are you clear with this? So what I will do with respect to this 10,000? I have two methods. You remember? If it is normal, if it is because of normal price level changes, I will use something called as a supplementary rate and apportion between three people. Who are they? Your cost of sales, that is units sold, FG account, WAP account. Are you clear? I wanted to tell you this. You are saying Pata Madri irukku. What is this? Come on, we've spent a lot of time on overheads. No, day 1 and day 2. We put together, we did overheads. Guys, day 2 we did it. Yes, day 2 we did it. Guys, yes, clear with this, correct? Fine. So basically, if it is attributable to normal reasons, price level changes, these 3 people will get a share. Or if it is because of abnormal or inefficient reasons, directly take it to your costing P&L. You guys remember that? Yes, you guys remember that? Yes or no? Yes or no? I showed that and all. Yes, and one 10-mark question also, I told you how to do that. Yes, guys, you remember this? Inefficiency in planning. Strike, I told you. Strike, I told you. That example, I also told you one more thing. In that, paid was there on top, outstanding was there in the bottom. 45 lakhs plus 2 lakhs, 47 lakhs. Now you remember, huh? Yes, yes. Are you clear? Are you clear with this? This you should tell me. I am telling you. Who is going to write the exam? You guys are only going to write the exam. Okay, right. Okay, fine. So this could generally what happens, this will be treated as, in the absence of any information, you will treat this as a period cost. If nothing is mentioned, guys, if nothing is mentioned, you treat the under or over absorption as a period cost. Are you clear with this? So I will say by costing P&L. But actually it need not be costing P&L alone. It can also be those 3 guys. That is your cost of sales, your closing, your FG account and WAP account. They can also get a share. In this case, we are assuming that it's only a period cost. So this part is a pencil circle balance figure. Are you clear with this? Are you clear with this? Guys, are you clear with this? Are you clear with this? Sold and out. Yes, is the period cost that I'm assuming, so I'm taking it as 10,000. Else what you will do, you will say it is by cost of sales, by FG, by WIP. Put together it will be 10,000. But how I split this 10,000 between these 3 parties will be using the supplementary rate. Are you clear with this? I'm just giving you here. That's all. Are you clear with this? Okay. Are you all clear with this, guys? Are you all clear? We have done all the 3 phases with respect to production overheads. Actual, absorbed and treatment of under or over absorption. Remember, this 10,000 is an under absorption, hence it is here. If it is an over absorption, it will be on this side. Are you clear? It's only a balancing figure. Are you clear? And it need not be necessarily be transferred to costing P&L. If it is a product cost, if it is on account of normal reasons, share it between these 3 guys. I told you before, yes? Are you all clear? What is the entry we saw? Cost of sales account debit, your FG account debit, WAP account debit, 2 POH. I told you the logic for crediting the POH account. I will tell you later. This is the reason why we are crediting it. Are you clear? Because at the end of the day, we are consuming more. Are you clear with this? Guys, are you all clear with this? Are you all able to link? Are you all able to link? Now this Vikram Padatla, if you get this Kaidi, you are appreciating. Hey, are you understanding this? There we saw, now there we left out. Now we are linking it here. Okay, are you? You need not appreciate me. First you understand. That is enough. Are you all understanding, guys? Yes, are you all understanding this? Yes, fine. Are you all clear with this? Now, let's assume, let's say this is with respect to what? Production overheads. Now, with respect to AOH and SOH, things are fairly simple. Let's say AOH account, SOH account. Things are fairly simple here. Now, here also what I have, indirect materials I will get from SLC ledger. Indirect labor I will get from wages control account. And any indirect admin overheads I am incurring now only, I will park it to GLA, correct or not? So these are all actuals. Then what I do, I will also absorb. Generally the absorption rate for AOH and all will be a percentage of cost of sales or something like that, cost of production, generally they will do. So now you tell me this AOH, SOH and all, is it a product cost or period cost? Period cost. So where will I take it to? I will FG, wait. I will take it to costing P&L. But I told you we have one truck, no. Directly don't take. Everything you will put on your head and take, or you will park it in a truck and you will drive the truck comfortably. Yes, you will take the truck only. So take it to your by cost of sales account, and if there is any difference, this is based on absorption, and if there is any difference, that is always going to be by or to, will always go to your costing P&L account. Are you clear with this? Are you clear? Because it's a period cost. Similarly for SOH, also the same thing. To SLC, to wages control account, to GLA, you have all the actuals. Then the absorbed will go to by cost of sales. and if there is any under or over absorption, you will take it to your costing P&L. Guys, are you all clear with this? Is everyone understanding this? Is everyone understanding this? Guys, is everyone understanding this? Yes? Is everyone understanding this, guys? Are you all understanding this? Yes? Right? Perfect. 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 Now, yes, okay. Right? Are you all understanding this? So basically, you have three phases of accounting with respect to overheads, all types of overheads. What are the three phases of accounting? First, actuals will be debited, absorbed will be credited. If it is a POH account, take that absorbed to your WAP ledger because it's the product cost. If it is an AOH or an SOH, take it to your cost of sales account. It is an expired cost. And under or over absorption, what you should do in case of a POH, if it is a product cost distributed between the three parties using a supplementary rate, or if it is a period cost, you take it to costing P&L. In case of AOH and SOH, under or over absorption is always a period cost. It should always be taken to your costing P&L account. Guys, are you all clear with this? Are you all understanding? Guys, we are taking such a long time so that we are spending more time on the concepts, because that's when you will understand. Are you all clear with this, guys? Are you all understanding this? Is everyone able to follow this? Is everyone able to follow this? Yes, fine, right. Now, you should know one thing. You should know one thing. There is one problem with respect to, but apart from that, yes, there is one problem with respect to AOH also. There is one problem with respect to AOH. What is that problem? What is that problem? I'll tell you. Now, this is the general rule, guys. This is how we do it. You guys are understanding it. POH, AOH, SOH. AOH and SOH, the treatment is same. Correct? Debit your actuals. Take your absorb to your cost of sales ledger. Balance your under or over absorption. Take it to your costing P&L. Clear with this? Clear with this? Now, there is one problem with respect to AOH treatment. What is the problem? What is the problem? Now, can anyone tell me the format of cost sheet? Can anyone tell me the format of cost sheet? Guys, come on, make it fast. Direct material plus direct labor plus direct expense gives you prime cost, plus POH gives you your gross works cost, plus opening WAP minus closing WAP gives you net works cost or simply works cost or factory cost, whatever it is. From that four items of plus or minus and all, forget that. Yes, that is there. Forget here. Okay, you just merge it. Okay. Now, what they are saying is, after that, what you do, you adjust for your opening FG, closing FG. You get your cost of goods sold. Correct? Cost of goods sold. And after this only, you add your AOH and SOH. You are saying, will AOH and SOH be considered for the part of your stock valuation? No. That's why what we do, POH is considered here for the purpose of valuing my stock. What stock? All my stocks. WAP, FG, everything. Correct or not? Now, don't ask me the reason. Don't ask me the reason. It is not something that, that is very logical also. What they are saying is, please take this with a grain of salt. What we have studied till now is absolutely correct. Absolutely correct. That is only the right treatment. What some people do is, they treat AOH as a product cost. They treat AOH as a product cost. But wait. They treat AOH as a product cost, but they treat AOH as a product cost only to value your FG. So they don't add AOH here. If you add AOH here, it will also be used for valuing your closing WAP, correct? So what they do, they don't want to use AOH to be valued, they don't want to use AOH to value the WAP, they only want to use the AOH to value their FG stock. So what they do here is, so they add a POH, they arrive at gross works cost, add opening WAP, closing WAP and all, yes, these things are done. Then what they do here is, after they arrive at the net works cost or factory cost, they add AOH. They treat, what is this AOH? I am not talking about AOH related to production. No, I am talking about corporate office expense. That itself they are treating as a product cost. But wait, they are saying this will be used exclusively to value your FG. It should not be treated at par with POH. Are you clear with this? Why are they doing this, sir? GOK only. God only knows. We don't know the reason why they are doing it. Some globally it's a practice, some people do it, no logic at all behind that. They feel that admin overhead should also be treated as a product cost, but use it only for valuing your FG. Don't use it to value your WAP. I'm telling you, there is no logic behind this. If there is no logic behind this, then why are you teaching us this? Because in your cost sheet chapter, they are very clear. I'm talking from an exam perspective now. In your exam, what you should do? Cost sheet chapter, they are very clear. Very, very clear. AOH is always a period cost. But the same cost sheet chapter, when they are putting it in a ledger format, at times they are asking you to treat AOH as a product cost only to value your FG. How will we know that, sir? The question will give you. The question will drop you some hint with that you need to find out. It is still there in your exam. That's why I am telling you. Always this is very difficult for me to convince students. One student came and he started fighting with me. Sir, how is it possible, sir? You only taught like that. Hey, actually, in the Sunday, I should only ask the institute why they are doing, as if I only created all this. I am just telling you, mark that's all. It's my duty to tell you what is actually correct, what is required for your exam. So I am telling you both. If you want, you do it, and I told him and I left it there. But honestly, yes, it is hard for me to digest also. But in one chapter, see, if you are following something, you should follow uniformly. In one chapter, they are saying this. In another chapter, they are saying like this. That's what I'm telling you. For your exam, do this. That's all. If they are asking you to treat AOH as your product cost, you should treat it as a product cost exclusively to value your FG. Are you clear with this? Guys, are you all clear with this? Yes, are you all clear with this? So if you add AOH to this, now you will get the cost of production. From that, you will add your opening FG minus your closing FG. You get your cost of goods sold. Now from this, what will you do? You will add only your SOH. AOH is already added above. You will get your cost of sales. Are you clear with this, guys? Are you clear with this? This is one unique way of dealing with AOH. Why? I don't know. I don't know. No one knows. I tried to refer many books and see. No reason is very logical. They have given their own reasons. I am not satisfied with the reasons, and I don't want to tell you that this is why it is like this. Because if I tell you, then you will also start believing it. So I don't want to do that. I am not convinced with any of the reasons that they have given. Some authors I saw, globally they don't follow this, but at times they do it. At times they do it. And in our institute study material, they have done most of the sums using this way only. Most of the sums for this chapter alone, treat it as a separate chapter and deal with it. That's all. Are you clear with this? So an alternative way of treating AOH is what? Not treating it as a period cost, but treating it as a product cost exclusively to value your FG. Are you clear? Now you tell me your AOH account, how it will look like. Now, debit side, if you see, the actual expenses will be there. Actuals, that is to SLC, to wages control account, to GLA, that is indirect material, indirect labor, indirect expenses. I am just having it, or admin related, correct? When I am absorbing, what will I do? I will take it to what account? I will take it to what account? I will not take it to cost of sales. I am telling you now, I am treating it as a product cost. Cost of production. Do you have a ledger called cost of production? Who said cost of production? Silently you are sitting on the corner. I will take it to FG account. I will take it to FG account. Look. Here, look at it. POH was taken to WAP account because it was used for valuing WAP, correct? And if it is included in valuing WAP, it will also be taken for valuing FG, correct or not? Correct or completed goods and incomplete. If you take it into account for valuing completed goods, automatically that will be included in your FG value. Here what they are saying, bypass WAP and directly use it to value your FG. So we will take this to your FG account, and the balance, whatever is under or over absorption, that will always be a costing P&L, that will always be a period cost. Are you clear with this? This one small addition, can you remember, guys? Can you remember? Yes, what happened? Okay, I will summarize. If AOH is a period cost, debit side anyways actuals, credit side absorbed, you will take it to cost of sales. Why? It is a period cost. If they are asking you to treat AOH as a product cost, in that case, you will absorb it to directly FG. You will not absorb it to your WAP. Are you clear? So in this case, what happened? In this case, what happens? Now, in this case, what happens? Absorbed POH will be taken to WAP account. Absorbed AOH will be taken to FG account and absorbed SOH will be taken to your cost of sales account. Are you clear with this? Guys, are you clear with this? Please reciprocate online, guys. Is there anything that you want me to repeat? Guys, please tell me, are you all understanding? Are you all understanding? Yes, are you all understanding? Yes, yes, guys, are you all understanding this? Folks, yes, are you all understanding? Please, guys, please, guys. Yes, yes, yes. I don't like calling people by doing this and all, but you are not turning back. What should I do? Yes, okay, you guys are understanding. Yes, perfect. Are you clear with this? Are you clear with this, guys? Yes. So basically, you have two ways of treating your AOH. If it is a period cost, you will take the absorbed AOH to your cost of sales ledger. If it is a product cost, you will take it to your FG ledger. Are you clear? How will I know how will I know how to treat it? Whether as a product cost, period cost, the question will give you a hint. We will see it. We will see it later when we are doing the question. Are you clear? So we have seen what the actual absorbed and treatment of under or over absorption. Are you clear with this, guys? Are you clear with this, guys? Are you all clear with this? Are you all clear with this? Now what happens? Let me just show you how your ledger accounts will look like after we pass all the entries. How your ledger accounts will look like. So first tell me how many ledger accounts we have. SLC, WIP, then FG, correct? Then these three stocks we have. Then we have four expenses. What are the four expenses? Wages control, POH, AOH, and SOH. Perfect. Then what do we have? One abnormal loss account. And then what do we have? We have cost of sales account. And then we have one costing P&L account. Apart from that, we also have a general ledger adjustment account. Fine. Now, how your accounts will look like? These three are stock accounts, correct? So any purchase will get captured here. Any issues will get captured here, correct? So in case of SLC, correct? So which means you will have a balancing figure. By balance carried down, you will have a figure, correct or not? You will also have a by balance carried down here. You will also have a by balance carried down here. Why? These three are asset ledgers. They will not get closed. Balance, opening stock, closing stock. This is the reason why you have your raw material, WIP and FG. Three stocks has opening and closing balance, correct or not? Wages account, I told you. Incurrence entry, utilization entry, always tallied, correct? POH account, actuals, absorbed, and balance is going to be your costing P&L, correct? Actual, absorbed, balance is going to be your costing P&L. Again, here balance need not necessarily be costing P&L. It can also be distributed to the three fellows. You know that, fine? Here, in our example, I'm telling you. Now, selling over is also actual, absorbed, costing P&L. Now, have this in mind. AOH, I have two treatments of absorption. If it is going to be a period cost, take it to your cost of sales. If it is going to be a product cost, take it to your FG ledger. Are you clear? Next, abnormal loss. I will have here 2 SLC, 2 wages control account, correct? This is nothing but abnormal material loss. This is nothing but abnormal idle time. I will give this and I will take the entire thing to my costing P&L, correct or not? This ledger also gets closed. Now, in my cost of sales ledger, what will I have? I will receive from FG, cost of goods sold I will get from FG, correct? So I will have 2 FG, then I will have, if AOH is also a period cost, 2 AOH, 2 SOH, I will have all these things in a truck, single shot I will transfer it to my costing P&L, correct? In my costing P&L, if you see, I will have by sales in the sense GLA, sale entry will be there, then the cost of sales will come from here, 2 cost of sales. Apart from that, if there is any under absorption and all, it gets captured here. 2 POH, AOH, SOH, some under absorption comes here, over absorption comes here. Are you clear with this? Then I will also have abnormal loss, which always will be on the debit side. And if I net all these things off, I get my operating profit. This operating profit, what will I do? What will I do? You tell me in company accounts what you do. If you have a profit, you transfer it to your reserves, correct or not? So whatever is that reserve, you transfer it. So basically it's going to be a P&L account, debit to reserves. Now do you have a reserve account here? No. So what do you transfer it to? GLA. So whatever is the net profit, you will transfer it to GLA. And GLA, what happens? It is a sum total of all the accounts that we have generally passed. And that's about the entire set of 11 ledgers you will be having. If you were to prepare a trial balance, you will have only 3 debit items and corresponding total will be your credit side total in your GLA ledger. Your trial balance will tally. Are you clear with this? So GLA generally has a credit balance. Guys, are you all understanding this? Are you all understanding this? Are you all understanding this? Is everyone understanding this? Guys, are you all understanding? Yes, sure. You guys are understanding it? Yep, fine. Is this understandable? No? Okay, fine. Right. So now what happened was we closed all the expense and loss accounts and we had balance only in asset accounts, that is stock ledgers. Correct or not? Correct or not? This is what we have done, and that's about the entire discussion here. But a few more things that you need to know. Now, if you see in your FG account, now if you see in your WAP account, now whatever is the total cost get apportioned between two, no? What and what? Completed units and incomplete units, correct? This completed units means what? It should get transferred to the FG account, correct? So when the units are completed, they will not give this as a separate transaction. If at all they give, it's okay. If not, you should know that necessarily units completed should be transferred to FG. What will be the entry? FG account debit to WAP, correct? Now in your FG account, whatever units is sold, the cost side, you will transfer it to your cost of sales account, correct? Entry will be cost of sales account debit to FG, correct? Now, for sale, you will have two entry, one for movement of cost, the other one for recognition of revenue. Are you clear? For movement of cost, what happens? From my FG now, I am giving it away. Entry will be cost of sales account debit to FG. Similarly, I make a sale, no? What will be the sale entry? It will be debtors to sales. Then what will happen? P&L debtors account debit to sales. So you have two entries. So generally, I am telling you, sale entries, debtors to sales and sales to P&L. Correct? So basically, can I say these two gets cancelled? Correct? Or can I say the net entry is only debtor account debit to P&L? Or in other words, can I say GLA account debit to P&L? So what you do here is, that's why in costing P&L, sales is credited as by GLA. Are you clear with this? Okay, boss. You tell me what is the sale entry? Debtor account debit to sale. Why are you crediting sales ledger? Income account gets credited, correct? Now you will keep it only in the sales ledger. Your sales ledger, what happens? It gets credited, it has a credit balance. What will you do it? At the year end, you will keep it there. You will transfer it to P&L, no? And close off this ledger. It's a nominal account. It can't be carried forward to the next year. The entry is what? P&L account debit to sales. That's why it gets credited to your P&L account. Correct or not? Directly, I am just merging the two entries and passing it as your GLA account debit to costing P&L. Are you clear with this? So for sales, you have two entries, cost side entry and revenue side entry. Now this cost side entry is not there in your financial accounts, correct? Cost side, will you say cost of sales account debit to FG and all, you don't have this ledgers only, correct? That's why everywhere we use the word control. WAP, control account, FG, control account. Control means what? An internal ledger. It's an internal ledger. It's only for your internal purpose. That way you can differentiate what's an internal account and an account that you deal with an outsider. Are you clear with this, guys? So that's about the overview of this entire particular area. So what we saw was right from how you issue, how you purchase the stock, how it gets consumed and sold, all the set of transactions we have seen. Guys, are you all clear with this? With a specific focus on what? With a specific focus on absorption. Your overheads, actual, absorbed, and the balance figure should be taken to your costing P&L. That under or over absorption, you remember, it need not be on the credit side. It can also be on the debit side. Under means here, over means here, so it can be on either of the sides. So if I say under, automatically you know the ulta entry is going to be for over absorption. Are you clear with this? Now, one final thing I will just tell you. We will take a break after that, and then we will come back and do one comprehensive sum and finish it off. Clear? One final thing I want to tell you before we take a break. One final thing. Please hear me out. This is something that I'm going to tell you for the first time. So please scribble running notes for this. It's quite important. Okay. Guys, come on. Now, let me just take an example. Let's say we are having a POH account. Let's say on the debit side, we have 20K. What is this 20K? Actuals are absorbed. Actuals, yes. Now, what will be on the credit side? Absorbed. Let's assume it's this 15k. I have absorbed 15k. Actually, I've incurred 20k. What is my under or over? Under absorption. How much is that? 5,000. Perfect. Now, how will I treat this 5,000? How will I treat this 5,000? Number one, if it is a product cost, apportion it between those three guys. Cost of sales account, FG account, WAP account, using something called as supplementary rate. Perfect. Done. Second, if it is because of abnormal reasons, what will I do? I will take it to my costing P&L. Correct? Perfect. So globally they said it's always a period cost, but our people said deep dive into it, segregate it to the extent attributable to normal reasons, take it to your those three items, abnormal reason, then you take it to your costing P&L. Correct? So two methods we saw. So method one was what? Your normal reason. Method 2 was what? Abnormal reason, that is period cost. So this is product cost. Here you treat it as a period cost. Now there is a third method. Now, sir, why didn't you teach this before when we did overheads chapter? Because again, this particular area was not there in overheads chapter. This particular area is there only in this chapter they have given. And suddenly if you see your study material, in this chapter alone they would have given something you will not even understand what it is, because it is not explained anywhere. So I want to give you this background. So there is a third method. What does this method say? Don't do anything. The method says don't do anything. It says you need not do any accounting. Okay, you need not do any kind of accounting. Yeah, it's not in the class. This is not fair. Please don't do all this in the class. Okay. So the third method says, fine, just leave it just like that. Now, for example, this is your actuals. This is your absorbed. 5,000, what they are saying, generally we take it to costing P&L. This method says, you just leave it there as by balance carried down. What? By balance carried down. How can you take this? It's an expense ledger and you want to carry it forward to the next year. Isn't it illogical? No, there is some good logic here. So guys, tell me, what does the third method says? Don't do any kind of accounting here. Leave it there. It will be taken care of automatically. How can it automatically taken care of? I will give you the logic. Are you clear with this? The third method says what? Leave it just like that. Which means in the next year, POH account will have an opening balance. Correct or not? It will be a running ledger. So all your overheads will be running ledgers. This is another method that is also followed in India. This is another method that is also accepted in India. Now, sir, this is an illogical method and you are also trying to support this method. Why is it like this? Why do you say it's a logical method? Now, if you look at this, let's assume the budgeted overhead was rupees 20,000. Let's say the budgeted hours is going to be 20,000 hours. So what's the absorption rate? 1 rupee per hour, correct? Now let's assume that the actual hours is going to be 15,000 hours. Meaning, what's my absorbed overheads? 15,000 into 1, correct or not? Which is going to be 15,000 rupees, correct? Correct guys. Now what this method says is, you had originally planned to incur 1 rupee per hour, correct or not? So let us prepare our costing records only at normal costs. Let us not prepare it at actual cost. Now if I don't record for this difference, if you see 5,000 rupees difference, if I don't record it, bring it to my P&L, it's as good as I'm ignoring it, no? Correct? If I ignore it, which means I'm overstating my profit, correct or not? It says it's okay. The method says it's okay. Why? Because I don't want you to report actual profit. I want you to report normal profit. You normally budget 1 rupees per hour only, no? Yes. Now 20,000 was planned. You have absorbed only 15,000. Why? Because there is a problem with your budget. Who asked you to plan for 20,000 hours and consume only 15,000 hours? You should have originally planned for 15,000 hours. Had you planned for 15,000 hours and consumed actually only 15,000 hours, this problem wouldn't have arisen, no? Correct? So, account only at normal cost. Don't say I'm not, I want to account at actual cost. Not actualities will have some abnormalities. Please don't have any of this. So, I will always account only at normal cost. Now, you can have a doubt. This method goes on to say, wait, you need not have to worry. This year there is an under absorption. Hello? This year there is an under absorption of 5,000 rupees. It will be carried forward to the next year. Correct? What this method says is, next year if there is an over absorption, it gets knocked off. Correct? Over a period of time, this should get knocked off. Yes, if there is an over absorption, it gets knocked off. So this method is good only. Now you will have another doubt. What if in the next year also I have an under absorption? Correct? Yes, number pulling alam bayangaram. Yes. So yes, next year also has an under absorption. What will you do? Then this method says there is something seriously wrong with your budget. There is nothing wrong in my system. Correct only, no? Only if your budget is almost same as your actuals, this problem itself will not be there. The problem arises only if you are not budgeting properly. So if you keep on accumulating, your under or over absorption, suddenly in 1 year, if you notice and hit your P&L, that single year can't take this entire cost, and there will be an abnormal loss in that particular year. Correct or not? That can't be done. Yes, this method also agrees. What this method says is, it will show you a trigger. If 2-3 years you start accumulating it, it means that you're going wrong in your budget. Go rectify it. Clear? So it's not, the objective here is not to keep on accumulating it. It should not be accumulated. It should get offset within the next year or two. If it is still accumulating, go revise your budget at least from the forthcoming years onwards, so that over a next period of time it gets knocked off. Are you clear with this? So this method is also accepted. Are you clear with this? So what you should do in this method, you just have to carry it forward as a balance, and your overheads account will also keep running as a ledger. How will I know, sir? How will I know which method to follow? In your question, they will give you an opening trial balance. In that opening trial balance, if you see production overheads account, it means that they are following this method. Are you clear with this? If your overheads account, generally will it have an opening balance? Absolutely not. It's a nominal account, expense. But if it still has an opening account, it means they are having this habit of you're carrying it forward. Are you clear with this? Are you clear with this? So if you do this, definitely what happens? Your profit will change. If you are not considering under absorption, current year profit will change and all. No, it will be more overstated. They are saying we are reporting normal profit. We are not reporting actual profit. So it's okay you follow this method, but ensure that in your cost accounting policy, you mention the method in which you are absorbing your overheads. Are you clear with this? This is a cost accounting policy. Similar to depreciation, I told you, you have methods of depreciation, methods of stock valuation in your accounts. It's a cost accounting policy. What is cost accounting policy? Your treatment of under or over absorption. That is your cost accounting policy. Are you clear with this? So broadly, three ways are there. One is distributing, or okay, you can actually say two ways. One is segregate it into product period and do it accordingly. The other one is just carry it forward to the next year and close it off. Are you clear with this, guys? Are you clear with this? With this, we have completed the entire accounting treatment with respect to non-integrated accounts. It's on page number 88. Yes, 88. Okay, so let's do this. Okay, right. Now, the following balances are obtained from the books of XYZ Company Limited on 1/1/20X1. Stores ledger control account, WAP control account, FG control account, general ledger adjustment account. Clear? They have given some balance. Okay. The following information is received at the end of the year. So they have given some transactions and all. So they have given a list of transactions here. Okay. So we will read it whenever we are doing the sum. You are required to record the entries in cost ledger for the year and prepare the trial balance. That's all. They are saying you are required to record the journal entries in cost ledgers. Now guys, you tell me, now costing books can be maintained in two systems. What are the two systems? Integrated, non-integrated. In this question, which method should you follow? Non-integrated. Why? Huh? Why? Trial balance la? Trial balance la? They have given, correct only, no, you were correct. Yes, in the trial balance, they have given a GLA account. which means that GLA account is there only if you are following a non-integrated system, correct? Yes guys, are you all clear with this? So yes, this sum has to be done by way of your particular, what do you call, non-integrated system. And one more thing, look at this, read the wordings. Admin overheads applied to finished goods. Yes, which means it's a product cost that needs to be charged to your FG. Are you clear? So this is where I said the question will give you the hint. Are you clear with this? Fine. I think the others or the other areas are all something that we can directly do. So now I'll tell you how to do this sum. What you need to do is open 11 ledgers. First open 11 ledgers. Empty ledgers you open and keep. Whenever you read, go in a sequential order, starting from the opening balances. Transaction wise you do the dual posting, debit in one ledger, credit in another ledger. Transaction wise you do it. By the time you reach the last transaction, you will complete the entire sum. Are you clear with this? Always follow this. Whenever they are testing you on these kind of sums, go chronologically in the same order and finish it off. Yes guys, shall we get started? So please go and open your so go to your book. It's on page number, so question number 1 on page. Okay, right, fine. So let's get started. Now, what is the first ledger? Hello guys. Yes, stores ledger control account. Fine. Just open it. 4, 5, 6. Leave some 6-7 lines gap. For this. Gap as in the ledger should be 6-7 lines worth. Next, go to your WIP control account. Another 6-7 lines gap. Then go to your FG control account. Relatively smaller, some 4 lines gap is enough. Then go to your wages control account. Please write it fully, wages control account. So leave some 6-7 lines gap. Then go to your POH account, open a POH account, production overheads account. So leave some 5 lines for this, debit, credit. And guys, under this POH account, leave some 1, 2, 3, 4, 5, 6 to 7 lines gap, plain gap, no ledger, plain gap. I will tell you the reason and all. You just leave some 6 lines gap below this POH. I will tell you. Trust me, I will not waste your space. Don't worry. I will do it. Okay. So some 4-5 lines gap you leave. Then open AOH account. Some 4 lines gap. How will I know how many lines to leave? Automatically, when you start practicing, you will get it. So don't worry about that. Next, SOH account. Another 3-4 lines gap. Safety purpose, 4 lines you leave. Then you have what is the next ledger? Abnormal loss account. Yes, abnormal loss account. Leave some 4-5 lines. 4 lines will do. 4-5 lines gap. Guys, I hope you guys are opening the ledger. Okay, yes. Then open cost of sales ledger. Yes, cost of sales account. Small ledger, 4 lines gap will do. Then costing P&L account. Leave some 8 lines gap for this. Then general ledger adjustment. You need not plan your space because this is the last ledger. So maybe you can just open and keep it. Whenever you want to extend, you can extend it because it is not going to be, it's a last ledger, so you need not plan your space for this. So all 11 ledgers open, guys. Opened all the 11 ledgers. Yes. Shall we get started? Yes, yes. Okay, let's do this. Let's do this quickly. Now, first go read the question. Read the question. So what do you have first? You have some opening balances. So shall we just go and fill it up? Guys, I'm going to pick the figures only from you. I'm going to pick the figures from you. So please be alert. Please be alert. So first tell me, what is the first ledger? SLC. So write down. To balance. Carried down. How much? 5,000. Then, brought down, yes. To balance, brought down. 5,000. Then, WAP ledger. To balance, brought down. How much is that? 2,000. Then, FG account. Write down. To balance, brought down. How much? 1,000. Correct? Then, GLA ledger, correct? So just go down and write down GLA by balance brought down. How much is that? 8,000. Correct? So the opening trial balance entries have already been populated here. Guys, clear? Clear? Trial balance is done. Now what you need to do, current period transaction, read the transaction, do the dual posting then and there. Simple guys, 10 marks, take it in both your hands. Shouldn't make any mistake here. Now, what is the next one? Purchase for stores. Entry will be what? SLC you will debit and you will credit what? Guys. GLA. Yes, GLA gets credited, SLC gets debited, correct? So write down to GLA, how much? 29,500. So immediately what will you do? Go to GLA and buy SLC, how much? 29,500. 29,500. Next. Purchase for special jobs. Entry. WIP account debit to GLA. Direct purchase. Biryani. Yes, direct purchase. So yes, since we are in GLA, we'll do it. Buy WIP, how much? 1,800. So go up and go to your WIP ledger, done? Yes. Write down to GLA. Write down special job. How much is that? 1,800. Next entry. Returned from suppliers to returned to suppliers from stores. Entry. SLC reduces credit, so GLA debit. So go to your GLA account, go to your SLC ledger. First, write down buy what? Yes, write down buy GLA. How much? 200. Then go to your SLC, go to your GLA and write down to what? To SLC. How much? 200. Correct? Next. What is the next one? Now, they have given a few items here. Now, direct wages, indirect factory wages, salaries of admin staff, salaries to selling and distribution staff, abnormal idle time. Total is 31,300. What will be the entry that you will pass? Now, tell me, when you have wages, two entries are required to be passed. One is incurrence. The other one is utilization. First entry will be wages control account debit to what? GLA. How much? Single shot 31,100. Then from my wages I will distribute this to WAP. I will give this to what? POH, this to AOH, this to SOH, and this one to abnormal loss account. Correct or not? Guys, we saw that entry before. Yes. So let's do this. So first go to your wages control account. So write down what's the entry. First, to GLA, how much? 31,100. Immediately go to your GLA ledger, do the dual posting. Buy wages control account. WCA means wages control account. 31,100. Correct? Yes, guys. Then what will you do? Utilization entry. In your wages control account, go to your wages control account and write down buy WIP, that is for direct wages, 20,500. Then buy POH, how much is it? 4,500. Then buy AOH, how much is it? 3,400. Then by SOH, how much is it? 2,400. And by abnormal loss, how much is it? 300. Clear? Clear? Now go to the respective ledgers and debit these items. Can you tell me one by one? First WAP, how much? So write down to what? To wages. To wages. Within bracket, please write down direct wages. WAP account alone, we will track this. So tell me how much is it? 20,500. Then POH account. So go to your POH account and write down to what? Wages control account. How much is that? 4,500. Then admin overheads. To wages control account in your admin overheads. To wages control account. How much? 3,400. Then go to your selling overheads. Write down to wages control account. How much? 2,400. Yes. Then go to your abnormal loss account. Write down to wages control account. How much? 300. Correct? Direct expenses entry. WAP account debit to GLA. So go to your WAP account. Go to your WAP account and write down to GLA. Within bracket write down direct expenses. How much is that? Evlo 2,200. So immediately go to your GLA. Immediately go to your GLA ledger and write down by what? By WIP. How much? 2,200. Please guys, always do dual posting immediately. If you do only one posting, then again you need to read the sum and do the second posting. It's a waste of time. When you're reading a transaction, do the dual posting, dual entry. Next up, okay, production expenses. So guys, tell me, production expenses, incurred only, no? Correct, this is incurred, right? Fine, so production expenses, how much? Entry to POH account, like you need to go and debit your GLA. How much? 5,100. Immediately go to your GLA ledger and credit POH account. Write down by POH. How much? 5,100. Next transaction. Admin expenses. Entry AOH to GLA. So write down in your AOH ledger to GLA. Figure 4,100. So go to your GLA ledger. Write down by AOH. How much? 4,100. Yes. Next. Selling and distribution expenses. So selling and distribution expenses. So go to your SOH. Write down to GLA. Figure 2,600. So immediately go to your GLA ledger. By SOH. By SOH. How much? 2,600. Then what have they given? Stores issued to production. Entry WAP account debit to SLC. So in your WAP account write down to SLC. Within bracket direct materials. Within bracket direct materials. How much is that? 30,500. And immediately post it here on your SLC ledger. Write down by WIP 30,500. Correct, guys? Done. Guys, are you all doing it along with me? Yes, you guys are doing it, no? Then what is the next transaction? Materials lost from the stores by theft. Yes, 400 rupees. Entry SLC reduces and there is a loss entry. So abnormal loss account debit to SLC. In your SLC write down by abnormal loss. AL stands for abnormal loss. Figure is 400. So go to your abnormal loss ledger. Go to your abnormal loss ledger and write down what? To SLC. How much? 400. So basically your abnormal loss has your abnormal material loss and your abnormal idle time. Correct? Fine. Then what else? Stores issued to maintenance account. Entry POH account debit to SLC. Correct. Maintenance, obviously stores will be located in the factory. In the absence of information, it is for factory maintenance. Okay, clear? So from my stores it gets reduced and it turns into an indirect manufacturing cost. So entry will be POH account debit to SLC. So write down POH account. Go to POH account and write down to SLC. Figure 1300, and then what should you do? Go to your SLC ledger and write down by POH. How much? 1300. Are you clear with this? Dual posting done? Done, guys. Next, production overheads. Production overheads applied to production. How much? 20% on prime cost. What is this? 20% of prime cost is called as what? Absorption rate. I told you 6 base quantities can be there. What are the 6 base quantities? Machine hours, labor hours, percentage of direct material, percentage of direct labor, percentage of prime cost, and finally your production units method. Are you clear? Here they have used percentage of prime cost. Now prime cost, do you know? Prime cost, do you know? Yes or no? You can add it up. That's why this POH account, under that I have given you some gap. That gap is what? Calculation of prime cost, and that prime cost apply 20% and do it. So tell me guys, what is the absorbed overheads? Applied, absorbed, all one and the same. What's your prime cost? You can just look at your WIP account. Guys, look at your WIP account and see this. That's why I have given all these names and all. You can easily get it. So tell me, how much is it? Material, labor, overhead, material plus labor plus direct expenses, correct or not? So tell me, how much is your prime cost? 53,200. Any other answer? Any other answer? 53,200. Any other answer? I know what you guys would have done. I know what you guys would have done. You guys would have added only these three, correct? This 1,800 special job means what? That is also material consumed, but it directly came from the supplier's location to my factory. That is also a part of your, prime cost. Guys, clear with this? How many of you missed that out? How many of you missed that out? Online folks, how many of you missed it out? Yes. Please mark it in a reading. Please mark it in a reading. That's the reason why I'm giving this alone within brackets and all. Please put it in a reading. So write down under POH account. Write down working note, POH absorbed. POH absorbed. Under that, write down direct material consumed is equal to, so here on the extreme right, just go to the bracket and write 30,500 plus 1,800. This 1,800, put it in a red ink. 1,800, put it in a red ink. This special job is also direct material consumed only. It's going to be 32,300. Next, direct labor, how much is that? 20,500. Then what's your direct expenses? 2,200. Clear? Fine. So what's going to be your prime cost? Prime cost is going to be 55,000. 55,000. Now tell me, POH absorbed is going to be 20% on 55,000. How much is that? Which is going to be 11,000. Are you clear with this? Are you clear with this? How we arrived at absorbed production overheads, guys? Are you all understanding this? What will be the entry? WIP account debit to POH, guys. Answer no. Only a few students are answering. Napa? What is the entry? Okay, WIP account debit to POH. Appdi sonna ipdi solreenga. Idu sir solradhu. Okay, right. Okay, so write down by WIP. How much is it? 11,000. Go to your WIP ledger. Go to your WIP ledger and write down to what? To POH. POH within bracket working note. 11,000. Are you all clear with this? Guys, are you all clear with this? Guys, are you all clear with this? Yes. Next. What is the next item? Admin overheads. Apply to what? Apply to finished goods. Entry will be what? So you will remove it from your admin overheads and park it in your FG. So take a red ink. This is a unique item, I told you. So take a red ink, unique item. So go to your FG ledger. Go to your AOH ledger. Go to your AOH ledger and write down by FG. How much? How much, guys? 7,200. And go to your FG and write to what? To AOH. How much? 7,500. Are you clear with this? 200 அது. Okay, 7,200. 7,200. 7,200. Okay, right, 7,200. Then selling and admin expenses applied to cost of sales. How much is it? 6% on sales value. So how much is your sales value? 80,000 into 6%. How much is that? So 4,800. Take a normal ink. Take a normal ink and write down. Write down. So go to your what? Say SOH account. What will you write? By cost of sales. Correct? It's a period cost. How much into how much? 80,000 into 6%. How much is that? 4,800. So go to your cost of sales. Truck account. Cost of sales. To what? To SOH. Figure 4,800. Clear, guys? Clear? Are you all clear with this? Next step. What is the next thing? Finished goods produced during the year, 66,000. Entry will be what? Okay. FG account debit to WAP. So your WAP now turns into FG. Correct. So write down. Go to your FG account. And write what? To WAP. Figure how much is it? 80. That's the next figure. 66,000. 80,000 is sales. 66,000. Correct? Then go to your WAP account and write down what? By FG. How much? 66,000. This is nothing but cost of goods produced. You remember? FG done your transfer. Completed units. They have given the value. You need not value it. Fine. Next, what is the thing? Goods sold during the period at sales value. Entry will be what? I told you. Net entry. At sales value. GLA account debit to costing P&L. Correct or not? Costing P&L. You will credit sales. No. Correct or not? Sale value, boss. Sales value. Yes. So go and write down. What is this? Costing P&L. Write down. By what? By GLA. Figure 80,000. GLA account. Write down. To costing P&L 80,000. To costing P&L 80,000. Next. Goods sold during the period at cost. Entry. I told you sale you have two entry. Revenue side entry and cost side entry. What is the cost side entry? Now what was there in your FG stock goes into your cost of sales. Correct or not? Guys, what happened? Only few students are answering. Others, yes, are you all understanding? What was an asset now becomes an expired cost. Cost of sales account debit to FG. So go to your cost of sales account. Write down to FG. Figure how much? 69,500. And go to your FG account and write what? By COS. Cost of sales. How much is it? 69,500. Done now. Everything is done. Yes. So now let's start closing the ledgers. Transaction wise we have done. Let's start closing the ledgers. Now first the SLC ledger. Debit side total or credit side total? Which side there is? The total is more. Debit asset has more debit side. No. Debit side will be total. How much is it? 34,500. 34,500. What is the balance figure? By balance carried down. Evlo? 2,100. Correct? Pencil circle balancing figure. Correct? Asset account shares a balance. Next, WAP account, total it. Debit side total, how much? 68,000, which means by balance carried down, how much? 2,000. Total is 68,000. Correct, guys? Yes, done. Next, FG, total it up. How much is it? 74,200. 74,200, out of which you have sold 69,500. What is the balance FG? By balance carried down. Figure 4,700. Are you all clear with this? Wages account. What is the balance? No balance. And this account should necessarily tally 31,100. Whatever is your incurrence should be utilized. Correct? Yes. Next, POH account, debit side total or credit side total? It can be any side, no? Correct. Ideally, it can be under or over absorption, can be in any side. Correct. So tell me, FG account, your POH account, which side it's more? Credit side, meaning what? Meaning what? Over absorbed. You have absorbed more than what you have actually incurred. So how much is your under or over absorption? How much is that? Over. So write down 2 costing P&L. How much is that? 100. Pencil circle and then pull an arrow and write down over absorption. Over absorption. Immediately what should you do? What should you do? Immediately go to your costing P&L and put it on the credit side. By POH account. Costing P&L by POH account within bracket over absorption. What is the figure? The figure is 100 rupees. Guys, are you all clear with what we are doing? Look how we are sequentially closing the ledgers. This is something that you should do in the exam also, guys. Okay, clear with this? Clear with this? Now, go to your AOH account. Go to your AOH account. Which side has a more balance? Debit side or credit side? Debit side. So, which means you have incurred more. So, 7,500, 7,500. So, by what? Costing P&L. Under or over? It is an under absorption. Figure 300 rupees. Are you clear with this? In the absence of information, you treat it fully as a period cost. I mean, anyways, this is a period cost. I'm talking about POH, treat it as a period cost. So, in the question, if they have not given any opening balances, which means they are not following that carrying forward method, immediately what should you do? Come down and fill your costing P&L, write down to what? To AOH. How much is it? So, it's under absorbed the extent of 300. Next, guys, next is what? SOH, debit side total, credit side total. Debit side, how much is it? 5,000. 5,000. So 5,000, huh? Okay, so it's going to be by costing P&L 200 rupees under absorbed. 200 rupees under absorbed. So go to your costing P&L and write down 2 SOH within bracket under absorbed. Figure is how much? 200. Next, what is next? Abnormal loss. Abnormal loss. So tell me, what is the abnormal loss thing? What is the abnormal loss? Total is how much? 700. What will you do with this total? Take it your costing P&L. Write down by costing P&L 700, pencil circle, balance figure 700. Immediately go to your costing P&L and write down 2 abnormal loss. Figure is how much? 700 rupees. Are you clear with this? Are you clear with this? So with this, even your abnormal loss account is closed. Then what happens to your cost of sales ledger? Okay, right. So cost of sales, how much is the total? 74,300. So by costing P&L 74,300. So in the truck, I have already loaded these 2 components. In a single shot, I will transfer it. Correct. 74,300. So here, go to your costing P&L, write down to cost of sales. How much is it? 74,300. Now, can we just close this costing P&L ledger? Debit side total, credit side total. Which side is more? Debit. Credit. 80,100. 80,100. What is the profit? What is the profit? 4,600. 4,600. You will transfer it to what ledger? GLA. Transfer to reserves. No reserve account here. So transfer to GLA. Within bracket, write down profit. Within bracket, write down profit. Immediately go to your GLA ledger and do what? By costing P&L. The figure is going to be 4,600. Now total it up. Total it up. GLA will always have a credit total. So tell me, how much is the total credit? 89,000. 89,000. So basically, what is the balance? 2 balance carried down. How much is that? 89,000 minus 80,200 is going to give you 8,800, right? 8,800. Guys, are you all clear with this? Are you all clear with this? So look how beautifully we have just done it. If you go by sequence, it will automatically be clear. Just go by the sequence. Are you all clear with this? Wait, we are not done yet. We are not done yet. We just need to prepare a trial balance. We just need to prepare a trial balance. How many items will be there in trial balance? How many items? 4 items. Not 11 items. All the expense and loss accounts will be closed, you know. You have 3 stocks, debit and 1 credit, that is GLA. That's all. That's all. Clear? No 11 items and all. Okay, just write down trial balance. Trial balance. So debit and credit, particulars, debit and credit. Particulars, debit and credit. First, SLC account, how much is the balance? 2,100. Next, WAP account, how much is the balance? 2,000. Next, FG account, how much is the balance? 4,700. Clear? Then fourth, GLA account, how much is the balance? Hyphen and 8,800. It's on the credit side. It's on the credit side. Clear? So total it up, successfully tallying or not? Even if it is not tallying, we are known for making it tally. Yes? Yes? Right. Done. Completed, guys. Completed this. Are you clear with how the flow of this particular chapter is? Transaction wise, you just do the entries. Park all the ledgers. First open all the ledgers. Fill that opening trial balance figures. And whatever is the transaction wise, I want you to pass the entries. Are you all clear with this? Are you all clear with this, guys? Are you all clear with how to proceed about with these kind of sums? Yes, are you all clear with this? So what are the 11 ledgers that we've got here? Guys, what are the 11 ledgers that we've got here? 3 stocks, SLC, WAP and FG. 4 expenses, wages, POH, AOH, SOH. 1 loss, abnormal loss. Then 2 collection account, that is cost of sales and costing P&L. Then finally you have what? You have what? GLA ledger. Now when you are purchasing one raw material, what is the entry? SLC account debit to GLA, correct? Now this is under non-integrated method. Under integrated method, what you do? You are going to maintain all the financial ledgers and costing ledgers together, no? So what you are doing, instead of GLA, so first you use the 10 ledgers, instead of GLA, go park in the respective financial ledger itself. So when you are purchasing raw material on credit, what will be the entry? SLC account debit to the creditor account, correct? When you are purchasing it by paying your cash or bank, the entry will be, it's going to be SLC account debit to cash or bank. Are you clear with this? Simple integrated system means first 10 ledgers of your non-integrated system, and instead of GLA, zoom it out and actually do the entire, provide the entire financial records itself. This GLA ledger is nothing but a summary of all your financial ledgers, correct? Instead of providing a summary, go park it in the respective financial ledger itself, and that is called as integrated system. That's all done. Are you clear with this? There is no new value addition there. Ditto same. Costing ledgers, the 10 ledgers should be there. Correspondingly, till now, what we were parking in GLA should go to the respective financial ledger, and we are done with both the systems. That's all. That's all. Similarly, these kind of sums will be there for integrated system also. You just need to go and park it. Now, integrated system, what they will have? Opening trial balance. They will not have GLA account. Instead, they will have bank account, cash account, debtor account, creditor account. They will give everything. So, respective accounts you need to open and park it then and there. Are you clear with this, guys? Are you clear with this? So, basically, if you know how to operate non-ledger, non-integrated accounts, you will automatically know how to operate integrated accounts. Integrated account is nothing but instead of GLA, go park the ledger, go park the figure to the respective ledgers. Are you clear with this? Are you clear with this? That's about it. That's about the two systems of your cost accounting systems. Two cost accounting systems. Guys, are you all clear with this? Are you all clear with this? Fine. Now, one more thing I've told you. AOH has 2 treatments. I can either treat it as a period cost, which generally you should take. Now, if the question gives you some hint and all, charge to FG and all, what you will do, you treat it as a product cost, but charge it to your FG directly. Very good. Now, second one, there are different treatments of under or over absorption. I told you under or over absorption, generally what we do, segregate it into product period cost and accordingly account for it. Else, the other way of doing it is just completely carry it forward. Carry it forward to the next year. Current year, you don't pass any entry at all. Carry it forward to the next year. I told you that is also followed in India. Our cost accounting standards also says that it's a logical method. Clear with this? Clear with this? Fine. Are you all understanding the first 2 segments of this particular chapter? Integrated, non-integrated. Fine. Let's move to the third segment of this chapter, which is called as reconciliation. Now you tell me, reconciliation statement arises when I am following non-integrated, because non-integrated only reports two sets of profits, correct or not? Financial profits and costing profits. So let's get started with this particular area. It's fairly a simple area, something that you guys would have already done in your 11th standard, right from 11th standard. Have you guys seen this BRS? BRS, bank reconciliation statement. Yes, when that BRS comes alone, I don't know why there are many students, what they do is, the tea kadayila vara madri aathitte irupanga. Like this, they will keep on doing it. It's okay, man. Oh, adukku per hand method, okay, right, whatever that is. They will keep on doing like this. They will visualize bank statement, cash statement and all, fine, okay, right? Okay, basically, guys, let's quickly finish this off, no? Let's quickly finish this off. Okay, so now basically what happens in this area? What happens in this area? Now, first of all, reconciliation, the concept of reconciliation, you will reconcile what with what? One profit with another profit, that is financial profit with your costing profit. So this concept of apportioning the two or reconciling the two profit arises only when you are following a non-integrated system. Okay, fine. So we are going to talk about RECO, that is reconciliation of what? Of costing profit and financial profit. Are you clear with this? Now, some people mug up the format and all. They'll say start from this, add a less and all. Now, broadly, you tell me conceptually, broadly, what could be the reasons why my financial profit shows a different profit and my cost account shows a different profit? What could be the reasons? Can anyone tell me? First, non-operating expenses and income, correct or not? Guys, correct or not? Yes, the first reason for the difference, can I say, is because of non-operating items. Non-operating items. Example, dividend, interest and all. You tell me, dividend received, will it be considered as an income under costing? No, but it will be considered as an income in your financial books, correct or not? Interest paid, it will be considered as a cost only in financial accounts, not under costing, and so on. Are you clear with this? So because of this, that's why I'm saying our subject reports what? Our reports operating profit, whereas in financial accounts you prepare what? You report your net profit. Are you clear with this? Now this is one reason. What is the second reason? Absorption. Under or over absorption. Under or over absorption, is that the reason? At the end of the year, what you do? See, now in your financial records, you debit the actuals. In your cost records, you debit the absorbed. At the end of the year, you compare that with actuals and give it an accounting treatment, no? Correct or not? So even in costing, you match it with your actuals. Then tell me, how can that be a reconciling item? Are you clear with this? Yes, but you are right if the company has a policy of carrying it forward. Are you clear with this? If the company has a policy of carrying it forward, then only, yes, it's a reconciling item. Else, I am accounting for that at the year end. Correct or not? Yes, guys, are you all understanding it? So, under or over absorption, which is carry forward, this could be a reconciling item. Are you clear with this? And in this segment of our chapter, throughout this segment, they will always assume that the company is carrying it forward. Why? Only then you will get one more reconciling item, no? For that only, nothing great and all. Clear? So whenever you are in a reconciling reconciliation area, always it goes without saying, don't assume otherwise. It is always unwritten rule that the company is only carrying it forward. Are you clear? Because it will give you one more reconciling item. For that they would have kept some marks and all. Clear with this? Fine. Now this is at least some logical thing. The third reason is the most illogical reason of all. Please, it's actually not a reason in real life, but for our exams they are considering it. They are saying difference in stock valuation. Now, I told you, They are saying the stock valued under financial accounts is different from stock valued under cost accounts. First of all, I told you, financial account itself, it borrows stock figure only from us. How can it be different? Fine. They want one more reconciling item, so they have kept it. Are you clear with this? Broadly, only these three can be reconciling items. Are you all clear with this? What are the three reconciling items that we've got? Non-operating items, then your under or over absorption. In this leg of discussion, always assume they are carrying it forward. Okay, if they are not carrying it forward, accounting for it, then it can never be a difference, reconciling item. And the third one is stock valuation. Fine, stock valuation now ideally it should not be a difference. Clear with this? And one more thing, prime cost components. Prime cost components, can that be a reconciling item? No. No. Why not? Prime cost components, can it be a reconciling item? I am asking you. No. Why not? Prime cost, what are the prime cost components? Direct material, direct labor, direct expense. In your financial account, you always debit the actuals. In your cost accounts, what do? Cost accounts also, prime cost components hits your cost sheet in actuals. That is the reason it can never be a reconciling item. Are you clear with this? Are you all clear with this? And under or over absorption, also remember, it will be a reconciling item only if the company is carrying it forward, and generally we assume that the company is carrying it forward. Are you all clear with this? These are broadly the three reasons why at all a company can have some reconciliation. Are you clear with this? Now with this backdrop, we will go to the sum. Cash discount. Yes, cash discount is a non-operating item. Yes, Muralidhar, cash discount, I told you it's a non-operating item. So it will be considered only in your financial profit. It will not be considered in your costing profit. So accordingly, add or subtract. Whether to add or subtract, that we will see right now. But that is a reconciling item. Are you clear with this? Yes, guys, are you all clear with this? Fine. Now, have this alone in your mind. There is no specific format at all. There is no specific format. Add these items, reduce these few items, and you are good to go. Are you clear with this? Are you clear with this? What to add, what to minus, you have it in your mind, logically think. It depends on which profit you start with. Generally, what I would suggest is, now, what is our subject? Costing, correct? Now, from financial accounts, you try to do some reconciliation and arrive at cost accounts. Are you clear? Or in other words, it's not correct, but in other words, I'm saying, from wrong, you go to right figure. It doesn't mean that financial accounts is wrong, but I'm telling you, for the purpose of our subject, the right figure is only our costing profit. So start from financial profit, keep that as the base, to which add or subtract accordingly, arrive at the costing profit, if nothing is given in the question. Suppose in the question they are necessarily asking you to start with the costing profit, then do it as given. Start with costing and add or minus and arrive at your financial profit. Are you clear with? But generally, I would say, if nothing is given in the question, start with financial profits, add or subtract, and arrive at your costing profits. Are you clear with this? Are you all clear with this? Fine. Now, let's go to this question. Let's go to this question. Yep. So, go to page number 94. Now, read the question. What have they given? A company's profit as per costing system is how much? 46,126, whereas the audited final accounts showed a profit of 33,248. So they have given you the costing profit, they have given you the financial profit. You need to reconcile. From the following additional information, you are required to prepare a reconciliation statement showing clearly the reasons for the difference between the two profit figures. Clear? What do you need to do? Prepare a reconciliation statement. So they have given the financial P&L. Sales is given, opening stock purchase, subtotal is given here, this is subtotal, minus closing stock they have done here. So instead of increasing on the credit side, they have reduced it on the debit side, that's all, but it's actually one and the same. Direct wages, factory overheads and all is given, so gross profit, they have transferred it here. From that, admin selling is all removed. One sundry income is also added, they have arrived at the net profit. Are you clear? They have given you the financial P&L. Financial P&L, how do you know it's financial P&L? The sundry income and all is there, no? Correct or not? Yes, yes, fine. And that is the reason why you know that it's a financial P&L. Fine. And of course, one other way of knowing is the figure 33,248, they have given 33,248, it's a financial P&L. Are you clear? Now, the costing record showed the following. The closing stock was different. I told you, ideally, this should never be the case. Anyways, take it with a grain of salt. Direct wages, starch to production was also different. This is pathetic. You tell me a prime cost component, can that be different under costing and financial accounts? Absolutely not. Absolutely absurd, but anyways, take it with a grain of salt. Again, this is also given, do it. That's all. Don't ask me, it is illogical. It is actually illogical. Fine. Next, factory overheads absorbed. Actual is given here, absorbed is given here. The difference between that under or over absorption, you should always assume that the company is carrying it forward. Hence, it is a reconciling item. Are you clear with this? Are you clear with this? Similarly, for admin overheads also, you find the absorbed figure, actual figure is given. Difference between the two, carry forward, no accounting treatment is done. Then, so it's going to be a reconciling item. And you have some selling expenses charged. That is also absorption is given. So basically, all the three overheads, absorbed figure compared with actuals, under or over absorption, assume that they have actually done what? They have done what? They have actually ignored it. That is, they have just carried it forward. Are you clear with this? Easy sum, guys. Shall we just do it? And I told you, you start with what? You start with financial profit and arrive at what? Costing profit. Shall we get started? And I'll tell you what to add, what to subtract, how that logic has to be done. I'll tell you. So instead of doing all these things, maybe it's a better way of doing it. So let me just do it this way. Fine, let's get started. So this is question number 2, right? On page number 94. So write down question number 2. Now, guys, write down reconciliation statement. Please write down reconciliation statement. Now, I'll give you the template. Please follow this. It's a good template. Write down particulars and two amount columns, rupees and rupees. One is inner column, one is outer column. That's all. Clear? Now, what you do is, you start with what? Start with the wrong figure, arrive at the right figure. Okay, right, wrong, right, but I'm just telling for you so that you can remember. Start with financial account. First, write down profit as per financial accounts. Outermost column, right? How much? 33,248. Fine. Then what you do? Write down add and leave some 4 lines gap. 1, 2, 3, 4. Then write down less and leave again 4 lines gap. 1, 2, 3, 4. And finally, if you add and less all these things from your financial profit, you get what? Yes, write down profit as per cost accounts. Profit as per cost accounts. Don't write the figure. This should be an arrived figure. You should get 46,126. Clear? Now I'll tell you what you need to do. Take a blue ink and write working note. Why blue ink? Because this need not be done in the exam. I am just explaining the thinking process so that from next sum onwards in your mind you can do it. This sum alone, this needs not be done. No, the sum has to be done in the exam. Working note alone. Okay, that's why working note alone I am saying. Working note alone you should not do. So, okay. This working note need not be done. Okay, directly you can do it. Now, the working note, I will give you one template. Write down transaction, and 3 columns, small columns. Write down FP, that is financial profit, CP, costing profit, and TBD. What is TBD? Oh yeah, correct. And the if you see your IPL fixtures and all, in the playoffs alone they will write TBD, to be decided. Correct? To be decided, because actually in the back end everything will be decided. Cup also name they will write, but that they will not tell us, and like fools we will also keep watching. Still that craze will not go, no? Yes, even I watch. I am also a fool. I am accepting only. So yes, that is like sports is something else. Okay, right. Anyways, coming back here. Now, okay, guys. So now first tell me. Now look at that. Now you go to the question. Now tell me what is the first item that is a problem, that has a problem. They have given some items and all. Closing stock. So first closing stock. So point number 1, closing stock. Now you tell me closing stock is valued more under financial accounts or under costing accounts. So Cost accounts, sir. Yes, sorry. So, in your financial accounts, it's 150 something. In your cost accounts, it is 160 something. Now, you tell me, your closing stock is a credit item, correct? The credit item is more under where? Costing, meaning what? The profit under costing is more, the profit under financial is less, correct? The costing under financial profit is less, the profit under costing is more, correct? So now you tell me, you are standing here. You have started from financial profits, you need to arrive at costing profit. From here, if you want to go here, what will you do? Add. Are you clear with this? Are you clear with this? Simple, no? That's why I said this need not be done in the exam. But one sum, I'm just doing it and showing it to you, so that from the next sum onwards, when you're doing it in your house, you can just have this in your mind and do it. That's why I said, suppose you're starting from costing profit and doing financial profit, just reverse this. Okay, so that it will always be there in your, because this is an easy thing, but it's also a confusing thing. That's why I'm telling you, please have this in your mind. So tell me, what is the figure? 6152. So write down, under add, write down, overvaluation, these things should be in black, overvaluation of closing stock in cost accounts. CA means cost accounts. 6152. Next, what is the next item? Direct wages. So write down point number 2, direct wages. You tell me, direct wages is more under cost accounts or financial accounts? Under cost accounts or financial accounts? Under cost accounts or financial accounts? Direct wages is more under cost accounts. It is less under financial accounts. Expense is less under financial accounts. Your financial accounts will report more profit, correct? But your costing will report less profit. So from a higher state, you need to reach a lower state. So subtract. Are you clear with this? So go to your less items and write down difference in wages. Ideally, this should not even be a reconciling item. But anyways, difference in wages 3, 4, 6, 8, correct? How did you get 3, 4, 6, 8? 49,734 minus 46,266, correct or not? Guys, are you all getting it? What is the next line item? Factory overhead absorbed. You tell me what happened here. Actual factory overhead is 41,000 and odd. Now my absorbed overhead is only 39,000 and odd, which means what? You have under absorbed or over absorbed? Under absorbed, meaning what? The amount debited to your costing is less, correct or not? Which means the amount debited to your financial is more. So if your debit item is more under financial, the profit under financial is less, correct or not? So your profit under financial is less, your profit under costing is more. From less, you need to reach more, so add it. And what is this item called as? What is this item called as? Under absorption. UA of POH, correct? Under absorption of POH. Guys, are you all clear with this? Are you all clear with this? So just go and update here. Under absorption of POH. So just go and add it. Add the name. Yes, just go and add it. It's very inconvenient. Just go and add it. So write down under absorption. Just go and add it. Under absorption of POH. How much is the figure? 2224. Next, what is the thing? Next, what is the thing? AOH. Actuals is how much? 19,690. Correct. Absorbed is how much? 20,790. Yeah. 20,790 is it? Yes. Okay. So tell me, what is the difference? Under or over? Under or over? Now, what is the amount? The amount debited in costing is more, which means the amount debited in financial is less, which means your financial profit reports a more profit, correct or not? Financial profit reports a more profit, costing reports less, so you need to subtract. From here, you need to arrive here. This is what? Over absorption, correct? Over absorption of AOH, you need to subtract. How much figure? So write down over absorption of AOH. Figure is how much? 1100. Clear? What is the next item? Selling overheads. So tell me, under or over absorption? I think there is an under absorption of SOH, meaning what? Your SOH actual is more, which means in your financial, your profit will be less, costing it will be more. Add it up. How much is it? 9,700. So write down under absorption of SOH 9,702. Correct? Then finally, is there anything else? Sundry income is there, no? That sundry income if you see, sundry income. It is created only in your financial profits, which means your financial profits reports more. It should not be included while computing your costing profits. So you need less that. So write down sundry income. Sundry income. How much is that? Hello? 632. 632. So add all the add items. It's going to be 18,078. Correct? Just add these three items. Subtract items total is going to be 5200. So if you net it off, 33,248 plus 18,078 minus 5,200. How much is it? 46,126. Are you clear with this? Is this tallying with what is given in the question? Yes, it is tallying. So this is how you will do your reconciliation item. Are you clear with this statement of reconciliation? This is how it has to be done. Let me just give this a proper finish. So now what we will be doing is, now we just saw the reconciliation, right? So how to prepare this reconciliation statement or not? Now this reconciliation thing can be done either in a statement format or it can also be done on an account format. So it's called as a memorandum reconciliation account. We will see how that is. Now guys, what we'll be doing right now is, solved illustrations are there, so you need not solve fully, so can be happy about that. But just that I'm going to do 3 illustrations. These are all past exam questions. Especially the first illustration that I'm going to do is very important. I think it was tested in July 21 attempt, if I'm not wrong, for 10 marks. Okay, so 10 or 5, I'm not sure, but yes, it was tested in July 21 attempt. So let's do that question right now. So these 3 illustrations, I just want to do it so that once we do it, you will get a complete control over this chapter. Are you clear? So till now what we have done, we have actually covered the entire chapter in terms of all the concepts. We are going to do a few more illustrations just so that you get it right. Just so that you get the entire holistic view of the chapter. Clear with this? Fine. So let's get started. So take page number 90. Right guys, come on, let's get started. Now in this illustration, look what have they given. Look what have they given. They have given you the financial P&L. Direct material, direct wages, POH, AOH, sales are given, and the net profit is also given. Clear? Budgeted output 10,000 units, actual output 8,000 units, production overheads out of this 60% is fixed. Okay, right? Now they are telling you that AOH is 100% fixed. Calculate the profit as per cost records. This is what they have asked you. This is what they have asked you. Yes, clear? Clear? Now don't look at the solution. Please don't look at the solution. If you look at it, nothing is there. Nothing, no creativity is there. Now, please do it on your own. Try getting it by yourself. Try getting it by yourself. Now, what they have done is, in this sum, they have taken your admin overheads as charged to production. Okay. So, admin overheads, they have treated it as a product cost. They have treated it as a product cost. But wait, they are asking you to prepare a cost sheet. That's all. They are just asking you to prepare a cost sheet. Reconciliation, they are not asking you. They are just asking you to prepare a cost sheet. Now, fine. Okay. Now you tell me, guys. In your financial accounts and in your cost accounts, correct? Now, your prime cost items will appear as such, that is in actuals, correct or not? So, if you see direct material, direct wages, these 2 figures are actuals, correct? Now, you subtotal, you get your prime cost, correct? Now, what is the overheads figure that comes in here? Overhead is absorbed overheads, correct or not? Guys, please. Yes, tell me yes or no. Now, you tell me, what is the total overheads that they have given? Production overheads. 8 into how many units? 10,000 units. Guys, correct or not? 8 into 10,000 units. The total overheads is how much? 80,000. Huh? This is 20. Yes, on the top they have given rupees in lakhs. No. So my total production overheads is 20 lakhs. Correct? Correct, guys? Hello? Correct or not? Out of which, how much is my variable? How much is my fixed? Variable is how much? So variable is 40%. 40% is how much? 8 lakhs. It is not 80,000. It is 8 lakhs. Your fixed component is 12 lakhs. Guys, correct or not? Correct or not? Correct or not? Fine. This is what? Actuals. This is what? Actuals. Correct? Correct? Right? This is your actuals. Now you guys tell me. Now This, in the absence of information, can I say that my actual fixed overheads is equal to budgeted fixed overheads? Correct or not? So, can I calculate my budgeted rate, absorption rate, budgeted fixed overheads divided by budgeted units? How much by how much? 12 lakhs divided by 10,000 units. Per unit, how much is it? Per unit, how much is it? 120, yeah? 120 rupees. Correct or not? 12 lakhs by 10,000 is 120. Correct? Fine. Now, this is my per unit absorption rate. 120 rupees into actual units of 8,000. How much is it? 9 lakh 60,000. Guys, correct? 9 lakh 60,000. Correct or not? This is the absorbed fixed overheads. Correct, guys? Correct, guys? Your variable overheads is actually, your direct expenses, similar to your direct expenses. Correct or not? Variable overheads, I told you, it's nothing but it's actually similar to your direct expenses. Some people call it as variable overheads. Correct? It will also hit your cost sheet in actuals only. Only the fixed component needs to get absorbed. Correct? Yes. So tell me, what is the total overheads absorbed? 8 lakhs plus 9.6 lakhs. Correct? What I am telling you is, this 20 lakhs is actuals. Adu purida? Yes, this 20 lakhs is actuals. That you are understanding. This can be segregated into variable and fixed. Variable 8 lakh, fixed is 12 lakh. What is 12 lakhs? Actual fixed costs. Now, in the absence of information, I am assuming that the actual fixed cost is equal to my budgeted fixed cost. Correct? Now, what they are asking you to do, prepare a cost sheet. In your cost sheet, what will appear? Absorbed fixed overheads. How will you calculate the absorbed fixed overheads? Budgeted rate into actual units. Budgeted rate, how will you calculate? Budgeted fixed overheads of 12 lakhs divided by budgeted quantity of 10,000. So, the budgeted predetermined rate is going to be 120. 120 into actual units of 8,000 gives me my absorbed overheads of 9.6 lakhs. Yes? Yes? Now, on this 9.6 lakhs, I can add this variable overheads as such 8 lakhs. So, what is the total amount of POH that is being charged to your cost sheet? 17.6 lakhs. This is what they have given here. This is what they have given here. Look at this, budgeted overheads divided by budgeted output into actual output. How they have given 60% of 20 is going to be 12 lakhs. Divided by 10,000 into 8,000, they have arrived at this 9 lakh 60,000 plus 8 lakhs they have added. So, it's going to be 17 lakh 60,000. Are you clear with this? Are you clear with this? Yes. Now, they have done it here. So, if you subtotal this, you get your factory cost. Then they have given you something. What is that? AOH also they have given. So, what is your AOH figure? What's your AOH figure? 8 lakhs. The same thing that I will do. In the absence of information, I will assume that the actual AOH was equal to my budgeted AOH, correct or not? So, what you will do, it's nothing but 8 lakhs divided by 10,000 into how many units? 8,000. So, how much is that? 6 lakh 40,000, correct? Absorbed admin overheads. So, 6 lakh 40,000. If you add this up, you get your cost of production 74. Sales has been given. You arrive at the profit. Are you clear? In this sum, they have not adjusted for under or over absorption. Why? They are assuming that it is a carried forward figure. Are you all clear with this? This was tested, guys. July 21 exam. July 21 exam question. July 21 exam question. Are you all clear with this? How to tackle these kind of sums? Are you all clear with this? Guys, are you all understanding? Really, you guys are understanding? Yes? Yes, are you all understanding? Able to follow this? Clear with this, guys? Clear with this? Fine. So, that's about this particular question. And look at this. FG valuation is always different. Okay, this is actually not the case. This is actually not the case. You need not actually read this. Maybe you can just put a cross mark here. Fine. When nothing is mentioned, raw material, WIP inventory are same in cost accounts and financial accounts, that is fine. But FG value is always different. It is not always different unless and until it's expressly given in the question. Are you clear with this? So, from your financial data and additional data, you know how to prepare the costing data. Are you clear with this? You guys are understanding this? Yes? So, let's go to the next one. Let's go to the next one. Now, look at this. Look at this particular question. Look at this particular question. What have they given? They have asked you to prepare a memorandum reconciliation account. In that, they have given you certain figures. Loss as per cost accounts, which means they are starting with cost accounts. Okay. Then under absorption, over absorption, bad debts, legal expenses, interest on investment. They have these figures. Now you tell me, you are starting from where? Cost accounts. You want to reach where? Financial accounts. Now, loss as per cost accounts. Since it is a loss, it is parked on the debit side. If you are putting a statement format, you will put it within brackets. If you are putting it on a ledger format, put it on the debit side. Are you clear with this? Next, under absorption of AOH. You tell me under absorption of AOH, how much is it? 6 lakhs. Now you tell me under absorption means what? AOH as per costing books is lesser, correct? When you are debiting a lesser expense, your cost accounts will report more profit, your financial accounts will report lesser profit. So you will do what? You will subtract. From here you need to come here, or instead of subtracting, I will say park it on the debit side. Are you clear? Over absorption is the other way around, So you will add, that is nothing but credit side. Are you clear with this? Bad debts, in our subject, was it there? No. But in your financial accounts, it needs to be debited. It is not debited in my books, so it is more under costing, less under financial accounts. I need to subtract. Are you clear with this? Similarly, legal expenses, it is not considered in our subject. Correct? So it was not there in our subject. So our profit is more, financial profit is less. So what you need to do? Less it, that is debit. Then interest on investment, it was not there in our subject, it's there in financial profit. So costing profit is less, financial profit is more, add or put it on the credit side. So if you balance this, you will get here something like 50 rupees the figure. That's the loss as per your financial accounts. Are you clear? If you get it on this side, it's a profit. If you get it on this side, it's a loss, similar to your P&L account. Are you clear with this? So the same statement can also be prepared in a ledger format. Are you all clear with this, guys? Are you all clear with this? Yes, isn't this easy? Fair enough? Yes, fine. So let's move to the last one. So what have they asked here in this particular question? Okay, fine. So in this question, what they have done, they have given you a cost sheet. Guys, this is typically how the sums will look like. They have given you a cost sheet, okay, and they have given you the financial P&L. They are asking you to prepare a reconciliation statement. Are you clear with this? So they have prepared the cost sheet. So costing profit is there. They have prepared the financials, your financial P&L. So your actual, your financial profit is also there. You need to reconcile between the two. It's the solid same sum that we've been doing. So now in this question, they have started with what? Costing profit. Fine. So costing profit is a starting point. Your financial profit is your ending point. Now you tell me what happened. Every component you compare. Now opening WAP in costing is how much? 20. Whereas opening WAP in finance is how much? 15. Which means opening WAP is valued more under which subject? Costing. Which means costing reports a lesser profit. Financial reports a more profit. Add it. Are you clear with this? Similarly, closing WAP figure as per our subject cost sheet. How much? It's 15. Okay, 15. As per your financial profit, it's going to be how much? 22. Which means what? Your financial profit, what happens there? It reports more profit. Financial profit has a more credit side. It reports more profit as compared to costing. It needs to be added. Are you clear with this? Similarly, all other items we have already done. This overheads, closing FG, dividend and all these things, we have already done it. So this is given just so that you can revise it once. Are you clear with this? So basically, your reconciliation statement, it can either be in a statement format or it can be in a ledger format. Are you clear? The main question that I wanted to discuss was the first sum that we discussed, this sum, how to drop, when they have given a financial data, how to drop a cost sheet using that is what is required. Are you clear with this? And AOH, nothing is mentioned in the question. Ideally, you can also put AOH here, that is after your particular what you call cost of production, but in this sum it will not change the answer because you don't have any stocks, no? So you don't have any stock. WAP is also not there, FG is also not there, so the answer will not change. But anyways, you can ideally, it should be only a period cost. Are you all clear with this? The main problem was with respect to POH, apportioning it between variable, fixed. The variable should be absorbed, the fixed should be absorbed, the variable can be taken as such. That concept alone you should know. Are you clear with this? Are you all clear with this, guys? So with this, we have actually completed this particular chapter called as cost accounting systems. So we started off with non-integrated, then I told you integrated and non-integrated is one and the same. Instead of GLA, park it in the respective ledgers, and finally we did what? We did your reconciliation statement. Are you clear with this? Are you all clear with this, guys? Yes, you guys are clear with this? Yes, fine, clear? Done, perfect. Now let's go to the chapter called as contract costing. So this chapter is again a relatively smaller chapter. If you look at your study material, they would have combined job costing and contract costing as a single chapter. But ideally, contract costing, let's do it separately. So unit, batch and job costing is like very, very small, some 3-4 pages only. So I think after this chapter, we have only one more chapter left, correct? Fine. So after that, we have theories and exam preparation. We will spend more time on that. So tomorrow is going to be a very important session in terms of exam preparation. I'll tell you what exactly, how to sit for the exam, how to get prepared, how to write and all, till the extent of telling you when to write what. I will be sharing a lot of exam strategies that is time tested and proven. So I have experimented it with myself when I was doing it, when I was doing my intermediate and final and all. And apart from that, based on my interaction with past students, so yes, I'll be sharing a lot of tips. So that's going to be a very important thing. So please don't miss out just because we are going to finish only one small chapter is there, no, so don't think like that. Tomorrow's session is going to be really important. I will be sharing a lot of strategies that I feel is very important. So yes, please don't miss out definitely on tomorrow's session. Anyways, now today's agenda is going to be contract costing, and contract costing is a relatively smaller chapter. So once we finish contract costing, we will all leave. Okay, that's the idea. That's the idea. So let's finish this chapter and we'll close. I think you can finish it off quite early, before 8 o'clock itself. I think we can easily close it off. So yes, we can definitely do it is what I feel. So first, the beauty of this chapter is that once I finish the introduction, almost the entire chapter is over. You just need to solve, that's all. Okay, and I have some 2 sums here that is solvable, that needs to be solved. Apart from that, you have a few more sums that are by way of illustrations that we will explain and we will close. Okay, now is this chapter important from an exam point of view? Now once suddenly it got tested as a 10 mark, and after that it didn't come at all. But suddenly again it came as a 10 mark and it didn't come. So I don't know. If it comes, it can come as a 10 mark, else you don't know basically. So it's not frequently tested, but that doesn't mean that it cannot be tested for your attempt. So from my viewpoint, I've told you what is actually happening. But let us also finish this chapter, fairly a simple chapter, no big deal. So once you finish this, you will get a complete view of this, and this chapter is easy to understand also. But generally, again, once I give you a background, why we are studying this chapter, you will have a good insight, you will have a good viewpoint about this chapter, you will know from which direction you should look at it. That's again a problem with many students. They enter into the chapter directly without knowing why you are doing it. Okay, so let's know the reason why we are doing it, and then we will finish it off. Okay, so this is the agenda for the day. So let's finish off contract costing. Why do we have this separate chapter called as contract costing? Now, there are broadly 2 methods of costing. Okay, broadly 2 methods of costing we will be seeing in the last chapter. Broadly, you have 2 methods of costing: unit costing and job costing. Unit costing and job costing. Now, these 2 methods of costing, what does it mean? What does it mean? Is it like marginal costing, standard cost? No, that is different. These are all techniques of costing. These are methods of costing. What do you mean by methods of costing? Now, let's say I'm a pen manufacturer. Guys, please. Let's say I'm a pen manufacturer. Okay. Now, what I'm doing is, let's say I am manufacturing 10,000 pens this year or in a particular period. The cost I incurred is 1 lakh rupees to manufacture how many pens? 10,000 pens. Now, cost per pen, how much is it? I will say rupees 1 lakh divided by 10,000 units. So it's going to be rupees 10 per unit. Correct or not? Correct or not? Now you guys know I need to value every unit. Why? Only then I can segregate my manufacturing cost into COGS and closing stock. Only then I can find out my profit and all that. Perfect. Now you tell me I'm a pen manufacturer. Now I have manufactured 10,000 pens. Every pen is valued at 10 rupees. You tell me how did I value? Every pen I opened one ledger called pen 1 account. I saw how much material went into it, labor, overheads. Like that, pen 1 account, pen 2 account, pen 3 account. 10,000 pen accounts I opened? No, single account I opened. I collected the entire cost for the period divided by the total units produced for the period, and I found out the cost per unit. Correct or not? But actually if you see, maybe the first pen I manufactured would have consumed more labor time. Slightly it would have been 10.5. Maybe the last pen I manufactured, because of learning curve effect, these employees were now became efficient, and the last pen would have taken relatively lesser labor time, because of which the pen cost would have been only 9.5. But these are all some standardized products, correct or not? So it really doesn't make sense for me to value every single pen separately. So what I do, I collect the cost per period, divided by the total units, arrive at the cost per unit. Correct or not? Correct or not? Now, this is what is called as unit costing. I calculate the cost for every cost object by averaging out the price. And this can be practiced only if I am working in an homogeneous sector, only for homogeneous. Are you clear with this? How about job costing? Now, job costing is something that happens only if you are in a sector where you are manufacturing some customer specific products. That is, let's say I am Casa Grande. So Casa Grande is into what business? Construction business. Now, what they do, let's say I am manufacturing, or let's say I am building 4 different types of residential houses. What are the 4 different types of residential houses? Let's say flat, then villa, then one bungalow, and then I also construct one, let's say duplex. Yes. So inside that house itself, you will have one staircase and all, duplex. Clear? Now I have this 4 types of houses. Let us say I have incurred a total of 20 crore rupees on the entire all 4 put together. 20 crore for all 4 put together. Now can I say cost per house is 20 crore divided by 4, 5 crore each. So whether you buy a bungalow or you buy a flat, it is going to be 5 crore. Will you even say like that? Obviously not, because flat, villa, bungalow, duplex are not one and the same. They are all some customized products. From my viewpoint, it's a product. So they are all customized output, correct or not? So what I will do, I will open a flat account. I will compute the total cost. I will collect material, labor, overheads for the flat. I will collect material, labor, overheads for the villa, for bungalow and duplex separately, and I will value each of my products separately. Correct or not? I am not a fool to collect the total cost and average it out. Then it will be an uneven distribution of cost. Correct? So I will take every of my product as a job and I value it separately. So job wise I collect material, labor, overheads. Whereas in a unit costing, what I do, period wise I collect and I divide it by the units produced and I average out. Are you clear? So these are the 2 methods of costing. Who will follow what? It depends on the industry you operate. Homogeneous industry, go for unit costing. Heterogeneous or a customer specific industry, go for job costing. Even companies like BHEL and all, I told you, yes, they go for job costing. Why? Because one client is asking them to manufacture machine for textile industry, another guy is asking them to manufacture machine for your stationery industry. Obviously he can't say total cost divided by 2, both of you guys pay me the same cost per unit. No, for him maybe extra fittings are required, for this guy not much of products. Are you clear with this? So now this is when I follow job and unit costing respectively. Are you clear with this? Now sir, we are not into job costing, unit costing, we are only into contract costing. Why are you saying this? Contract costing is a specialized version of job costing. So contract costing is a specialized version of job costing. If you see, specialized version of unit costing was process costing. We saw process costing, correct? Process costing we saw. There what did you do? Calculate the cost per unit, you said. You did no? Cost per equivalent unit. You averaged out the price, correct or not? That's a specialized version of unit costing. Whereas contract costing is a specialized version of job costing. That is the reason in your study material, job costing and contract costing has been merged together as a single chapter. Are you clear with this? Learn what you're doing. Are you clear with this, guys? Are you all clear with this? Now, okay, sir. I think now we have a separate chapter. For this reason only we have a separate chapter, job costing. Yes, job costing is nothing but everything is same. Don't average out. Product wise you compute. That's all. No. then why do we have this separate chapter called as contract costing? Yes, process costing we saw we needed that separate chapter. Cost sheet is simple unit costing, correct? Now we saw that process costing we need because of two reasons and all. Your loss and closing WAP, it can be present at any stage, so you need to track it process wise. Similarly, in contract costing, there is one huge problem. So I will tell you what it is. Now, in a contract costing, basically, you have a doubt? Yes, in a contract costing, basically, who uses contract costing? Now, contract costing is used generally in industries where it takes more than 1 year for you to complete that particular job. So when it takes more than 1 year for you to complete the job, you use something called as contract costing. Guys, by the way, do you have AS7 in your syllabus? Don't tell me no, it's not in group 1, is it? AS7 is not in group 1, it's in group 2. Contracts, construction contracts, AS7. Okay, anyways. Okay, fine. So that same AS only we are going to study here. Now, guys, please. Now, let's take a prime example. Let's say I am L&T. You know L&T, Larsen and Turbo. What is the business of them? Don't say construction. They are not into construction business. Do they construct houses for you? They are into infrastructure manufacturing. They only construct roads, bridges, your metro rail, all these things they construct. They will not come and construct house and all. They will not even take up this building and all. They only constructed one building, that is their own office. That's all they constructed. Seriously, you should go and see. Near Ramapuram it is there. On adjacent to DLF office they have. Adjacent to DLF, Ramapuram they have their, their corporate office they have here. Yes, yeah, near his house. Adukku enada ipo குழந்தை மாதிரி சொல்றான் வரேன். எஸ் சார் நியர் இஸ் ஹவுஸா? அதில் என்னடா இருக்கு? ஓகே ஃபைன், நாளைக்கு சொந்தமாக இந்த மாதிரி பிஸ்னஸ் கட்டானா அப்போ பெரிய விஷயம் ஒத்துக்கிறேன். வீடு பக்கத்தில் இருக்கிறது என்னடா? ஓகே ஃபைன், கம் பேக் ஹியர். ஸோ பேசிக்கலி இஃப் யூ சி they will be having a beautiful office, one entire compound exclusively for L&T construction. They just have their own company, they just have their own building. In that building only they have all their main all the main functions will actually happen only from there. Now let us say L&T, I am L&T. Now these guys are into infra projects. If you see here also in Chennai Metro Rail, they would have put a lot of boards, and the inconvenience today for a better tomorrow and all, they will do it. Yes, they would have put, but it's always inconvenience only. But yes, actually we should say that the metro is actually it's going effectively. At least that's what I feel. With whatever I've got input from many people are using the metro. The number of people who use it now is very high. So yes, metro is actually, now they are also planning, they are constructing the other phases and all now, connecting the entire city, like left, right and center. You should actually go and see in in Delhi. For your information, a fun fact, in Delhi you have this metro rail, that is the only metro rail in India that connects 3 states. You know that? 3 states, technically states. Delhi is a union territory. Okay, 3 states means two states and 1 union territory. Okay, Delhi is a union territory. Yes, then it also goes up to Gurgaon. Gurgaon is in Haryana. Yes, and it also goes till Noida. Noida is in Uttar Pradesh. Yes, that's why you have a separate rule in your GST. You know that apportioning the ticket cost for place of supply and all. In case of metro rail, you have a separate rule that is applicable only for Delhi metro rail. That is applicable only for Delhi based on distance traveled and all. Something is there. Okay, forget that. But basically, that is why you are having in no other place in India you have this multiple, between multi-city and all, multi-state and all. Okay, multi-city multi-state they are having. So that is the fun fact about your the Delhi metro rail. If you see Delhi metro rail, they have 8 lines and all. They have this, whatever color you say, 1 line they will put. Purple, pink, black, white. Adile purple 1, purple 2. Color exhaust I don't. They will have 1 more color it seems. So like that they have, it's well connected, and every time you go there it will be too much crowded. Eppo ponal it will be crowded. You can't even get inside. So that's why everyone will have a card and all. They will not go and buy this token. They will have a card because for the token one big queue will be there. For here also there will be a big queue. But anyways, yeah, that's what. That was just a fun fact. So now let's come back. L&T, what they're doing is, these guys have undertaken let's say Chennai, they are undertaken to construct this metro rail project. Let's say for Chennai, for Hyderabad, and let's say for Delhi, example, fine. So for these three cities, with these three state governments, they have entered into a contract. So what you need to do is, you need to open separate contract accounts for each of these three cities. Are you clear with this? So basically, how many contracts they have entered into? 3 different contracts. What you need to do is, you need to prepare a contract account for each of these 3 contracts separately. Clear? You can't merge everything single. You can't merge everything into 1 divided by 3 and say, because Delhi Metro Rail is very big, Chennai Metro Rail is relatively small. Correct or not? So you can't say divide by 3 and everyone give me the same share. No. So contract wise, I maintain ledgers and I will track it. Are you clear? Number 1. Number 2, treat these contract account as a mini P&L account. Treat them as a mini P&L account. Meaning what? Chennai Metro Rail project account is nothing but the P&L account of Chennai Metro Rail. Hyderabad contract account is a P&L account of Hyderabad and so on. Are you clear with this? So this contract account is nothing but a mini P&L account for the respective jobs. Are you clear with this? Are you clear with this? Now, why all these things? Why all this confusion? I will tell you. Now, let us assume, we are talking about Chennai Metro Rail alone right now. Let us assume, now certain jargons you need to know here. Let us assume that Chennai Metro Rail, you know that Chennai Metro Rail is run by whom? CMRL means? Chennai Metro Rail Limited. So it's basically run by a company which is a wholly owned Tamil Nadu government company. It's a government company. Okay. So all the decisions and all, whatever decision regarding this will be taken by this company's board of directors, indirectly by the government through a company. So it's not like a department. The department is different. If you look at the railways and all, that's central government, that's a separate department. Here it's not departmentalized. They are floating a separate company and investing. The shareholders of the company are government. Government can be a shareholder, no? That's called a government company, correct? Yes. Now what happens? CMRL and is the client, correct? He is the client, and L&T is whom? The contractor, okay? Or in other words, L&T, the person who undertakes the job, is a contractor. The person for whom the contract is undertaken is a contractee. They both agree for one price. They are saying that overall, fully, you should lay this particular line, okay? Generally, what these guys do, they will not give the entire metro rail to one person. They will say, this leg alone, this particular stretch alone, I will give it to L&T. The other stretch, I will give it to, let's say, your Tata Construction or Tata Infrastructure. They will give it to multiple people so that the work happens parallelly. That's how it happens generally, all the government contracts. Now, let's say they both decide on a price. That price is called as contract price. Let's say they are agreeing for rupees 75 lakhs. Example, that's just for our example purpose. 75 lakhs and all is nothing. One crane cost itself is 75 lakh. They will be using a lot of material. I'm just giving you an example. It will run into hundreds of crores. Anyways, so just an example, 75 lakhs. Let's say they are saying if you finish the contract, so the CMRL will pay whom? Will pay L&T 75 lakhs. Let's say the period. The period is going to be 3 years, correct? The period is going to be 3 years, and let us say expenses spent. L&T is giving you this data. Year 1 they have spent 10 lakhs. Year 2 they have spent 30 lakhs. Year 3 they have spent another 10 lakhs. Clear? This is the data given in the question. Now, guys, they are asking you to prepare the P&L account for 3 years. Generally, without getting into this chapter, they are asking you to prepare a P&L account for a period of 3 years. Now, look at this. AS9 is there for group 1. Group 2 only. AS9 is not there in group 1. It's not there in group 1. Okay, it's there in group 2. AS9 in group 2 only they are having. Okay, right. Fine. So AS9, there is a standard called as AS9. Okay, that talks about revenue recognition. It's the smallest chapter standard of all, but you really can't even visualize the level of complexity it has got in real life. So how do you know, sir? When I attended my interview, I told you that Big Four interview. They asked me, which standard are you strong in? Said, I knew this. Standards and all, how we used to study was, I knew the standard without even looking at it. I know what are the contents from, this is how it starts and it goes. So I was really strong at it. So that's what I thought, so at least from a student's perspective. So I told them AS9. They said, okay, AS9. So tell me about AS9. I clearly told them the entire standard in just 7 minutes. I clearly finished the entire standard, entire structure and all. I told them. They said, excellent, very good. Now I'm giving you a real life scenario. They asked me one question and I said, sir, now only I understand that I am nowhere near you. So in real life, there is something called as Incoterms and all that has a lot of impact with respect to your AS. Actually, the audit that we are doing here in mid-sized firms is not audit. It's not at all audit. You should see how Big Four does. Audit, it will be done in certain class. That's how really you should do. Just like whatever you read, whatever you study, they exactly do it. What we are doing is not auditing. In one hand, we ourselves will put the accounts. In the other hand, we ourselves will check. That is not called audit. That is not called audit. Section 144, first prohibited service itself is accounting only. But what we do, auditor only does the accounts, all in one person. Fine. But that Big Four operates at a very big level. So yes, they can afford. Small people and all, they can't afford. So in real life, all the mid-sized people, they themselves will audit and they themselves will prepare the accounts. But only if you go to a Big Four, you will know how they will see every single accounting standard, every single standards on auditing, how they will link the two. And it's actually, it is something that, that's worthwhile experiencing. In fact, you need not go to a Big Four to experience that. Everything is available online. Or at least some basic things you will understand online. Fine. Anyways, now what does your AS9 tell you? Now, AS9, I'll tell you on a summary. It says you can recognize your revenue only upon transfer of risk and rewards. Meaning what? Only when you're absolutely certain that you will receive the amount and you have transferred, that is when you're selling some goods, your ownership, the title has gone from you to the other person. Only after that you can actually record it as a revenue in your books of accounts. Correct? Now you tell me, it takes me 3 years to transfer the title from L&T to CMRL, which means what? I can't recognize this revenue of 75 lakhs till I reach my 3rd year. Correct, guys? Correct, guys? So if I follow AS9, what will happen? Year 1, P&L account, I will debit 10 lakhs. Correct? Revenue will be nil. So what will I do? Closing stock, I will take the entire 10 lakhs. Correct or not? No revenue. So I will carry it forward. Stock only, no. Correct or not? Then year 2, what will I do? Year 2, opening stock, how much is it? 10 lakhs. Then year 2's expense, how much? 30 lakhs. Then what will I do? Again, no sale revenue. What will I do? Closing stock, 40 lakhs. Then year 3, opening stock, 40 lakhs. Then your current year expense is how much? 10 lakhs. Now year 3, I can recognize the revenue. Correct or not? 75 lakhs I will do. So what is the profit? 25 lakhs. Correct or not? So the profit is going to be 25 lakhs. Correct, guys? Guys, correct or not? Are you all understanding this? Now you tell me, basically what we did right now. Year 1, what's your profit? 0. Year 2, what's your profit? 0. Year 3, what's your profit? 25 lakhs. You tell me, this 25 lakhs of profit I earned by putting efforts across the 3 year or by putting efforts only in the 3rd year? Across the 3 year. But if I follow my AS9, it results in an uneven distribution of profit. Now just imagine you are a user of financial statement. You say, first 2 year loss means 0, means what? You are not doing any work. Huh? Yes, that's how it will look like, right? Suddenly on spike in profit, what happened? Out of the blue, 25 lakhs came for you? Absolutely not. So you tell me, this methodology of following AS9 in this particular scenario is actually not correct. Correct or not? It's actually not correct. Agreeing with me? Are you agreeing with me? So, sir, what should we do? What should we do? Sir, we should not wait till the third year to recognize the revenue. Correct? That is the solution. Now, what happened? That is why even in your accounting standards in the year 2001, what they did was they revamped it. The accounting standards board, they looked into it and they said, this is right, we are not supposed to do it. Till then it was like this only. Then what they said, even in financial accounts, they said, I'm talking about financial accounts. Fine, I'll come to cost accounts, don't worry. So what happened that they said, instead of this, let's remove this way of doing. And in case of construction contracts, that is generally contract that takes beyond 1 year. See, this problem is not there if I'm able to finish it off within a year. Why? Revenue is also in the same year, cost is also in the same year. Not a problem, no. More than 1 year if it takes to finish, then what happens? It results in an uneven distribution of profit. So what they did was, they removed this construction contracts alone from AS9 and they introduced a new standard called as AS7, construction contract. So this only gave birth to AS7 that you currently read as construction contract. Are you clear? And whatever that construction contract says, it didn't tell anything out of its own creativity. It has just copy paste from our costing, contract costing. Are you clear with this? So this contract costing is what is exactly covered in your construction contract. Now, what are they saying? What are they saying? Look, this 75 lakhs is the revenue, correct? This is called as contract price. Now, please don't follow AS9 in this area. Don't wait for the third year to recognize the revenue. Then what should I do, sir? Recognize the revenue then and there in each of the year based on the degree of completion. Based on degree of completion. Let's say in the first year, as at the end of first year, you have finished 30%. 30% of this entire contract price, you book it as a revenue. Are you clear with this? Similarly, in the next year, you have finished extra 40%. Yes, that 40% you book it here, and the balance 30% book it in the last year. Then and there you do it so that it has a matching concept. Correct? Revenue, expense, matching concept. Are you clear with this? Are you clear with this? Are you clear with this? Guys, are you all understanding this? Are you all understanding this? So this is how, this is called as percentage completion method. This is what they introduced as percentage completion method. The first thing that we followed was completed contract method. That is account only after completing the contract. This is called as percentage completion method. As and when you complete, then and there you book your revenue. Are you clear with this? Are you clear with this? Are you all clear with this? Does it make sense? Does it make sense? So in the respective year, you book the revenue so that you will have profits for each of the years, correct? You will have profits for each of the years. When you have profits for each of the year, now you will see that the profit is evenly distributed over a span of years. Are you getting it? Are you all getting it, guys? Are you all understanding? Now, have one more thing in your mind. This is quite important. Have one more thing in your mind. Okay, so before I get into this, let me give you the format of contract account. So please note it down. Contract account. Contract account. Contract account. Write down 2 material, 2 wages, 2 POH, 2 direct expenses, 2 POH. So all these things will be there. On the credit side, you have by work certified, by work uncertified. I will explain all these things. And finally, you have 2 notional profit. 2 notional profit. This is nothing but a balancing figure. Or you can also have a by loss within bracket P&L account, XXX. Either a profit or a loss can be there. Okay, clear with this? Clear with this? Clear with this? Yes. Now, put a double underline here and bring it forward. Write down by notional profit, some figure. Write down 2 P&L, 2 balance carried down. You don't worry why these are appearing like this. I am yet to explain you anything. I have not even started, so I am yet to explain you. Don't worry about it. Don't worry about it. Just note this down. I'll tell you what is what. I'll tell you what is what. Enachpa? Direct expenses. The direct expenses. This is direct expenses. This is direct expense. Okay? Guys, okay? Done? Is everyone done with this? No. Now, I told you, guys, I told you. So forget this part. Forget this part. I will tell you later. First, I told you a contract account is a mini P&L account. Correct? Yes, mini P&L account. Now, all the expenses are debited. Correct? Correct? Now, I told you what you should credit, year-wise revenue you should credit. That is proportionate to the work completed, degree of completion you should credit. Correct or not? Yes? Fine. Now, let us take an example. Now, this particular format you have noted down, correct? With this, I will continue with the original example. With this, I will continue with the original example. Now, let's say at the end of first year, let's say I am at the end of year 1. Now, I have completed 30% of the contract. I have completed 30% of the contract. Now you tell me, L&T is there and Chennai Metro Rail is there. L&T is the contractor, Chennai Metro Rail is a contractee. And what they are doing is called as a contract, and for which the price is called as a contract price. Are you clear with all these things? Now, this 30% completed, no? Who will decide? Who will decide? Now, you just put yourself in the position. If I am L&T, that is the contractor, what will I do? I will say I have finished more. Correct? I will say I have finished 70%. Correct? Yes. If you are in the position of the contractee, that is the Chennai Metro Rail Corporation, Chennai Metro Rail Limited, they will say, no, you have not even finished 10%. Correct or not? There will always be a clash. So yes, so what they do here is, in this case, these guys both, they come together and mutually appoint a third person who is called as an architect or a valuer. Architect or a valuer. So what these guys do is, these guys together, they sit and appoint one third party, a neutral party called as a valuer or an engineer or an architect. What this guy does, at the end of the year, he comes, he inspects the place and he will certify the degree of completion. So he is the guy who gives this. He is the guy who says, okay, so 30% is complete, take it off. Are you clear? Are you clear with this? So now what I will do, 30% is complete. Guys, 30% is complete. What is the contract price? 75 lakhs. So now what I will do, 75 lakhs into 30%, how much is that? 22 lakh 50,000. I will take this as work certified. So work certified is nothing but the amount of revenue that can be recognized for the respective year. Are you clear with this? Are you clear with this? Or in other words, can I say work certified is nothing but contract price into degree of completion, correct? Or degree of completion, if you want to find out, you can say it's work certified by contract price, correct or not? Guys, are you understanding this? Are you all understanding this? Yes, are you all understanding this? So basically, your contract price on that, if you apply your degree of completion, you will arrive at what? Work certified. Are you clear with this? Guys, are you all clear with this? Yes. So what I will do here, so this figure, can I say, this is similar to sales, correct? Guys, correct. For that particular year, how much is the revenue that needs to be recognized? Are you clear with this? Are you clear with this? Yes. And for that year, whatever is the expense, I will debit it on the debit side of I will debit it to my contract account. Are you clear with this? All these are expenses with respect to that particular contract. Guys, understanding this? Right? Perfect. Done. Now, what is this work certified? What is this work certified? Work uncertified. What is this work uncertified? Now I'll tell you. I'll give you an example. Now, let's assume what are the work involved in constructing this particular metro rail. Obviously, if you know, you guys will be engineers. So I'm not asking like that. Overall, or overview. First, one tunnel should be dug. Yes, correct or not? Whether or not it is going underground or overground, one tunnel they will dig. Yes, whether they dig or not, they will close the road. That's the first step. Okay, correct. Anyways, now what they will do is one tunnel they will dig. Okay, let us assume, why, but digging a tunnel is not easy. Digging a tunnel is definitely not easy because you have a road here. Generally, if you see, metro stations will be on both the sides, correct? So under that, there will be a subway and tracks will be laid. So when you are digging a tunnel, it should be like, it should go like this and come like this without disturbing the density of the road. So that's why they first do something called as a soil test and all. If you've seen that one tripod stand, they will keep inside, they will do something, they will see whether the soil is good enough to hold it or not. So without soil test and all, they cannot do. Government can't take chances. Else if the entire thing collapses, then that's a huge loss of life, financial loss of life, correct? So they will never take the chances. You know, once in this Mount Road, ஒரு பஸ் வந்து ஓட்ட வட மாதிரி டொங்கு உள்ள வந்துருச்சு. Suddenly that crack happened on the main road, Mount Road. It happened. One bus, suddenly it was standing at the bus stop. ஏறவன் என்ன நினைச்சிருப்பேன், யோசிச்சு பாரு, என்ன வண்டி இறங்கிடுச்சு அப்படின்னு. So completely it went down. நம்ம ஊரில் தான் அதெல்லாம் நடக்கும். Okay, completely it went down. Fine. So things like that can also happen. அப்போ தான் உடனே யாரோ கேட்டான், அந்த இடத்த மெட்ரோ ஒன்று கட்டலையே அப்படின்னு கேட்டான். அடப்பாவி, மெட்ரோ கட்டுறதுனால யாரோ வருது இது. Okay, fine. Anyways, so now if you look at this, let us say they need to dig a tunnel. Guys, let's assume, example, work involved, let's say tunnel. Okay, tunnel. If they finish digging the tunnel, they will say it is 30% complete. Who says this? Valuer. You finish digging the tunnel, I will certify 30% complete. And next, if you lay the tracks, I will say another 20% is complete. Then balance work and all is there. Fine. Now what happened? As at the year end, what I have done? I am whom? L&T. What I have done? Tunnel I have fully dug. Complete tunnel I have dug and I have packed it also. It's neat. It's completely done. And I started laying my tracks. What I did was, track, you guys know, no, it will have two lines, correct? Left and right, correct? What I did, first I wanted to lay the left line, so I laid it, correct? And before I could start my work on the second line, the year end got over and this fellow came for inspection, correct? So now what he did, okay, tunnel, is it complete? Yes, 30% complete. Track, is it complete? No sir, only one side is done. With one side you can't have the train, no, the train cannot go, right? So only in Ramoji Film City you can have, train will run on road. Have you seen that? Tire la vechu ottittu povanga train. That is only for films, but here in real life you can't do it, correct? Now he says, sir, one side I have laid, no, instead of 20% you said for 10% complete. Will he do that? He will say either 0 or 20. In between, I will not certify anything. Make this track workable. If you also lay this, then I will come and say it's 20% complete. So now you tell me, on the debit side of my contract account, I would have incurred cost with respect to tunnel, and I would have also incurred cost with respect to one side of the track. But on the credit side, I would have recognized revenue only with respect to the tunnel, but this went unrecognized, correct? Or in other words, can I say units produced but unsold? This is nothing but similar to your closing stock. Are you clear with this? So value of work uncertified is nothing but your closing stock. Guys, are you understanding it? This is a prime example. Are you all clear? This is what happens in real life, no? Correct. But I am not sure whether they will lay one track first and all. But as an example, we are all laymen when it comes to all this engineering works. I am telling you it's some way in which you can understand. That's all. Fine. So one track and all he will not certify. Put both the tracks. So within this particular activity, there is no partial completion. Are you clear? There is no part certification and all is never there. Are you clear with this? So that's why you have something called as value of work uncertified. It is similar to your closing stock. Are you clear with this, guys? Now at the end of year 1, so sales I have done, closing stock I have done, debit side items I have done. Let's say I get a profit. Is this profit an actual profit? No. Why? I am just at the end of year 1, correct? I don't even know whether in the future years I will make a profit or not. That's why we use the word notional profit. Are you clear with this? Now, there could also be a loss at the end of year 1. If there is a loss, it's a loss only, actual loss. Why? Concept of conservatism, prudence. Loss recognized fully. Now, if it is a profit, what? Can you take the entire amount of profit to the P&L account? No. Why? Why? If you see in your Companies Act, once again, I think today is more of a loss session. Okay, Companies Act, if you see once again, there is one separate chapter for dividend. Chapter na, don't think chapter in your study material. Chapter na, act is divided into multiple chapters. Okay, there is one separate chapter, I think 123 to 127, a chapter. Fine. In that chapter, in detail, they would have given many things about dividend and all. Dividend. Now you tell me, dividend can be paid out of your legal profits, that is P&L, free reserves, your P&L account or general reserve and all that. Assume from my contract account, I transfer the entire value to my P&L account. It becomes a legal profit. And I say I have a legal profit. The shareholders will say, you have so much profit, pay me dividend. Yes, they have AGM and all, no? And dividend is one of the 4 main items that gets discussed. Correct or not? Yes, you know general items of business and all. Yes, fine. One of the 4 items is declaration of dividend. Correct? Once the dividend is declared, you can't go back. You need to pay it. Yes. Now what they do is, now see, you can actually link all these subjects together. In accounts, costing, and your law. First 3 papers done. Correct? Correct, first 3 papers. Tax also, I think here and there we have done somewhere. First group itself, you can actually link it everywhere. If you link and study, it will be super fun. Anyways, come back here. So now what happened? Let's assume you transferred everything into your P&L account and you issued dividend also. Next year what happened? There was a sudden spike in the price. You started incurring loss. What will you do? Call your shareholder, give back the dividend. Can you do that? Can you do that? Dividend once paid, dividend once declared cannot be taken back. It cannot be taken back. But I think it's applicable only for final dividend, I guess. I am not sure about it. Interim dividend, legal. But forget, once you credit, it's his own money. Yes, company is different from the shareholders. Can you go and ask him back? Can you go and ask him back? Absolutely not. So what they do is, they don't transfer the entire amount to the P&L account. They only transfer a portion to the P&L account, and balance they keep it in the contract account itself. Why? In case there is any unforeseen losses and all in the contract, it can get offset. Are you clear? So the problem here is, what is the amount of profit that needs to be taken to the P&L account? Are you clear? What is the amount of profit that needs to be taken to your P&L account? So go to your material that I have given you. Go to the material that I have given you. Now in this I would have given some formulas. Now if your degree of completion, who tells you the degree of completion? That valuer, correct? If your degree of completion is less than 25%, that is work certified. If it is less than 25%, don't transfer even 1 rupee to your P&L. Retain it here only, because you are just taking baby steps, initial stages of your project. Are you clear? If your work completed, work certified is 25% was less than 50%, what you will transfer is 1/3 of notional profit into cash received by work certified. Are you clear? Are you clear? This is a formula that they have given. If you have completed 50% or more, but less than 90%, instead of 1/3, make it as 2/3. 2/3 of your notional profit into cash received by work certified. 90% and above, there is some separate calculation that we will see later. But remember one thing, this step is not done in your ICAI study material. Okay, this step is not done in your ICAI study material. Now, in our earlier version, I think 3 attempts or 4 attempts back, what happened, in that study material, they were having all this. Suddenly, they removed it. Now, whenever they remove something from your syllabus, it comes by way of a notification. They didn't come by way of a notification. Suddenly, they just removed it. And from then on in exams also, they are not testing you on this. Just to be safe, I have just told this to you. Are you clear with this? It's not there in your study material, but how much amount to be taken? They stop at notional profit. All these sums, what they do is they stop at notional profit and leave it there. But how much amount to be taken to the P&L account is something that you guys need to do actually seeing. So if the question doesn't ask you, you also leave it only till notional profit. Are you all clear with this, guys? Are you all clear with this? Yes. Are you all clear with this, guys? Yes. So basically, contract account is nothing but a mini P&L account, correct? Mini P&L account. So for the respective contracts, debit side expenses, credit side, what are the 2 items you will have? Work certified, that is similar to your sales. Work uncertified, that is similar to your stock. That is similar to your stock. Are you clear with this? Are you clear with this? With this, you will arrive at a notional profit. If it is a notional profit, what you will do, based on the degree of completion, you will only take a portion to your actual P&L account. If it's going to be a loss, you will take the entire figure to your P&L account. Are you clear with this? Are you clear with this? So this is about the story of contract costing, how to do it. Are you all clear with this, guys? Are you all clear with this? Shall we get into the sums? Shall we get into the sums? Yes. Shall we do question number 1, guys? So the following particulars are obtained from the books of Vinayak Instruction. Okay, Vinayak Instruction as on Vinayak Mahadev. Yes, as on March 20 X1. So plant and equipment cost is given, vehicle cost is given, details of contract which remains incomplete, incomplete as on 31/3/21. So they have given contract numbers V20, V24 and V25. This is the seat number stater. Okay, so final sales value, basically what is this? Contract price. They have given estimated final cost, they have given it for some reason. Wages, material, overheads excluding depreciation. Okay, then total cost to date. I think this is the sum total of these three. Guys, tell me, no? What, you guys are protesting, huh? You guys are protesting, sir? Hey guys, please. If you add these three, you get it, no? Correct. Then value certified by architects. What is this? Work certified. They have given. They have given progress payment received. This is nothing but cash received. Okay, fine, right. Then depreciation on plant and equipment should be charged rate of 20% to the 3 contract in the proportion of work certified. So you apply 20% the value of all the machinery and all, you'll get the total depreciation, apportion it in the ratio of 7.2 to 4.2 to 2.4. Clear? And work in progress as would appear in the balance sheet as at 31st March. I'll tell you what is this work in progress and all. Okay, but first, can we just do this, guys? What you need to do is very simple. Your debit side, all the expenses. Credit side, you need to put work certified. Work uncertified, I think it's not given, so put it as 0. Clear? Find the value of notional profit. Then, based on the degree of completion, you should decide the amount to be transferred to the P&L. Now, degree of completion, is it given? Is it given? Is it given? Can you find out? How will you find out? Work certified by contract price. Brilliant. That's all is the sum. Let's quickly finish it off, guys. 10 minutes, that's all. We will finish it off. Let's quickly finish it off. Shall we? Yes, let's get started. Let's get started. So basically, this sum is what? In a single year, you have 3 different contracts. Okay, that is what this sum is about. In the next sum, we will be seeing single contract for 3 different years. So across the life of the contract, how we are going to account. This sum, single year, 3 parallel contracts, I need to account for it. So shall we get started? So this is what? Question number 1 on page number 96. Question number 1 on page 96. Please write down. Question number 1, page number 96. Okay, done? First, write down step 1. This depreciation part, we will finish it. We will apportion it. Why? Because only after you apportion the depreciation, you will get the entire contract accounts debit side items. Now, all other items are given. So, we need to do it. Clear? So, write down. Step 1. Step 1. Depreciation apportioned to the 3 contracts. To the 3 contracts. Okay. Now, first, guys, write down number 1. What is the asset value? Asset value, how much? How much? Now, for both the value, for both 4,90,000 and 2 lakhs, they have given the same rate only, 20%. So, you can add the 2. So, write down 4,90,000, 4.9 lakhs plus 2 lakhs. How much is it? 6,90,000. Next, depreciation. Depreciation. How much is it? 6.9 lakhs into 20%. Figure 138,000. Yes, clear? Now, this 1,38,000 rupees of depreciation should be apportioned in what ratio? Work certified. How much can I say? The ratio of 72 is to 42 is to 24. Correct? So add it up, add the 3, how much you get? 72 plus 42 plus 24? 138, correct? Yes, so don't simplify, just directly you do. So it's going to be, so V20, V24 and V25, sorry, V25, correct, V25, how much? 72,000, 42,000 and 24,000. Yes guys, clear? Okay, fine. So now we've got this particular item, the debit side item for this depreciation. So shall we just quickly finish it off? Yes. So let's get started. Come on. Write down step 2 contract account. Step 2 contract account. Now what you do is prepare a multi-columnar contract account. Particulars 3 columns on the debit side, particulars 3 columns on the credit side. Somehow try to squeeze it. We will write rupees in thousands. So that you just need to write 3 figures, no? Always. Correct? Lakhs, if you write rupees in thousands, maybe let's try doing it. Sorry. If you write the figures in thousands, it's going to be 2,40,000. Instead of writing it as 2.4 in lakhs, you can write 240,000. So you'll only need 3 figures max. So at times, if it exceeds 10 lakhs, you need 4 figures. That's all. So let's plan the space. If you want, you can also put it in lakhs. I don't mind. But if you put it in lakhs, then all these items and all should be in decimals. 0.72, 0.4. That I didn't want. That's why I'm saying this. Okay. If you want, you can also put it in lakhs. Absolutely no problem. Okay. Right. So now pay some more correct. Tell me, what was the comment? Okay. Nothing that you should know. Okay. Okay, fine. Write down V20, V24 and V25. Similarly here, V20, V24 and V25. Yes? Okay. Okay guys, shall we start? Hello? Yes, so what are the debit items? First, 2 what? Material irukka? Oh, avanga kudutha order le polame. 2 wages. How much? So within bracket write down rupees in thousands. That is very important. You should write down. So tell me 240, 200, 120. Guys, it's all given in the question. Just do it. Then 2 what? Materials. Figure 100, 110, 44. Then 2 overheads. They have clearly given excluding depreciation. That's why we are calculating depreciation separately and parking it. Are you clear? Fine. How much? 144, 146 and 58. Okay. Then 2 depreciation. How much? 72, 42 and 24. Fine. Then credit side. By work certified. 720, 420 and 240. Right? Then by work uncertified. Nil. Correct? So now total it. Year-wise total it. Please year-wise total. Tell me debit side or credit side totals. You should only tell me. First year, debit side total, credit side total. Hello? Credit side total 720. Abba what? What is 164? 2. Notional profit carried down. How much is it? 164. Pencil circle. Yes, pencil circle. Then V24 debit side, credit side. Debit side, okay, so there's a loss. How much? So what is the total? 498. So which means by what? By loss in podadinga. Loss account by costing P&L. By costing P&L, how much is that? 78. Okay, done. Next, so the total is going to be 498. Perfect. Then 246. How much? 246. Debit side total, credit side total. Debit side or credit side? Debit side total, pa. 246. Which means 6 rupees is a loss, actual loss. Are you clear with this? So, how much profit to be transferred? It applies only with respect to V20, correct? Because the other two you will take the full loss, correct? Yes, guys. So come here and write down. By notional profit, how much is that? 164. These two will not have anything. Out of this 164, how much profit I should take to the P&L account? So write down 2 costing P&L and 2 balance carried down. This is what we need to find. Correct, guys? Hello? Are you all understanding this? Are you all understanding? Yeah? Fine. Now, you tell me, we'll just go to a working note here. Put a working note and come down. Write working note. Transfer of profit to costing P&L for contract V20. For contract V20. Now, you will transfer your profit based on what? Based on what? Degree of completion. Correct? Degree of completion. Now, degree of completion. First, degree of completion. How will you find out? It is nothing but work certified by contract price. How much by how much? 7.20 divided by 8.00. How much is that? 90% complete. Clear with this? Are you clear with this, guys? Are you clear with this? Yes. Are you clear with this? Now you recall the dabba. The dabba we did. Up to 25% nil. 25 or more, less than 50, it is going to be 1 by 3 into notional profit into cash received by work certified. More than 50, less than 90 is going to be 2 by 3 into notional profit into cash received by work certified. 90 above, you have some formulas. You have some set of formulas. Under that, I will give you the formula. What that is. So, the formula that we will be using is the amount to be transferred to costing P&L will be estimated profit into work certified divided by contract price into cash received by work certified. I will give you the logic and all little later. Now, first, what is estimated profit? Estimated profit is nothing but for the entire contract, what is the total profit that I am planning to make? Can I say this is nothing but estimated final sale, contract price minus estimated final cost? These two are given. So, 8 lakhs minus 6 lakh 40,000. Correct or not? Correct or not? So, 8 lakhs minus 6 lakh 40,000. Correct, guys? 8 lakhs minus 6 lakh 40,000. How much is that? It's going to be 1 lakh 60,000. Correct? Correct. Estimated profit is 1 lakh 60,000. Correct, guys? Yes. Now, work certified by contract price into cash received by work certified. Now you tell me this 1 lakh 60,000. You tell me, guys, is this the profit for the entire contract or only for 90%? It is the profit for entire contract. So what I am doing is, if 1 lakh 60 is the profit for entire contract, how much should it be with respect to the work certified? So I am multiplying this with work certified by cash price. Are you clear? Contract price. Are you clear with this? Are you clear with this? Then as a matter of extra prudence, what we do is, we are not taking this figure. We are saying out of this, only you consider the cash received profit. That is cash received by work certified. Ideally, he should have paid you whatever is work certified now, but he will not pay. He will retain some money. That's called as retention money. He will retain that. Let's say you would have paid only 95% of whatever he has, whatever work has been completed. Are you clear with this? So as a matter of extra prudence, what they do is, they multiply this with cash received divided by work certified. Cash received by work certified gives you what? The cash received profit. Are you clear with this? So here the solution is going to be 1 lakh 60,000 into what? Work certified is how much? 7 lakh 20,000 divided by 8 lakhs multiplied by 5 lakhs divided by 7 lakh 20,000. Correct? 7 lakh 20,000. Are you clear with this? Are you clear with this? Fine. So what is the final answer? What is the final answer? How much is this? Rupees 1 lakh. Are you all clear with this? So what is the amount that needs to be transferred to your costing P&L? 1 lakh. Ideally, this is not done in your study material and all. So, but anyways, just for safety purpose, let's do this. So it's going to be how much? 1 lakh. So here write down 100. Nil, nil. So what is the balance carried down? 64 rupees, pencil circle. 164, 164, nil, 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 nil. Are you clear with this? Are you clear with this? Guys, are you all clear with this? Are you all clear with this? Is everyone clear with this? Ideally, this part is not done in your study material. Not done in your study material, but let's not take any chances. That's why I'm telling you all this. Are you all clear with this? Contract costing. So I told you in that chapter, So which industries use this contract costing? Where they undertake a particular job that takes beyond 1 year for them to complete. Now in this scenario, what is the general problem? What is the general problem? I told you the revenue recognition is a problem. If you recognize your revenue as per what your AS 9 says, then you will recognize your revenue only after the completion of contract. In our example, at the end of year 3. But instead, you would have spent the entire 3 years of efforts and money. Now you would have booked 0 profit in year 1, 0 profit in year 2, suddenly 25 lakhs of profit in year 3. This results in an uneven distribution of profit. So what is the way out? So they actually revamped this thing, the whole thing. Even your accounting standard board in in the year 2001, they removed contracts, the revenue recognition for contracts from AS 9, and they introduced a separate accounting standard called as AS 7. And that accounting standard was nothing but whatever we are studying in this chapter called as contract costing. So what is the way out? They are saying that don't postpone your revenue recognition till you complete the contract. Instead, what you have to do is recognize your revenue then and there on the basis of degree of completion, that is called as work certified. Are you clear with this? So in this backdrop, we saw how a contract account will look like. How a contract account will look like. It is nothing but a mini P&L account of a particular contract. So on the debit side, you will debit all your expenses incurred for that particular contract in a particular year. On the credit side, you will credit sales, that is nothing but the value of work certified for that particular year. Are you clear with this? And who will certify this? Who will certify this? A third party called as an architect or a valuer or an engineer. So mutually agreed by between the contractor and the contractee, and the overall sale price, sale consideration for the entire contract is called as contract price. So these are some jargons that you need to understand. Let's say this year they have the entire contract value is 100 crore. This year, as at the end of this year, 30% is valued at certified. It's valued as complete. Now 30 crore will be what? I will recognize 30 crore as year 1 sale, correct? But you tell me logically, will the contractee, that is the client, Chennai Metro Rail Corporation, will they pay L&T entire 30 crores? No. Why? Because this 30 crore also includes some profit till whatever they have done. So what these guys will do, now till now whatever profit I got, that is enough. So they will abandon the contract and they will leave off. Is that fair enough? Absolutely not. So what they will do, they will say for every value certified, for every work certified, I will pay, let's assume 95% of that. Meaning what? 5% they will retain with them. That actually belongs to only the contractor, but they will not release the payment immediately. They will hold it till they complete the entire contract. So this 5% every time whatever they retain is called as cash retention. And this 95% is only cash received by the particular contractor. Are you clear with how it works? So certain jargons you need to know. The entire project is called as a contract. The consideration is called as contract price. The person who does the contract is called as a contractor. The person for whom the contract is done is called as a contractee. And then the value of work certified, it means what? The degree of completion into contract price, that is called as a value of work certified. And you also have work uncertified. What is it? Nothing but your closing stock. I told you the cost is spent in respect of which revenue is yet to be recognized. Are you clear with this? And we have seen this. I told what example I told? What example I told? Track. If you go to Tirupati, have you guys gone to Tirupati? What they do is, now there will be too much of crowd, What they will do is, they will put this motta, they will put only half the motta. And they will go to the next person. You don't know that? In the padatha sirutha padatha kuda varulla, paadi motta mottu they will do. You know why? They want to retain the client. So paadi motta poite, if they go to the next person, that person will not go out with half the head, He will not go. So they will wait. Really this happens in Tirupati. Okay, really they do this. In Tirupati, they will put only half motta. That's a business strategy. You don't know. Our Indians are known for this. I'll tell you. If you go and recall, you will be knowing. And the Vasul Raja MBBS padam varuma. அந்த மூவில that guy one guy will be sitting on a wheelchair. No, what is his name? Anand. So enna பண்ணுவான், Karunas will actually be doing a haircut, no, and they will be having a discussion and he will say, ஏய் நானும் கிளம்பி வரேனா, டேய் உன் ஊர் என்ன திருப்பதியாடா, பாதியிலே விட்டுட்டு போற அப்படின்னு சொல்லுவாங்க பாத்தியா. Actually in Tirupati they do that. It's a business strategy. If you want, you research and see. பாதி முட்டை போட்டு போனா definitely the person will not go out, because with half the head shaven and all, they will not go out. It's a business strategy you and I should know. So next time when you go to Tirupati and if you have the habit of shaving your head off, shaving your hair off, sorry, yes, then be careful. So go for the person who does a full muttai and not this half muttai and all. Okay, clear with this? So basically that is the reason why these guys will not pay the full money. So half track and all is not enough. Half track vachchu enna panna mudiyum? So both the lines of the track should be laid. Only then the coach can run on it. Clear with this? So this is about it. This is about the Tirupati Mottai area anala. Okay, come back. Yes, are you clear with this? So basically in this context we saw one sum. So what we saw was we prepared the contract account, and one more thing, the profit that you get here is called as notional profit. Why is it called notional profit? Because the contract is yet to be completed as a whole. So for matching principle, I am recognizing some revenue and knocking off some expense. So this profit is called as notional profit. So will the entire amount of notional profit be transferred to your P&L account? Absolutely not. Reason, if you transfer to your P&L account, it becomes a legal profit which is available for distribution of dividend and all. There are some legal issues there. Once you issue the dividend, you can't take it back. Not just dividend, there are certain other things. If you legalize your profit, again you can't take back. So what they do is they only transfer a portion to the P&L, and the balance they retain it in the contract account itself. Are you clear with this? In the contract account itself. Now, how much amount of profit that needs to be taken to the P&L? This is not there in your study material, but I have given you the formulas and all. If the percentage of completion is less than 25%, don't take any figure to the P&L. Retain everything only in your contract account. If it is more than 25%, up to what? 50%, then the amount to be taken to the P&L will be 1/3 into notional profit into cash received by work certified. Why this cash received by work certified? They only want to take 1/3 of the cash received profit. That's why cash received by work certified. If your retention ratio is 5%, cash received by work certified will be 95%, correct? So only to the extent of cash received they want to take it. Very extreme prudence. Now, if your degree of completion is over and above 50%, but up to 90%, now the profit to be taken is going to be 2/3 into notional profit into cash received by work certified. If it is 90% and above, there is some other formula that we have already done, something called as estimated profit method and all. So it's going to be estimated profit into work certified by contract price into cash received by work certified. There are 3 other formulas, but since it is not very much relevant for you, I am just leaving it there. Are you clear with this, guys? Are you all clear with the entire summary of the chapter? Whatever we have done till now, I have done it. Are you clear with this? Now, there is something called as WIP. One second. There is something called as WIP. In fact, in the previous sum that we did, they had asked for WIP and all, and I didn't, I told you I will do it today. Okay. Now, first to understand, why do we have this WIP? Now, this WIP is not the process costing's WIP. Okay. Please don't think that this is process costing WIP. I will tell you the formula for WIP. Please note it down. Work certified plus work uncertified minus cash received minus balance in contract account. This is called as WIP. I'll tell you the logic to the extent it's relevant. I'll tell you. Work certified plus work uncertified minus cash received minus balance in contract account. Sir, first of all, why are we doing this? Something called as WIP. Guys, this is nothing but your balance sheet items. Guys, this is nothing but these are all some of your balance sheet items and you are merging it together. First of all, I will tell you why this is arising. Try to understand to the extent possible. If not, you can just use this formula directly, but I don't like asking people to mug up formulas. In the entire subject, you'll know what have I asked you to mug up? AH. That's all. Simple, no? So if someone asks you in costing what is the formula you need to remember? AH. That's all. Life is simple. Only one thing that you need to remember. So that's why I'll tell you the logic for this formula. Now basically what happens, every year what you are doing, you are recognizing the work certified as your revenue. Correct? Yes guys, correct or not? Why? Because you have a separate methodology, you have a separate thing called as a contract costing, wherein you will recognize the proportionate revenue. Are you clear with this? Hello, are you clear with this? Yes. But then, now you tell me, when you do sales, what will be the entry? You have a debtor, credit sale you made. Entry will be what? Debtor account debit to sales. Correct? But then here, what I do is, to work certified is similar to my sales account. But here, year wise, can I call him my debtor? No. Debtor, I can call him a debtor only at the end of third year. Correct? So which means every time what I do, I actually have one credit, but the corresponding debit is not there. Are you clear with this? So till the end of third year, what I do is, I don't call him a debtor, I call it as a WIP. Are you clear with this? It's basically a debtor only, but I call it as a WIP. So what you do is, all accounts in respect to this contract will be merged together and you will represent this as a WIP asset. WIP means what? The project is ongoing. So only if it completes at the end of third year, what you call WIP turns into a debtor. Are you clear with this? So basically, then why this formula, sir? Very simple. This work certified is there, no? Correct? This is the amount due from him. Correct? Minus cash received. Amount whatever he has paid. Correct or not? Yes. Plus stock that I have, that is with respect to him only. Correct or not? Minus the amount that I am yet to transfer it to my P&L account. Correct? These are the four hanging things with respect to my contract. I merge all the four and represent it on the asset side called as WIP. Are you clear with this? This is nothing but work certified minus cash received. This is the amount that it is due from him, plus work uncertified, that is cost spent, that is yet to be recognized as revenue, minus whatever is the profit that I'm yet to transfer it to my P&L account. This is the liability item, no? Correct? So when I'm representing it on the asset side, I am subtracting it and net it off. I call it as a WIP. This WIP is nothing but your debtors balance only, debtors and stock balance put together. If you see at the end of third year, guys, you tell me after the end of contract, work certified will be equal to contract price. Correct or not? Work uncertified will not be there. Balance in contract will not be there. Correct? Balance in contract. Once the work is completed, what I do is I actually recognize my entire profit. Cash received, let's say I've received only 95% of that, which means the balance 5% is only due, that is called your debtor. Correct or not? At the end of third year, it becomes a debtor. Are you clear with this? Till that time, I can't name it as a debtor. I call it as WIP. As simple as that. 4 ledgers merging it together. Are you all understanding the logic for this? So don't mug up. It's not required to be mugged up and all. It's very simple and straightforward. Are you all clear with this, guys? So work certified plus work uncertified minus cash received minus balance in contract account. Are you clear with this? Are you clear with the logic? Yes. And at the end of third year, what you call as WIP actually becomes your debtor, and whatever amount is due to him only gets parked here, that you know, and you will collect it from him later. Are you clear with this? That's about the entire concept. So this question number 1 that we did, I think the WIP calculation alone is pending. Let us get started with it and proceed forward in the journey. Let's do it. So question number 1, let's continue. Question number 1 continued. Okay, so what should we do now? I think it's step 3, right? Guys, step 3, right? So please write down. Step 3. Step 2 or step 3? Illa, step 1 was depreciation calculation. Step 2, contract account. Step 3 is your valuation of WIP. Valuation of WIP. So don't think this WIP is your process costing WIP and all. Don't mistake for that. Are you clear with this? That's why I'm giving you logics for everything. If someone says the subject is difficult and all, please don't pay heed to it. You have spent a lot of time, and trust me guys, I'm telling this from the bottom of my heart. You guys are very sincere. I tell this because you guys have been attending for the last 9 days. 10th day you are sitting here. you are still sitting here, it means that your only objective is to clear your exam. So which means you guys are very sincere, irrespective of how much ever you think about yourself. You think, no, I mean it. I really mean it, irrespective of your level of preparation. You guys are still sincere. That is the reason why you guys are still here today and you are attending the class with the same amount of concentration. And I really appreciate that. I really appreciate that. That's a very good sign. Show that dedication. I'm telling you, it will never fail you. It will never fail you. Anywhere you go in life, you take up something, irrespective of what people think about you, show the same level of dedication. One day or the other, you will automatically get what you want. In fact, you will get more than what you even imagined. That is the power of dedication and consistency. One day peak, another day rock bottom is not going to help you. That show that consistency throughout. Trust me, even now is not too late. You still have 1.5 months for your exam. Show the same level of consistency. You tell me, had you not attended this class, any class, at least this particular time you are spending for studying, else what will you do? You will be slightly disorganized. I'm not saying only if you attend my class. I'm not saying my class. Any class for that matter, I'm telling you. Now, after the classes get over also, maintain that. Please maintain that. Have the habit. Put a timetable. This time I will study. That's all. If someone is watching at me or not, I am least bothered. I am going to put my heart and soul and do it. Have the same level of dedication. This 10 days you would have been habituated to a few things like whatever I told you in terms of presentation and all. Continue the same. This doesn't stop with your exam. This doesn't stop with your classes. Continue the same till your exam. Show the same level of dedication. I am telling you, this attempt, all of you will clear each and every subject with very good marks. That's what you should aim for. Put your heart and soul and you will get it for sure. Clear? And don't leave it immediately. Class mudija odane, don't just leave it there. It has to continue. You know the level of preparation for a particular subject, one particular subject, 2, 3, 4, whatever it is. Accordingly, you mix and match, you sit and then you decide. Clear? For some people, group studies will be, it suits them. For some people, solo studying will be useful. You know your strength and weakness. Analyze it and do it accordingly. I will not say group study is bad or good. I am a type of person who used to study alone and then I discuss with my friends. Now, I am not, for that doesn't mean that group studies is bad. I have seen students who do this group studying properly. They do this group studying really well. What they do is, one full subject, what they do is, they divide it into 4. So one student will study only 1/4 of the subject, the other students will study only 1/4 each, and then they will teach the others whatever they have learned. This way, in a little span of time, you will cover the entire subject. That works. It didn't work for me, but I have seen people for whom it has worked. So, of course, now is not the time for you to experiment all that, but whatever suits you well, you know it. You are the best judge. Don't keep on asking people for their suggestions. If you ask more suggestions, you will only get confused more. So focus on what you do, what you think is the best thing for you. Automatically, whatever needs to come your way will definitely come. No one can take it away from you. Clear? So let's do this WAP evaluation. So write down particulars in 3 columns. How many contracts are there? 3 contracts. So write down particulars and 3 columns. V20, V24 and V25. Yes, first, work certified plus work uncertified minus cash received minus balance in contract account. Yes. Now, tell me guys, year wise you tell me, or maybe you can also go column wise, not a problem. So tell me, work certified, how much? 720, 420, 240, fine. Work uncertified, I don't think it's given in the question, nil. Cash received. How did you compute cash received? They have given it, oh yes, progress payments received. So tell me how much? 500, everything is in thousands, no? So 500, tell me, no, please, 320, then, and 200, and 200. Then, what is the balance in contract account? 64, nil and nil, because these two have losses that has already been recognized. So, the amount yet to be recognized is only this. So, net it off and tell me how much? So, WAP balance is going to be 156, 100 and 40. Clear with this? Why we got this? Are you all clear with this, guys? I told you the logic also for WAP. Yes, are you all clear with this? Fine. With this, shall we move to the next question? Shall we move to the next question, guys? Yes, completed. Yes, completed. Everyone is completed. Shall we move to the next question? Yeah? Done? Let's move to the next one. Let's move to the next one. Please take question number 2. It's on page number 97. Question number 2, page 97. Guys, question number 2, page 97. Shall we get started? Shall we get started? Now look at this. The following information relates to a contract for rupees 75 lakhs where the contractee is paying 90% of the work done as certified by the architect. So cash received year-wise will be what? 90% of the work certified. Are you clear? Which means basically, in other words, they could have also given the cash retention is 10%, meaning what? The cash received is 90%. Look out for the wordings. They can give you any kind of words. They can give you any kind of words. CA exam, don't think the exam will also be having the same type of wordings. They can change it. Know it conceptually. Fine. Now what they have done, year 1, year 2, year 3. So what they have done, this contract takes what? 3 years to complete. So the last sum was 3 simultaneous contracts in a single year. Now in this sum what we are going to talk about a single contract, but we are going to travel along the journey of the entire contract for 3 years. Fine, are you clear with this? There is one small value addition here. Let us see if you are able to get it by yourself. Now what they have given, year-wise, material, labor, direct expense, indirect expense. These are the debit side items given. Credit item, work certified, work uncertified. Work in progress, uncertified, means don't think this is WAP. It is work uncertified, clear? Then plant issued, they have given one thing, 1 lakh rupees. Fine, they have issued 1 lakh rupees worth of plant at the beginning of year 1. The value of plant at the end of year 1, year 2, year 3 was respectively 80, 50 and 20, meaning what? Perfect, depreciation. So at the beginning of the year, I actually introduced the plant. It costed me how much? It was worth 1 lakh. At the end of year 1, it became how much? 80,000, meaning what? 20,000 is the depreciation for year 1. Year 2 beginning it was 80,000. Year 2 end it became 50,000. So year second year depreciation is 30,000. Year 3 depreciation 30,000 once again. How you got 30,000? 50,000 minus 20,000. Are you clear? So basically what they are doing is they have given the WDV, opening and closing WDV for each of the year. You reduce the two and you will get your depreciation. Are you clear? So depreciation can either be given as a percentage or this way also they can give you. Are you clear with this, guys? Are you all understanding this? Fine. So prepare contract account for all the 3 years and show the relevant figures in the balance sheet. Meaning what? They are asking you for WAP, relevant figures are those 4 figures netted off. Net on the asset side you show it. That is nothing but debtor balance. That I don't call it as debtor till the end of 3rd year. Are you clear with this? Shall we do the sum, guys? Fair enough, easy sum. When you are doing, I think you might make a mistake somewhere. Let us see how well you guys are going to do it. Shall we get started? Shall we get started? Now, what you need to do, guys, what you need to do, prepare a contract account for year 1, year 2, year 3, or see, if you see, the particulars and the particulars on both the debit side and credit side are going to be the same. So do some smart working. What you can do is, you prepare a single contract account with multiple columns so that you need not repeat the particulars again and again. Saves a lot of time in exam. Clear? So, but one condition, go only column wise, because you might have some balance in your contract account and all. Do it column wise. Year wise you do it. Are you clear with this? Don't make a mistake of populating the figures simultaneously. That is okay for the previous sum because they are 3 independent contracts. Same year. Here only after you finish year 1 you will go to year 2. Are you clear with this? So that is something that you guys need to understand. Yes, shall we get started? Yes, let's do this. So write down question number 2. What's the page number? Page 97. Okay, done. So guys, write down. Open a contract account directly and we can fill in the rupees in thousands. We'll fill in the rupees in thousands. I think they have given it, huh? No, they have not given it. We will fill it in thousands, no problem. Let's do it, guys. Let's do it. Contract account. Okay, guys, enough, sufficient. You guys are doing, you guys have already finished the template? You guys, ஓய் இப்போ தான் அதுவே பார்க்குறீங்களா? சரி நான் எப்போயோ சொன்னேன் இது போச்சுன்னு. Okay, do it guys, come on. It's 1, 2, 3, year 1, year 2, year 3. Freehand drawing is always the best. Okay, so years in x1, x2, x3. So 20x1, 20x2, 20x3, x1, x2, x3. So debit and credit. Don't forget that. Once one student, I saw a YouTube review by a student. That student scored 99 in accounts, inter or something like that. 1 mark enga pochu theriyuma? You will not believe. In one account, he didn't populate the wordings debit and credit. For that they reduced, it seems, he told, I don't know how far it's genuine and all. 1 mark for that. On life ye veruthirpaanla. So anyways, poduvangale. Hello. I have seen students getting a centum in accounts. Yes, that is possible. Rare, but yes, it's possible. I'm talking only about CA exams, by the way, not 12th. 12th எல்லாம் வாங்கலாம். CA examல நான் சொல்றேன். But just imagine, no, you guys will be, அதான் ஒரு சில பேர் சொல்லுவாங்க 99 வாங்கிட்டா என்ன பெரிய விஷயம். அந்த ஒரு மார்க் 99 வாங்கினவனுக்கு தான் தெரியும். ஒன்ன பொறுத்தவரைக்கும் 99 itself is sufficient. He has done everything and still he has got lost at 1 mark, not because of conceptual error, not even a silly error, because he has overlooked something. Had I been in that guy's position, I wouldn't have slept for 2 nights. Definitely not. No, look at the efforts that guy would have put, and not just the efforts, the presence of mind. There are so many factors beyond your control in your exam. He has gone up to that level, and 1 mark he has lost because of something very silly. Satyama, that is like a nightmare. So I don't know, but of course, I don't know whether the mark is true, whether because of this only he lost the mark and all, I don't know. But one lesson that we are learning, please put this debit and credit. Are you clear? That's all. The genuinity pati, I am not vouching for it. Had it been my student or someone like that, I would have definitely told, okay, I have seen this paper and all. No, I didn't see the paper. That guy didn't show the paper also. He was telling somewhere in some random video. That's all. But anyways, lesson taken. Put this debit and credit every time. For him, it is 99 and 100, madam. That 99 and 100. For us, it could be 39 and 40 or 59 and 60. One exemption or one paper. Who knows? Now you understand. That is the learning that I'm telling you about. Okay, fine. It was really something that was an eye opener. I didn't know that for this also they reduce marks. Anyways, one lesson learned. That's all. So okay, guys, come on. So now, hello. So debit side, what do you park? Okay, so leave a line gap, and write down 2 materials. How much? 900. Okay, you can fill these cost column and all. You can fill these 1100 and 630. Okay, done. Then 2 wages. How much? 850, 1150 and 850. Okay, correct. 850. Yes, good. Online students are also participating. I heard some noise here. Very good. Fine. Then 2 direct wages. Sorry, adha mudichoma ipo. 2 direct expenses. How much? 35, 125, 45. Okay. Then you have some indirect expenses. Yes, 2 indirect expenses. How much? 15, 20, nil. Then 2 depreciation. Yes, how much? We guys saw 20, 30. Correct? Fine. Then go to your credit side. Write down by work certified. Now let's do it year-wise. And by work uncertified. First year, how much is it? 1750. What is the work uncertified as at the end of first year? Closing stock, how much? Nil. Okay, right. Work certified, X2, how much is it? இப்போ சொல்லுங்க எல்லாம். I still think students have not realized, some students have not realized. Guys, just look at it. What is the contract price? Hello? What is the contract price? At the end of year 3, what they have given us work certified? 75 lakhs, meaning what? This is a cumulative balance. Correct? As at the end of first year, total value of work certified till date is 17,50,000. That is correct. As at the end of second year, the total work certified till date is 56.5 lakh, meaning what? During the second year, how much is the value certified? How much is the sale? 56,50,000 minus 17,50,000. Correct or not? Guys, we're talking P&L is for a period, not as on a date. Correct? Difference between that, how much is it? 39 lakh 90,000, 3,900, okay, 39 lakhs, okay, so 39 lakhs, correct? Then, for the year 3, what is the revenue? 75 lakhs minus 56 lakh 50,000, how much is it coming out to? 18 lakh 50,000, correct? Okay, see, as at the end of year 3, total certified is 75, as at the beginning of year 3, that is as at the end of year 2, till date they have certified 56.5, the difference was only valued in the current year, correct or not? Correct or not? So guys, please go and write this down. Please go and write this down. Take a red ink. Take a red ink. Write on how much and how much. 3900 and 1850. What is the calculation? What is the calculation? For this, the calculation is, maybe I'll write in a blue ink, 5650 minus 1750. For this, the calculation is 7500 minus 5650. Are you clear with this? Because we are talking only for the revenue for the year, not as on a year. Guys, are you all clear with this? Puriyarda, you are understanding? Yes, you are able to follow. Guys, are you all getting it? Don't make this silly mistake. Please don't make this silly mistake. How do you know it's cumulative? At the year end of year 3, 75 lakhs, they have given us work certified. Total contract price is 175 lakhs, so which means what? They have actually accumulated only. Clear? Next, value of work uncertified. Second year, how much is it? 100. Third year, how much is it? Nil. That's all. That's all. Wait, this is nothing but a closing stock. Correct? That becomes the opening stock of the next year. Correct? Take a red ink. Please take a red ink. This is why I asked you to leave one line gap. This is why I asked you to leave a line gap. The closing stock of current year becomes opening stock of the next year. Correct? Correct? Year 1, 0, because I am beginning now only. Year 2, the opening stock is 0. Why? Because the closing stock of year 1 is 0. Clear? Year 3, the opening stock is 100. How you got this? Because year 2's closing stock was 100. Are you clear with this? Guys, are you all understanding this? Again, students miss out on this. Again, students miss out on this. Please don't make this mistake. Please don't make this mistake. Work certified should be year wise, and this work uncertified should get passed on to the next year by way of opening and closing stock. That recycling happens. Are you all clear with this? Yashwant, you are understanding. Rohini, you are understanding. Others? Yes, others. Darshini, Vidya, Kavya, Madhumita, Nikita, Karthikeyan, Muralidhar, Guru, Vamsi, Anne Abraham, Saran, Priya. You guys are understanding this? Yes? Okay, okay, fine. Right, right. Okay, done. Right? So now what you do is year-wise compute the profit or loss, notional profit or loss. Leave a line gap and total. Leave a line gap and total. Now, first year debit side balance, credit side balance, total. Debit side total, credit side total. Which is more? How much? 1820. So here it's going to be 1820. So what will you do? By costing P&L entire amount. How much? 70 rupees pencil circle. Next, year 2. Which is more, debit or credit? Credit. How much is it? 4,000. So 4,000. So write down 2 notional profit. How much is it? 1575 pencil circle balancing figure. Next, year 3, debit side, credit side total. Credit side, how much? That's 1850, the same thing, 1850. So third year notional profit, how much is it? 195 pencil circle. Are you all clear with this? So first year there is a loss, second and third year there is a profit. Are you clear with this? Now, are we done here? No. So what you need to do, find out the amount to be transferred to your costing P&L. I told you this step is not done in the study material, but let us do it for safety's sake. Let us do it. Okay, so now what you have to do is write down wait, first write down by balance carried down, then you write down by notional profit. Why? Because first year's balance will become the next year's, first year's closing balance will become the next year's opening balance. Please do as I say, you will understand. In case you haven't already, I'll just tell you to do it this way. Now, notional profit, first year, how much is it? Nothing. Second year, how much is it? 1575. Third year, how much is it? 195. Correct? Now, write down 2 costing P&L and 2 balance carried down. So, and you can leave a line gap and total this up. Line gap, total this up. First year, no opening balance, no notional profit, nil. So, there is no question of apportionment. Correct, guys? Correct, guys? Yes. So, first year's closing balance becomes second year's opening balance. Correct? That is nil. Correct? So, now you have a credit side total of 1575. 1575. Out of this 1575, how much should be transferred to P&L? How much should be retained? Now, what will you do? How will you find out the amount to be transferred to the P&L? As at the end of second year, what is the work certified? What is the work certified? For this, you can take the cumulative balance. 5650 divided by 75 lakhs. That is 56 lakh 50,000 divided by 75 lakhs. Correct? How much is it? 75.33%. So, what is the profit to be taken? 2 by 3. It's more than 50, less than 90. So, 2 by 3 into notional profit into cash received by work certified. So, let's do that step. Let's do that step. Come on, let's do that step now. Let's do that step. So, come down, write a working note. Guys, write a working note. Write down recognition of profit for the year 20x2. Yes, first percentage completion. Percentage completion. How will you find out? Work certified by contract price. This is nothing but 56 lakh 50,000 divided by 75 lakh rupees. How much is it? It is going to be 75.33%. So, when it is 75.33%, what is the formula you should use? What is the formula used? 2 by 3 into notional profit adjusted for cash received by work certified. Correct? So, tell me how much is this? 2 by 3 into 1575 into cash received by work certified. Can I say it's nothing but 90%? They have already told you, no, they will only receive 90% of that. Correct? So, can I say this is nothing but 90% of that only they will receive? Correct? Guys, are you clear? Or if you want, you can compute the actual cash received divided by work certified, you will still get 90% only. Clear? So, how much is the amount to be transferred? Rupees 9,45,000, or in other words, rupees in thousands. Go up and populate how much? 945. Guys, is everyone understanding this? Is everyone understanding? Guys, are you all understanding this? Yes, you guys are understanding it. So, now let's go up and populate the figure 945. So, what is the balance carried down? How much is it? 630. Correct? 630 is the balance carried down. Pencil circle. Immediately, what will you do? Immediately, what will you do? This will be the opening balance for the third year. So, now what is the total balance lying in my contract account? Tell me, guys. 630 plus 195. How much is it? 825. Now, out of this 825, how much will I transfer? How much will I transfer? How much will I transfer? 2 by 3. Or I will transfer the entire profit. Why? At the end of third year, the entire contract is complete. Very good. So, write down 825 and nil. This gets you 825. Are you clear with this? Are you clear with this? Guys, do it in the structured approach. No one can take it away from you. The conceptual knowledge. Are you clear with this? Do it year-wise. Parallelly, don't do it. Year-wise, do it. Please do it year-wise. It saves a lot of time if you're doing it in a multi-columnar format. But the confusion is you tend to do it parallelly. Don't do it parallelly. Do it only vertically. Do it vertically. Are you clear with this? And with this, we have completed this sum. But anyways, this WAP also we will do it. Shall we do it, guys? WAP calculation. They have also asked you for balance sheet figures, no? Correct? So, this is step 1. Step okay. First, just write down calculation of WAP. Calculation of WIP. Yes. So, tell me particulars particulars your x1, your x2 and your x3. Okay, so what is the formula? Guys, work certified plus work uncertified minus cash received minus balance in contract account. Okay, fine. Now year wise tell me. Year wise, okay, you can tell it parallelly. Work certified, how much? As at the year end, how much? 1750. Pick it from the question. As at the year end, how much is it? 5650. We are talking about balance sheet, so I will take the cumulative balance. Are you clear? Balance sheet is as on date, no. Profit and loss is only for the period, no. So as on, so you can take the cumulative balance. And finally, as at year 3, how much? 7500. Correct? This is all rupees in thousands. Rupees in thousands on the top. Next, work uncertified, nil. Then it's going to be 100. 100. Yes, 100. Then nil. Correct? Then what is the cash received? What will you do? Cash received 0.9 into 1750 is equal to write down. 5650 is equal to write down. 7500 is equal to write down. How much? 1575, 5085, 6750. So all these three things should be reduced. Then balance in contract account, year went nil. Year 2 how much? 630. Year 3 how much? Nil. So tell me year wise WAP balance, how much is it? 175 now? Yes, 175,000. Okay, 175, then 35, then 750. Correct? Guys, are you all clear with this? And take a blue ink, pull an arrow under this 750 and write down WIP becomes debtors. This is only for your understanding. In exam, they still call it as WIP. Ideally, now you can call it as a debtor. Now, are you clear with this? Total amount due is how much? 7,500. Till date, how much is paid? 90% of that, 6750, which means the balance 10%, 750, that alone is due. That is ideally now your debtor balance. Are you clear? Till date, I can't call him a debtor because I have not finished the project. Now, I call it as separate WIP, hanging ledgers, I merge it together, and suddenly once the project gets over, I call him as a debtor right now. Are you clear with this? Conceptual clarity, have it guys. Have the conceptual clarity, no one can beat you. No one can beat you if you have the conceptual clarity. Are you all clear with this? Is this one complete? Are you all getting it? Yes guys? Clear? Clear with it? Fine. So now let's move to the next concept, the next leg of the discussion. So actually sums wise it's all over, and of course solving wise, yes, we will be seeing only illustrations from now on. So let's go to the next area. So there's something called as escalation clause. So before that, I should give you a background. If you directly get into escalation clause, you would not know what it is. Yes, you have a doubt. Tell me. I'll tell you. Okay, so there is a doubt. They are saying cash retention, why they are keeping? They are keeping it because the person should not leave in the mid of the project. Now then, why at the end of year 3 also they are keeping a cash retention? They will always keep a cash retention. If you see in infrastructure, not infrastructure alone, if you see construction projects and all, recently we constructed our office. I'll tell you my practical example. Recently I constructed my office. Now we constructed using a different material and all. So we didn't even use single brick or cement. We did it using a particular material called as Aerocon panels. So we did that. It has a very good the life also, and it just costs you 60% of the overall cost. If you use a brick and mortar model, it will cost you more. So this costs only 60%. We made use of this innovative thing. We got in touch with the civil contractor. Now we were giving him progress payments. Really, we were actually giving him progress payments. What we did is every time that work certified and all, we didn't appoint some person. Based on this, we agreed, if you finish flooring first, I'll give you so much. Then walls you finish, I'll give you so much and all. So we were actually planning on those lines. After the entire contract finished also, we retained 10%. We retained 10%. Why? Because what if suddenly he's handing over the key, I paid him the entire money, 3 days later the roof falls on your head, what will you do? So basically, you should know whether it is in a livable condition. So what generally happens is, they take 1 full year. Since it got completed, they take 1 year to release the balance payment. What is the logic for 1 year? By that 1 year, the building would have faced all types of seasons, no? Yes, summer, winter, Chennai, but at least that suddenly one storm will come and all in Chennai. So all these things, so just imagine one storm comes, your roof takes off. What will you do? Yes, so for all these purpose only, safety purpose, 10% at least, retention money they will retain, they will give it only after 1 year. And the guys will also accept. I mean, these guys will also accept because they know. If they are not accepting, it means that they themselves are not confident about the project. So these guys, to at least show their confidence, they will say, you retain 10%, I don't mind. So they themselves will say. That is the reason why in real life also, cash retention is done even after the end of the project. They will infra projects and all. This metro rail, just imagine, they paid the entire money to, in the airport, yes, one pillar fell off and all. Just imagine, had they released the entire payment, pillar fell off, now that guy will not come for after sale service also. Say, yes, my life is settled, you have paid me. So for you to, keep him at your disposal, you definitely need to have some amount of cash retention. So that is the reason. Infrastructure projects and all, they will have this cash retention for 2-3 years. 1 year and all is not sufficient, because the public utility, if something goes wrong, that's all. The government will be taken for a task. Just imagine, you're going on a your flyover, something is happening to the flyover. Once it happens in Kolkata, I guess, the entire flyover got collapsed. The government was heavily criticized. Many people died. Government was heavily criticized. Government's money, government's plan, government's project. It should be for the people, no? And because of government's, inefficiency or whatever it is, they take the blame. So they will be very clear. Of course, all these corruption will be going. But when they are doing this corruption also, safety generally in government contracts, they will not, they will generally not oversee it, because tomorrow they will have to face the media and public. So they will not do that. So that is the reason for why you are having a cash retention. Clear with this? Now, guys, catch up running notes, a small thing, a small area. There are 2 types of contract. One is called as a fixed price contract. The other one is called as a cost plus contract. One is called as a fixed price contract. The other one is called as a cost plus contract. Now, what are these two? You need to understand this, only then you can go to the next area called escalation, number 1. Number 2, this cost plus contract and all is coming then and there in your theory area. So please don't miss out on that. If you know the logic, automatically you will be able to attend theory. Don't think theory you need to just go mug it up and all. Know the concept once, brush through whatever theory I have given, you are done. You at least will know what they are expecting. That's all. I will show you a few things and all in our theory areas. I will tell you how to prepare for that. Now here, what do you mean by a fixed price or a cost plus contract? Now let's say your dad, he has a piece of land. On the piece of land, he wants to construct a house. Now he is approaching one contractor. This contractor comes, he takes the measurements and all. Your dad says, I want some 3-bedroom, 2-bedroom, whatever it is, depending on his particular ideology. So he says, multi-storied, whatever it is. He tells him the design, he tells him everything. Now what happens? This contractor, he is preparing one full-fledged proposal, and he is saying, sir, I will come and construct the entire house for you. It will cost 100 lakh rupees. Example, construction cost and all right now is high. It's very high. It's costing near about 2,900 to 3,000 rupees per square feet. So 1,000 square feet costs you how much? 30 lakhs. 30 lakhs for 1,000 square feet. I'm talking about construction. Apart from that, the land cost will be much more. So that's why real estate, especially in places like Chennai and all, of course, in Chennai only, in Tamil Nadu, we have the concept of UDS. You know UDS? Undivided share and all. If you go to Maharashtra, there is no concept of undivided share. They float a cooperative society, and you will need to purchase the membership rights of the cooperative society. Angala, the concept itself is completely different. They don't go for UDS and all. That's why, a small piece of house, 1 room, hall, kitchen, one room hall kitchen, one room hall kitchen, that's all. That will cost you about 80 lakhs or 90 lakhs. I'm not kidding. That will cost you 18 lakhs or 19 lakhs. Just one hall will be there. My parents, long back before I was born, they were in. My dad was working in Bombay. That's how I got to know this. One small place, if you want to buy, it's very huge. The price is very huge for whatever you pay. Now just imagine, in that kind of a city, Ambani has built one. That Anaconda building only he has built. So whatever that is. So just behind his house there will be full slum. So day and night difference between poverty and the richest of the richest. Okay, fine. So come back here. So your dad has approached this guy. What he did was, as contractor, obviously he prepared one proposal. So what he will do is, all the costing only he does. He does costing only. The cost sheet, it's nothing but your proposal. So what he does is material, labor, overheads, all these things he will add as margin. Obviously that what is margin and all he will not tell. So he will include that inside every cost and he will say, sir, this much is total. You need to pay me. Now he says, let's assume 10 lakh rupees, sir, is the cost. 10 lakh rupees is the cost. What he is saying, at the beginning itself, he is saying, I am giving you a fixed price. These are the specifications. I will do this entire project. I will do. You need to pay me 10 lakhs. Obviously, as and when work certified, you retain some cash and balance you pay me. That goes without saying. 10 lakhs upfront, no idiot will pay. Then he will go off, no idiot will pay. Unless and until you are buying a ready-made house. That is different. The house is ready, it's okay. It's different. But construction and all, no idiot will pay full money. These guys will run away. Now, he says, fixed price, sir. I am fixing it. Okay. Now, you know that your contract generally takes about 6-7 months, or if it's a big project, it even takes 1 or 2 years, whatever it is. It takes a lot of time, correct? Now, this guy, at the time of preparing proposal, now, he will not buy all the material and keep. Then and there, first floor, ground floor is actually making it. With respect to the ground floor, what are all the materials he needs, that he will buy. When he is constructing the first floor, then he will go and buy the bricks and all, correct or not, for the first floor. Now on a later stage, let's say 3 months later he is buying, there is some price increase. Now, can he go and ask your dad for money? Can he go and ask, sir, that day I told you one price, today market light has increased. Can he go and ask? No, it's a fixed price. I have told you. So you envisage all the price increase and you give me a fixed quotation. As simple as that. So the risk of price increase is on whom? It's on the contractor, correct? This is called as fixed price model. There is another type of model called as cost plus, as the name suggests. Your dad is approaching a contractor. He says, sir, this will take 2 years for me to construct. So don't ask me for the price right now. Let us be very clear. Even I am a person who needs to have a livelihood. I do it for a profit. What I do is, you tell me the stage of completion, what to do, when to do and all. We will decide on that. Now, whenever I say I want to construct the ground floor right now, I will go purchase the brick, cement, all the materials I will purchase. Bill wise, I will submit it to you. Okay. You will know the exact cost, how much it is. I will give you the bills. On that, you pay me 10%, that is my margin. So then and there, if there is a price increase, now who is going to bear that? The contractee, client will bear it, correct? This is called as a cost plus model. Are you clear with this? So cost plus model, the contract price is not known at the beginning. Then and there, as and when you incur a cost, he will add a margin and give it to you. Are you clear with this? Whereas a fixed price contract, the entire price is known at the beginning itself. So the sums that we have been doing till now is all a fixed price contract model. That's why they are clearly giving you contract price 75 lakhs and so on. Are you clear with this? Now you tell me, your dad is whom? A contractee, client. Which type of model will he prefer? Which type of model? Now, if someone says, sir, then and there cost plus whatever it is, I will pay you. First, your dad will have a budget in his mind. If this kind of person comes and approaches, now he won't even know how much he will be spending, correct? So always we prefer a guaranteed thing. We always prefer a guaranteed cost, correct? So that's why all the customers, what they do, they all prefer only fixed price. You tell me, but because what we do, we generally take quotations from 2-3 people and then we compare it and all. Cost plus, you can't do all that. You can't do all that. What the price itself is known only at the end of the contract, correct? So now what this happens, The customers prefer, the contractors prefer fixed price. But what is the problem in fixed price? This fellow, the contractor, can burn his pocket. He can burn his hand. Correct or not? So now, what happens is, now in this case, what happens? What they do generally is, they enter into a fixed price contract with something called as an escalation clause. Escalation clause. Escalation clause. Escalation. E-S-C-L-A-T-I-O-N. Escalation clause. Escalation clause. What is this escalation clause? What is this escalation clause? Now, you tell me, is it practical? At the beginning of year 1, when the contract is about to start, this fellow says 10 lakhs, but you tell me, he might be a super expert in the market, still can he predict any unforeseen price changes? Can he predict any unforeseen price changes that is going to happen during the life of the contract? No. So what they do is, in an escalation clause, in the terms of the contract, there is something called as an agreement, contract agreement. They will clearly mention the contract price, and they will also mention that clause called as escalation clause. What this clause will say is, look, if the prices increase beyond a certain level, then beyond a certain level, whatever is the increased cost, on that the client will, the contractee will also bear a part of it. So he will say, yes, I agree. So you need not bear the entire cost. Let us share it. Let us share it. This is called as an escalation. Escalation means what? If you would have gone to malls, yes, escalator is what? You stand there, it will go up. So when the price go up, English escalation means moving up. Even in your audit, you will be having escalation to the management. Escalate a particular item means what? You bring it to the notice. Escalate means moving up the ladder, moving up the corporate ladder in that case. So moving up, when your price moves up, when your price increases, this clause will kick in. This clause will kick in so that the contractor's liability is also taken care of to some extent. Are you clear with this? First of all, escalation clause is applicable only for fixed cost contract, fixed price contract. In a cost plus contract, where is the problem? Where is the problem? Actual cost is borne only by the client, the contractee, correct or not? Are you all clear with this? Are you all clear with this? This is how it happens in real life. I told you, we constructed an office recently. Yes, recently, it's been 1 year, more than 1 year, I think. Find that office we constructed recently. So basically, what happened, that fellow, he actually gave a fixed price only. Obviously, because if you have a cost plus contract and all, no one will come to you. So he can't get business. He said, sir, I don't know what to do. Actually, I gave him a free suggestion. Fine, okay, anyways, he is helping me out. Let me help him back. I told him, include something called as an escalation clause. He said, okay, fine. So how does it work? I told him, so beyond a particular price level, you can reasonably ask them to bear. Inflation you can bear, that is predictable. Any unpredictable, unforeseen price increase, maybe you can share it with him. From then onwards, we drafted an agreement for him, including this particular clause. Then onwards, he is actually doing it. So immediately, parallelly also, he was signing some 2-3 contracts. He started doing that and he was very thankful. I'm telling you, these small things make a lot of difference. These small things, whatever you learn today, if you can practically apply it in your life, people will be indebted to you forever. I need not have done it for him. He is, actually, I am his client, Yes, I only pay him the money, construct the office, that's all, get out. No, actually, if you have these kind of mutual relationships, it will help you in the long way. Now, this guy, obviously, he can bring business. Of course, I didn't do it with that particular objective. I just said, fine, okay, we know something and this guy is struggling, so let us help him out. Let us help him out. The price was also reasonable with him. I compared many quotations and all. I found this guy's fellow price, young person. He was an engineer. So just like how, we were, our team was like young group of chartered accountants starting our own practice. That guy was a young engineer who started civil engineer practicing. He started practicing in civil engineering by constructing houses and all. I told you the unique fashion about this construction is he will not use brick and cement. So he will only construct it using steel and some panels, concrete panels. These are all not some reusable. So tomorrow if you want to shut the entire place, you can take this away and then reconstruct it in a different place. So that's how you can do it. So it's reusable. So it has a resale value also. So depreciation, when you are calculating, you can have a scrap value for the building also. So are you clear? So that way we saw this was very super beneficial and that's why we went for it. And in fact, it doesn't require this corporation permission, because corporation, every floor you are constructing, you need a permission provided you use brick and cement. This is not brick and cement, no. So this doesn't require your this also, property tax also, and your corporation assessment also. Many ways you can save a lot of cost. So again, honestly, I'm telling you, whatever knowledge I learned from this costing only, we did a cost benefit analysis and only we went for this. We went for this particular model. We did many alternatives. I told you, budgeting. It helps you in two things: decision making, control. That decision making first we did, and we chose this alternative. Having chosen this alternative, we controlled him. We tried to figure out whether in this timeline he was finishing this or not, whether he was increasing his price here and there or not. We were controlling it. That is not an easy job. Generally, it takes a lot of time. You need to keep on going him. Apart from your routine work, you need to keep doing that. But again, I'm telling you, one happy part is I'm actually able to apply something that I know. So basically, that is the level of happiness you will get. Everyone will get when you are actually able to apply something that you know of. Fine. So this is about fixed contract and cost plus contract. Are you clear with this? Now, in case of a cost plus fixed contract, you have something called as an escalation price if it's specifically mentioned. And in that case, what happens? Any price increase beyond a certain level will be borne partly by the client, contractee. This is just done so that the contractor also feels secured. He also feels secured that fine, I need not bear everything. This fellow is there to take a burden to at least some extent. So he will also happily sign off. Are you clear with this? Fine. So with this, let's go to the next question. This is called as escalation contract. This is called as escalation contract. Let's go to the next question. Fine. So in fixed price contract, the price of contract can be increased if there is an escalation clause. Escalation clause allows the contractor to increase the price of the contract only when the price input have increased. It is not applicable for increase in quantity. Now let's say, guys, let's say I know that he needs to use 100 bricks. Okay, example solra. Example. I know that he needs to use 100 bricks. 100 bricks, each brick I have budgeted, on his budget he has given me that each brick will be purchased at the rate of 5 rupees. This is standard quantity into standard price, correct? But what he has done is, he has used 120 bricks and he has purchased each brick at 8 rupees. Now what will happen? I told you if there is a price increase, your escalation clause will kick in, correct or not? So what I will do is, now what is the amount that I will bear? Now I will bear 100 rupees on that extra 3 rupees happened, no? How much is it? 300 is the overall price increase. On this alone, I will see what I can bear. I will not bear any inefficiency. Inefficiency I can't bear. That is not fair, no? Then he will be super inefficient. As it is, getting the job done from these people are very difficult. Now, inefficiency you can't bear. You can't bear. Correct? That's what they are saying. It is not applicable for increase in quantity. That's why they are saying escalation amount allowed is actual price minus standard price into standard quantity. You need not mug up. It is just that standard costing chapter. You can just see how beautifully we are interlinking it here. Are you clear with this? Are you clear with this? There are multiple items for which price can increase or decrease. Okay, fine. And if the net escalation is negative, escalation clause will not be enforced. We will see one illustration. You guys will automatically understand. Now, let's see this particular illustration. Guys, look at this. Look at this. Actual material cost is 1,50,000. This is what actual or standard of? Actual. Okay. Please be careful with the wordings. During the year, the material cost have increased by how much? 20% due to increase in price. The escalation cost provides for following. So basically, this is how the wordings will be. In the event of rise in price beyond 5%, the contractee will pay 30% of such rise beyond 5%. So Kamalhasan dialogue madhiye irukla. Purinja madhiye irukku, puriyada madhiye irukku. Fine. So basically what they are saying, now if your price increases beyond 5%, what he is saying is, over and above this price 5%, whatever is that increase, on that 30% the contractee will bear. The contractee will bear. In other words, now guys, you tell me, now this actual material cost is how much? 1,50,000. So what was the standard material cost? How much was the standard material cost? Calculator. How much? 1,20,000. Can I say 1,50,000 is 120%? How much is 100? How much is it? 1,25,000. 25, correct. 1,25,000. 1,25,000. Correct or not? Correct or not? So 1,25,000, which means from 1,25,000 the price is increased by 25,000. So overall gross escalation is 25,000. But wait, he said what? First 5% of the increase I will not bear. That is normal inflation. You would have budgeted that and included in your profits. I know that. So I remove 5% of budget cost. There's nothing but 5% into 1,25,000. How much is it? 6,250. So the balance over and above 5%. What is the escalation? 18,750. On that 30% alone, I will bear. 70% you bear. So 30% on the increase beyond 5% is what I will bear. Are you clear with this? Are you clear with this? Isn't it simple, guys? Isn't it simple? So they are giving you the actual, you found out the standard, and you arrive at the gross escalation. Out of it, the first 5% you will not bear. So over and above 5%, what is the increase you have seen? Out of that, 30% is what you are ready to bear. So what I will do, from the contract price, I will add this 5625 and I will charge that is the contractor will charge the contractee. Are you clear with this? Are you clear with this? Guys, are you all understanding this? Is it understandable? Is it understandable, guys? Yes? Yes? Fine. Then finally, let's go to one more illustration. This is a famous illustration. It got once tested for 5 marks also. So let's look at this illustration. This is something that you already know, but there is one thing that that you will learn through this particular illustration. So let us see what that is. Okay, fine. Now, AB Constructions has entered into a big contract at an agreed price of 150 lakhs, 1.5 crores, subject to an escalation clause for what components? Material and labor as spent out on the contract. Fine, let's read this. Now, they have 4 types of materials and 2 types of labor. Okay. Now, what have they given? Standard quantity is given, standard rate per ton is given, and the actual rate per ton is given. Correct? So, basically, the escalation claim will be on what? Standard quantity into difference between the rates. Correct or not? Now, you tell me, he has originally budgeted a rate of 1,000. It got increased by 100 rupees. So, tell me, with respect to material A, he will say 100 into 3,000. 3 lakh rupees more he will charge from whom? The client, that is the party. Correct? Look at the second one. Now, he originally budgeted for 800 rupees, but the price dropped. The price dropped to 700. Now you tell me, if the price increases, I am charging that increase from the client or the party. If the price drops, then it is fair only if I pass it on to him. Correct or not? So that's why what they are doing here is they have reduced it 2,40,000. They have reduced it from the net escalation claim. Are you clear with this? So basically, in this question, they are not saying over and above 5% and all. Any escalation, they are bearing it. Full escalation, they are bearing it. That's what is given, no, in the question. Similarly, look at this here. Price was 4,000, got reduced to 900. So 100 into 500, that price, whatever it has dropped, they are passing it on to the party. Similarly, here the price is increased by 1,500 into 100, 1,50,000, they are adding it. So the net material escalation is going to be 1,60,000. If you look at this, 3 rupees per hour into 60,000, so that's going to be 18 lakhs. Oh, the 18 lakhs tappa idu, 1,80,000. So please remove 1 0, it's 1,80,000 only, it's 1,80,000. Then here also it has increased by 5 rupees, 5 into 40. Yeah, it's correct. 2 lakhs only, yeah? Yes, 2 lakhs only. So the total labor escalation is going to be 3,80,000. So what you will do is 160 plus 380, that gives you 5,40,000. Are you clear? One thing that you need to understand is if the price drops, that also needs to be considered. Are you clear? Suppose the overall net escalation, what happens? It is negative. That is what happens. There is many price fall only. The price fall is huge. In this case, now you can't say that the contractor will give money to the contractee. No, that will not happen. In this case, there is no escalation. You will just ignore. So negative, total negative, ignore. Don't say this is negative itself, I am ignoring. Totally, if it is coming out in negative, then he will definitely get the fixed contract price. That he will get. That's why it's called fixed. Are you clear with this, guys? Are you all clear with this? Fine. Are you all clear with this? And that's about this particular chapter. That's about this particular chapter. So watch out for this also. At times it comes and go. On unexpected attempt, it came for full 10 marks. Whatever sum that we did, no? That year 1, year 2, year 3, or 1 year 3 contract, or 3 year 1 contract, whatever it is, these kind of variety of sums with or escalation claim for 5 marks, this can come. Beyond this, nothing can come in this chapter. Are you clear with this? And by the way, I have shared all the chapters questions. I have shared the questions for practice for all the chapters. And remember, you guys have an exam day after tomorrow. Please write it. Fine. More about it I'll tell you towards the end. But right now, are you all clear with this? So let's move to the last chapter called as unit, batch and job costing. So I've merged these three into a single chapter. In your study material, unit and batch is one chapter. Job and contract is another chapter. So contract we have done separately. Unit, batch and job. Nothing great, no new thing to be learnt here. I'll just give you, yes, only one thing to be learned here. Only one small thing. There is something called as economic batch quantity. That alone we need to learn. That is also similar to economic order quantity, that I'll tell you how it is now. So basically, and don't worry, there are no sums for practicing. Everything is given by way of illustration. We will discuss and close off. Are you clear with this? Fine. So let's get into this particular chapter. For this, you need a good introduction. So I will tell you why we are studying this chapter separately or not. So I will give you an introduction, and I want you guys to catch up running notes for that. Please. Okay, guys, let's start. The final chapter. Let's start. So this is chapter number 14, 13, okay, 13. Okay, so unit, batch, correct, so it's 14 only. Okay, so unit, batch and job costing. Guys, the examples that I give you, I mean, it's not that in your study material and all. You should know why we are studying this chapter separately. So I'll just give you a background. That will be a solid background with which you can understand why this chapter is there separately and whatever is the concept that we are going to study. Now, there are broadly two methods of costing. Broadly, two methods of costing. What are they? Yesterday I told you. Unit and job costing. Yes, unit costing and job costing. There are broadly two methods of costing, two systems or methods of costing, unit and job. Now, sir, what is this, sir? Some separate thing out of the blue? No. Now, you guys tell me. Now, this objective is only related to your stock valuation and profit computation. Objective A. Okay. Now, in your objective A, what was the classification we studied? Product cost, period cost and all we did know. The cost sheet chapter, correct? So, basically, whatever we have studied is correct. That's all. The entire thing is only unit costing, but I'm just telling you how it works. Now, yesterday also I gave you an example. Let's say I am a pen manufacturer. I manufacture 1 lakh pens, or let's say I manufacture 10,000 pens. The total cost is going to be 1 lakh rupees. Fine. So what I do is, total cost is going to be rupees 1 lakh, and the units produced is going to be 10,000 units. Now you tell me, every pen will be valued at how much? The cost per unit, how much is it? It will be rupees 10 per unit, correct or not? This 1 lakh consists of only the product cost, material, labor, overheads, and material, labor, direct expense, that is prime cost and overheads. That goes without saying. But now what I do is, now you tell me, how do I get this value of 10 rupees? Do I open pen 1 account, pen 2 account, pen 3 account, 10,000 pen accounts, and independently say inside this pen how much material, labor has gone? Or these are all some homogeneous products. Collect the cost for the entire period, divided by the total units produced for the period, arrive at the cost per unit. Yes, what will I do? I will arrive at the cost per unit by averaging out my total cost for a period with the units produced for the period. Correct? Why am I doing this? Because since the units are all standardized, the cost consumption pattern will be similar only, no? The cost consumption pattern will be the same whether you are producing pen number 1 or pen number 10. Just imagine. Now, I am manufacturing the first pen, I am using a labor. That labor just now is a new employee, correct? Now, he would be taking more labor hours, correct? So, the pen cost of the first pen will be slightly more than 10 rupees. By the time he reaches the 10,000th unit, now he would have taken, because of learning curve effect, there is something called as learning curve effect that you will be seeing in your CA final. Because of learning curve effect, what he does is, he will actually take only slightly lesser period of time per unit, which means the last unit that he produced would actually cost slightly less than 10 rupees, correct or not? Now just to imagine, if I value every similar pen separately, now just imagine you go to your nearby shop, you want to buy one 5 rupees, that ease click pen is there, no? That pen you want to buy. Now you are asking, sir, how much is the price? Now the shopkeeper is asking you, you want a first pen manufacturer or the 10,000th pen manufacturer? Does it make sense? Does it make sense? A pen is a pen, whether it got manufactured first or last, because all the pen would have consumed the same consumption only, same resources only. So it really doesn't make sense for you to value each and every pen separately. So what you do, the manner of cost collection exercise is such that cost is collected for the entire period, divided by the units produced for the period, arrive at the average cost per unit. So basically, how do I value the stock? Using product cost, period cost concept, but the manner of cost collection exercises by averaging out, total divided by units. Are you clear with this? Whereas I gave one example yesterday. Let's say I am Casa Grande. These guys are into what? Construction business, and let's say I built 4 residential house properties. One is a villa, the other one is a duplex, then a flat, then a bungalow. Now I incurred a total of 20 crore rupees for building all the 4 put together. Now you tell me, can I say 20 crore divided by 4? So the cost for villa is also 5 crore, cost for duplex is also 5 crore, flat is also 5 crore, and bungalow is also 5 crore. Can I say this? Absolutely not, because these are all donkeys and monkeys only. They can't be added together. So what I do, the cost collection will be done separately. So what I do is, I treat each and every product as a job, and I collect material, labor, overheads, all these things job wise, and I value my products independently. Now how do I value? Using the same concept of product cost, period cost, but here I don't average out, I go and value each and every job independently. So here in a unit costing, the cost object is called as a unit. Here in a job costing, the cost object is called as a job. Are you clear? In unit costing, what you do, the cost per unit is found out by averaging out the cost, and here in job costing, the cost per unit is found out by independently valuing every single job. What are the costs that you will consider? That is only manufacturing cost. Those concepts are same. The difference between unit and batch job costing is only the manner of cost collection exercise. Are you clear with this? Manner of cost collection exercise, write it down somewhere. Manner of cost collection exercise is all that makes this particular cost classification. You will value all the products only at full manufacturing cost, no doubt about that. But then how you do it, by averaging out or valuing them independently, is what is being dealt here under unit and job costing. Are you clear with this? Are you clear with this? Guys, are you all clear with this? Yes? Are you all understanding? Now, then sir, what is the name of this particular area that we are seeing? Unit, batch and job. So in between there is someone called as batch costing. Batch costing, you didn't tell what that is. So batch costing is also a method of costing similar to this one, you know? Yes, correct. But then batch costing is not a separate method of costing. Batch costing is nothing but a hybrid. It's a hybrid model. That is, it takes one character from unit costing, one character from job costing, and put together it's called as something batch costing. Are you clear with this? How and all example I'll tell you, don't worry about it. So batch costing, ideally it's nothing but a merger of unit and job costing together. So it is not as such. Yes, technically speaking, it is also one method. If you see methods of costing, What are the different methods of costing? Unit costing, job costing, process costing, your contract costing. There are so many things, correct? There are so many, service costing. Yes, these are all methods of costing. But if you see actually, process costing is actually an extended arm of unit costing. Correct? I told you contract costing is an extended arm of job costing. You pick any method, it will fall under either of these two categories only, technically. But in exam, if they ask you to write any 4 different methods of costing, you can write any method you want. Don't write marginal costing standard. They are techniques. Marginal costing, standard costings are techniques. Methods of costing means what? Costing for a particular nature of industry. I told you process costing for process industry. Correct? Contract costing if your job takes more than 1 year. Job costing if you are dealing in a customer specific product. Yes, and if it generally takes less than 1 year. Correct? Unit costing, nothing but your cost sheet chapter. Simple unit costing. Cost sheet chapter. Are you clear? Homogeneous product. Pen manufacturers. Are you clear? Service costing. Service setup. Are you clear with this? These are all methods of costing. Cost accounting. How am I going to apply the cost accounting principles for respective industries is called as methods of costing. Whereas techniques of costing means what? You have certain rules or you have certain applicability that can be applied across all set of industries. For example, marginal costing concept can be applied both in a production environment as well as in a service environment. Correct? In service environment, we saw no standing charges, running charges, that break-even point for hospital beds and all we found out. So when you can apply some principles across all your industries, it's called as techniques of costing. But methods of costing means what? Applying the costing principles exclusively for a particular industry is called as method. There is a difference between the two, method and technique. Please have that in your mind. Please have that in your mind. There is a difference between the two. Are you clear with this, guys? Are you all clear with this? Are you all clear with this? So in exam, if they ask you for all these things, you should know. So standard costing, absorption costing, and your marginal costing, these three are techniques of costing. Techniques of costing. Methods of costing, all the names of your chapters, material cost, your process costing, joint and byproducts, all these things are all your methods of costing. Are you clear with this? So this is something that you need to understand for your theory purpose. Now, batch costing. What is batch costing? I told you, it partakes one character from unit, one characteristic from my job costing. Sir, can you give an example? Yes. Now let's take an example. Now let's assume we have a printing press. Now in that printing press, now you guys know that the printouts can either be in black and white or in color. Correct? Black and white or in color. Now let's take an example. Now in a printing press, they have actually printed 500 black and white, 500 color pages. Okay. Now what they are saying is the total cost incurred is, let us say, rupees 2000. The total cost incurred is rupees 2000 for printing both 1000 pages, 500 black and white, 500 color pages. Clear? Now 2000 rupees. Now what is the cost per page? Can I say it is 2000 divided by 1000? 2 rupees per page, whether it is black and white or color. Can I say that? Absolutely not. So what you will do is, why is it so? Because you know that the resource consumption for a color paper will be more than the resource consumption for your black and white. So what you will do is, you will not collect the cost fully for both put together. So what you will do is, you will collect the cost for black and white separately, for color separately. Correct or not? That is batch wise. You will collect the cost separately. Let's say black and white costed only rupees 500, whereas color costed rupees 1500. Correct or not? So the cost collection is not done fully, it is done batch wise. Correct? This way it is similar to your job costing. Job costing also we do that only, no? We don't collect the cost fully. We collected job wise. Here we collected batch wise. Are you clear with this? Now I told you it takes one character from job, one character from unit costing. How is it similar to unit costing? Now if you look at this, inside this batch, black and white, there are 500 units which are similar in nature only, no? Within black and white, there are 500 units that are similar in nature, correct? So can I say the cost per black and white page is going to be 1 rupee per page, correct or not? And here the cost per color page is going to be rupees 3 per page, correct or not? So within the batch, I unitize to find out the cost per unit, correct? This way it is similar to unit costing. Guys, are you clear with this? Are you clear with this? So I told you, cost is not collected fully. I collect the cost job wise, black and white total 500, color total 1500. This way it is similar to job costing. Having found the cost job wise or batch wise, inside I average out to find out the cost per unit. This way it is similar to your unit costing. Are you clear with this? That's why I'm telling you, batch costing is not something separate. It's not something separate. What you do is, you actually you actually are in the business of manufacturing a homogeneous product with a frequent change in the variety. If you are in the business of manufacturing homogeneous products but with a frequent change in the variety, in this case you will use something called as a batch costing. A typical example is your apparel industry, textile industry. Let's say they are manufacturing shirts, correct? Shirt they are manufacturing, okay? Now, all the shirts will look like the same, huh? Yes? No, it will not look. Let's say some size, 40 size shirt. Size wise they have shirts and all. 40 size shirt, you tell me, will it be in the same color, same pattern? No. What they will do is, first they will be having machines and all. And you know how this gets done? This all is not your, this is not the color of the thread and all. They will do some dyeing on top of that. They have some, what they will do is they will be having a system. And in that first they will set up, they will configure. First lot, color blue, and your nature is going to be striped. They will fix everything. One lot, one press of a button, 500 shirts will be manufactured in the same pattern. Next lot, they will change the setup. Now what they will do is, they will say green color shirt with, let us say, some dot in between. This is another style. What they will do, now based on this, they will pour the dye and all in this particular thing. They will set up the entire machine along with the system and all. Now they will one click of a button. Now it is also a shirt only, same homogeneous product, but with a change in the variety. Are you clear with this? Now these kind of industries, what they do is, they collect the cost batch wise, and inside the batch to arrive at the cost per shirt, they unitize. Are you clear with this? They will not take the cost for the entire month and divide it by total units produced. No, for this lot, that's why if you see, I'm not sure if you have noticed, the same shirt, same quality, at times if you notice, because of color, they will charge you more. Have you seen that before? Have you seen it? Because of color, especially in your ladies wear and all, since there are a lot of designer things, everything will be one and the same. Everything will be one and the same. Just because of this color variation, they will charge it separately. You tell me, if they use a simple costing technique, the price should be same only, no? How are they pricing it differently? Because they are following batch costing technique. In that one lot, let's say some designer, you know, this RMKV and all, they said 50,000 colors are long back. They just came up with something like that. What they would have done is that they would have processed in a separate batch. See, nammukke theriyar alavukku they are marketing. Fine, so they did all these things, and to that extent what they will do, that separate batch they will collect the cost divided by the sarees, and they will charge the price. With that they will get the base on which they will add their margin. Textile industry, I told you, super duper profit. Why do you think these guys are having AC rooms and they are paying so much of rent? How can they afford? Have you ever imagined? The profit is super bumper profit. Especially you should go to Bangalore and all. There is a separate place near this Majestic. There is a place, I don't remember, some tailor or something like that. One place is there. If you go there, you should see the collections. Every shop will be small shop. It's all wholesale area. You will get some rich variety of all these whatever branded you get for 400, 500 rupees. If they are selling at 400, 500, which means they themselves have a margin there. Just imagine the same shirts we are buying here at 1,000, 1,500, 2,000, whatever it is. So that's how things are in textile industry. The margin is huge. Now since people started seeing huge margin, what they are doing is, nowadays many people are getting into this particular business. So if you see recently நம்மளோட இதுல கூட in our place one என்னது some KGF that everywhere I see one KGF shirt shop is there, that is coming everywhere. One guy is coming and he is promoting as if he is the only guy who can sell all these things on the planet. Yes, so and Pista Boys பார்த்துருக்கீங்களா இங்கே these two guys are fighting, I don't know, but பார்க்கும்போது எதை பார்த்தாலும் ரிலேட்டடாக இல்லாமல் இவங்களோட வருது எதனாலும் தெரியல. So everyone has started getting into this textile and they are making a huge amount of profit. Okay, someone is commenting. Oh, what is the comment? Okay, more than you, I am interested in reading the comment. What is this? அதுதான் கார்த்திகேயன், அமுக்கு டுமுக்கு டமால் டிமால் ஒன்லி. எஸ் கரெக்ட். இதெல்லாம் கரெக்டாக ஆன்சர் பண்ணி இவ்வளோ நேரம் ஆன்சரை கேட்டிருந்தேன். கார்த்திகேயன் இருக்கிறதே எனக்கு தெரியல, இப்போ அமுக்கு டுமுக்கு அமால் டிமாலாம் கரெக்டாக ஆன்சர் பண்ணுறான். Okay, right. Okay guys, okay, clear with this. Yes, so this is what is your batch costing all about. Now let's get into this particular area, unit, batch and job costing. Let us see a few sums in this particular area and then we will knock off. Now unit costing is nothing but your simple cost sheet, normal cost sheet only. Separately they have given it as a chapter, no value addition. Anyways, I have given one sum here, I will just do it. We will discuss and we will close off. Okay, we will discuss and close off. In batch quantity, I'll tell you what to do. There was one extra concept called as economic batch quantity and all. I'll tell you what to do. Shall we get started? Fine, all these things are for your understanding. And in exam, you see, cement industry uses process costing. School bus, operating costing. Your bricks, it can be a process costing or a normal unit costing. Airlines, operating, by the way, operating costing I told you is the other name for service costing, correct? Service costing, fine, service, you can also write service costing in exam. Chemical, process costing. Hospital, operating. Restaurant, operating. So like this, why I have given it is, at times I told you the theory 5 mark, no? Theory 5 mark, they are asking you to identify the method of costing. Adilla, you just need to find out which chapter it comes in. That's all it is. 5 marks. Theory, they are asking all this. You just need to write down. At times it comes. I've seen it quite number of times. It comes 5 marks. Can't you do this? Yes, you just need to write which chapter it belongs to. That's all. And cost unit is nothing but your cost object. Then you can write. You need not write. So cement can also be sold in bags, or it can also be sold in kgs. Generally they sell it in bags. Ton is not necessary. Fine. Your school bus, you can write students month or whatever it is. Passenger kilometer. Andha madri solra. You understand? So you can write whatever is relevant. This is not the single answer. This is not the single correct answer. You read it once, you get an idea based on which you can also improvise on that and do it on your own. Are you clear? 5 marks, guys. 5 marks. That's about it. Idhula onnume kediyadu. Methods of costing, nothing but different industry. Which industry you need to tell them. That's about it. Fine. So let's go to unit costing. Unit costing is nothing but a simple cost sheet. What columns you will have? Total costs, and you will have the rate per unit by dividing it by the number of units. Are you clear? That's about it, guys. That's about it. Nothing great in this area. Guys, just look at it. We'll just finish off in 2 minutes. I mean, I thought of not doing this area only because it's nothing but your cost sheet. But anyways, just to give a completion, I just want to do it. Let's just go through it once. The following data relate to the manufacture of a standard product during the 4-week ended 28th of Feb 20x8. Okay, fine. So they have given it. Raw material consumed, direct wages, machine hours worked, machine rate, office overheads. Office overheads means what? AOH, correct? SOH, units produced and sold, same units. So there is no problem, no stock and all. At the rate of 120 each. So sold is 120. Okay, don't think the cost of production. Cost of production you need to arrive, correct? So this one is 120 rupees is your selling price. You are required to find out the cost per unit and the profit for the 4th week. So what they have done is, they have just put it here. So material plus labor gives you prime cost, plus factory overheads gives you works cost, gross works cost, net works cost, no 4 items, all bypass. Clear? What they have done here is, they have added AOH as a product cost. Now sir, should I do it? Ideally no, don't do it. You take only AOH as a below the cost of production item, cost of goods sold item, treat it at par with SOH in your exam. In this question, the answer will not change because you don't have stocks. Okay, so all the cost gets expired, so there is no problem. But in exam, always treat your AOH only as your period cost in the absence of any information. So they have added it up. They get the cost of production, add a selling overhead, you get cost of sales. From that they subtracted sales to arrive at the profit, and they have divided all this by 10,000 units to arrive at the cost per unit. That's all, guys. Unit costing is nothing more than cost sheet. We have done it in depth. In depth, we have completed. What is the format of cost sheet? Everyone, proper format, full format, tell me. Direct material plus direct labor plus direct expenses gives you prime cost. To that add factory overheads gives you gross works cost. Then add opening WAP minus closing WAP. You get what? You get what? Works cost, net works cost or factory cost. Then what will you do? 4 addition, 1 deletion. What are they? Quality control cost, research and development, admin overheads related to production. I told you this inside your factory AC hall. Then, yes, primary packing cost, Coca-Cola. Yes, primary packing cost minus scrap income. It's called as, what do they call us? Credit for recoveries. Credit for recoveries. So there's nothing but your scrap income. You get what? Cost of production. To that, what will you do? Add opening FG minus closing FG. You get what? Cost of goods sold, COGS. To that, add AOH, SOH. You get your cost of sales. Add your profit. You get your selling price. Perfect, guys. Very good. Very good. Very good. Clear? Yes. Abdiya. Okay, I'll change the answers. That's all. 200. Okay, some calculation mistake. Please correct it. Thanks for pointing it out. 155, 200. 155, 200. I copy pasted it from somewhere. I think there's a copy mistake. Sorry for that. Thanks for pointing out. Okay, right. So that's why it's come out like this. Clear with this, guys. So know that concept only. Don't even go through it. It's not even required. Clear? If you do the chapter, this particular area is not even required. They have done AOH and all. Guys, always remember, if the sum comes like this, you can treat AOH as a period cost and close off. Always AOH, not AOH related to production. I'm talking about administrative overheads only, general expenses. What you need to do is put a note clearly saying admin overheads are treated as a period cost. Always you do it. You take it as a thumb rule. Whenever AOH you see it, at times there, I told you in your cost accounting systems, they are treating it as a period cost, product cost and all. That they will at least tell you. Here you please write. Wherever AOH comes, that's always a confusion for students. Write a note saying I am treating it as a period cost unless and until it's given otherwise. If nothing is given, treat it as a period cost and write a note. Write a note. Don't leave it there. No problem with SOH. No problem. Nothing given should be treated as a period cost. FG la poda koodadhu. It should be treated at par with your SOH. That is, you should take it your cost of sales ledger. Okay, clear? So always have that in your mind and always write a note whenever there are. See, there is no problem with production overheads. Why? It's always a product cost. There is no problem with SOH. Why? It's always a period cost. The problem is only with respect to AOH. So what you do is, in the absence of information, treat it as a period cost. Write a note saying this has been treated as a period cost. If it is a cost accounting system question, on the credit side, what you should do, take it your cost of sales ledger and close it off. Clear with this? Clear with this? Now let's move to the next one. Madam? Yes, do I have your attention? Please. Yes. Now guys. Now, this is the only value addition in this particular chapter. So let's finish this concept now. Quickly, let's finish this concept. Now, if you look at this, guys, I told you which are the industries, which are the companies that use this batch costing. When I am in the business of manufacturing a standardized or homogeneous product with a frequent change in the variety, which means what? Every time I produce, I need to set up my machine and then I need to produce. For the next lot, again I will change the configurations and again I will produce the next batch. Correct? A typical example in our case, I am taking class every day. Clear? Now, I have told this to you before. Again, let me just repeat it once again. Now, let's say I am taking 6 hours session. Now, I have 2 alternatives with me. I can take the 6 hours in a single day, or I can take it in a span of 2 days. 3 hours day 1, 3 hours day 2. Correct? Now you tell me. Let's assume we are incurring 2 costs. One is the power cost, and the other one, let's assume someone is coming and doing this setup. We have outsourced this work to another person, this camera fixing, the green screen, and all this particular OBS, whatever it is, whatever is the setup someone is doing. Now, let's take electricity cost. Now, whether I do it for 6 hours in a single day or I do it for 3 hours per day into 2 days, power cost will it change? Power cost will it change? No. AC, fan, lights will be turned on for 6 hours. Whether continuously or not, the cost will be the same. Correct? Now, you tell me, the setup cost will it change? The setup cost will it change? Yes. Why? Because setup cost is not driven by the number of hours. It is driven by the number of setup. Correct? Correct? If I am taking the 6 hours class in a single day, I only need to set it up once. Correct? If I am going to take it in 2 days, day 1 setup, after 3 hours I will close. Day 2 again one more setup. So basically, setup cost is not a variable cost. It is driven by the number of setup, or in other words, number of batches or a number of runs. So batches, setup, runs, these 3 words are interchangeable. Are you clear? Similarly, in a factory, what they do, if they want to, I told you, if they want to manufacture one style of shirts, they need to change the configuration, set it up, pour that dye and all, that color dye and all accordingly, and keep. If they want to change the sale, if they want to change their particular pattern, color and all, again for the next lot, one man has to come, he needs to change the settings and then do it. Correct or not? So this is called as a setup cost. Are you clear with this? Now, batch costing is generally used in industries where setup is required before I produce. Correct or not? Correct or not, guys? Correct or not? Now, let's take an example. Now, let's say, guys, let's say I am in a business, and in this year, I have to manufacture 1,20,000 units. Example. Now, just go back to the same raw material concept, EOQ concept. Now, there I told you I need to purchase 1,20,000 kgs. Here I'm telling you, I'm talking about FG. In that chapter, we were talking about raw material. Now, what happened? I have to produce 1,20,000 shirts. That shirts frequent change in variety is fine. Totally 1,20,000 shirts I need to manufacture. Clear? Now, I have 2 options with me. Option number 1, produce the entire 1,20,000 units. In a single setup. Meaning what? One time you set up, finish the entire 1,20,000. Or the second alternative is manufacture 10,000 units at a time, but like that you need to have 12 number of production runs, or 12 setups you need to do. That is 12 setups you need to do. I have 2 options. Option number one, entire demand I will finish it off in a single setup. Or option number 2, what I will do is I will reduce the quantity that I produce. The batch quantity I will reduce, but the number of times I will repeat the batch will be more. Clear? Which is better? Again, there is no single solution to this. Why? You tell me, if I increase my batch quantity, that is, I am manufacturing 1,20,000 shirts at a time, single time. You tell me the number of production runs or the number of setups, what will happen to it? It will reduce. Correct? Single setup is required. Correct or not? So what happens to my setup cost? It will decrease. Correct? But the problem here is, if I am producing one entire 1,20,000 units in a single stretch, I need to have a big facility. For which the carrying cost will be huge. Correct? So tell me, what happens to my average inventory? It will increase, because of which my carrying cost or holding cost, will also increase. Correct, guys? So the advantage here is by way of reduced setup cost, whereas the disadvantage here is by way of increased carrying cost. Correct? Suppose I reduce the batch quantity, saying, okay, let me just produce in lots of 10,000. What happens to the number of runs? Runs means what? Number of batches. It will increase, because of which the setup cost will increase. Now I will have to set up, number of times I set up will be more. Correct or not? What happens to your average inventory? Just 10,000 units at a time. I don't need a big facility. Average inventory will fall down, because of which my carrying cost will fall down. So now here the advantage is by way of reduced carrying cost, whereas the disadvantage is by way of a increased setup cost. Are you clear with this? So now which method is better? Now there has to be some point. If I fix that as my batch quantity, my total cost will be least. Total cost will be least, and that point, that batch quantity is called as the economic batch quantity. So what do you mean by an economic batch quantity? The batch quantity which will reduce my overall relevant cost, which will reduce my overall relevant cost is called as my economic batch quantity. Economic batch quantity. Are you clear with this? Are you clear with this? And we are talking about FG, and there we were talking about raw material. Here we are talking about the batch quantity, how much to produce at a time. There we were talking about order quantity, how much to purchase at a time. Are you clear? Here we are, the carrying cost here is talking about the carrying cost of FG. There the carrying cost was talking about carrying cost of raw material. Here, there was an ordering cost per order. Here you have a setup cost per batch or per run or per setup. These are the differences. Are you clear with this? But it's one and the same. It's one and the conceptually it's one and the same. Now what happens here is I told you by following the law of economic theorem, if you see what it says is the total cost will be the least when your setup cost is equal to your carrying cost. You tell me, as my batch quantity increases, setup cost will increase, setup cost will decrease, correct or not? So that's why this curve is coming like this. And as my batch quantity increases, my carrying cost will increase. That's why this curve is coming like this. And at a point where my carrying cost is equal to setup cost, that is the point where I will have the least overall cost. If you see, the overall cost is least here. If you go slightly beyond this, it will be slightly more. If you go on the other side, then also it will be slightly more. Only at this point, it is hitting the bottom. It is hitting the bottom. So the overall cost, the total cost will be the least only when your carrying cost is equal to your setup cost. Are you clear with this? So now what I will do is, you guys know. So here the formula, what I will do is, let the entire demand. So there we were talking about raw material consumption requirement. Here we will talk about FG's demand. Are you clear? Let's keep that as D. Let the demand, here I have given it as A. You can keep anything you want. You keep it as D. D is what? Demand. S is going to be your setup cost per setup. Okay, this is S. And C is going to be your carrying cost per unit per annum. Per unit per annum. Why is it per unit per annum? The carrying cost, I told you, is driven by two reasons. One is your quantity. The other one is your duration. That's why per unit and per annum. How much you hold and how long you hold. Are you clear with this? So now you tell me, a point where my setup cost is equal to my carrying cost. Setup cost is equal to carrying cost. Setup cost, what is the formula? Number of setups multiplied by setup cost per order or setup cost by setup. Number of setups, can I say, it is nothing but the total demand divided by batch quantity. Correct or not? That is totally, I need 1,20,000. I am producing in batches of 10,000, which means the total number of setup is going to be 1,20,000 divided by 10. It's going to be how much? 12. Correct or not? So this into S. Correct or not? This must be equal to carrying cost. What's your carrying cost? Average inventory, that is 1/2 into batch quantity into carrying cost per unit per annum. Correct or not? The same logic we've seen before, guys. Are you all clear with this? So if you equate the two, you will get 2ds by C is equal to BQ square, and therefore you can say BQ is equal to root of 2ds divided by C. And the point where this your setup cost is equal to your carrying cost is called as your economic batch quantity, and hence the name EBQ. Are you clear with this? Are you clear with the logic? You need not mug up anything. So what is the formula here? Root of 2ds by C, where D stands for demand, S stands for demand per annum, your S stands for, see, D stands for demand per annum, S stands for setup cost per setup or per run or per batch, and C stands for carrying cost per unit per annum of FG. Are you clear with this? And I also told you one shortcut formula. At the EOQ level, if you want to find out the total relevant cost, it is root of 2DSC. That is, put everything into the root. I told you this, there is a shortcut formula. If you want to find that, you can use it. Else you can also find out individually your setup cost and your carrying cost and add it up. Are you clear? Number of runs or batches is nothing but D by demand divided by batch quantity. The time gap between two batches, I told you, this is the period divided by number of batches. For example, here 1,20,000 divided by 10,000, how much is it? 12 orders, 12 number of batches, 12 batches. Can I say this 12 batches is nothing but monthly ones? How I am able to say that monthly ones? I am saying 12 months divided by 12 batches is equal to 1. So monthly ones, or this months I can write it in weeks or in years. That's what they have given here. So it is 12 months or 360 days or 52 weeks divided by the number of batches. If you do, you will get the time gap between two batches. Are you clear with this? Are you clear with this, guys? Are you clear with this? Everything is one and the same. What was called as an ordering cost is here called as a setup cost. What was done for RM is done for an FG. What was called as a economic order quantity is now called here as economic batch quantity. Correct? It is done per unit of raw material. Here is done per unit of FG. Are you clear with this? And that's about this area. Let's do one sum. A famous sum here. Let's do this sum. Shall we, guys? So let's get started. Arnav Motors Limited manufactures pistons used in cars. So piston is actually one of the main components in a car. As per the study conducted by the Auto Parts Manufacturer Association, there will be a demand of 80 million pistons in the coming year. 80 million. 1 million is how much? 1 million is how much? Zero kanaka. 1 million is how much? 10 lakhs, correct? So 80 into 10 lakh, how much is it? 80 crore. 8 crore. Correct. 8 crore. So 8 crore is what? Not their sale. Overall market size. Look at this. Arnav Motors is expected to have a market share of 1.15% of the total market. So 80 crores or 800 lakhs into 1.15%. How much is it? So 9,20,000 is going to be the demand. 9,20,000 is going to be the demand. Are you clear with this? Don't take this 80 million and all as demand. Okay, they have given it. You should compute. Fine. Next, estimated. Okay, fine. Cost is 1.5 rupees inventory holding cost per piston per month, and then the setup cost is 3,500. So S is equal to how much? 3,500. Correct. And C is equal to how much? 1.5. 1.5. Look at this. This is where students make mistake. Look, this makes a grave mistake. Now you have not gone wrong in any concept. You have just overlooked it. Look at this, guys. This can't be done. Per month is given. It should always be in per annum. 9,20,000 is demand per annum only, no? Then why you are multiplying this with carrying cost per unit per month? It should be 18. Correct? 18. Correct? Per unit per month. Per unit per annum. Now you have these three figures. Correct? So tell me, what is the EBQ? Determine the optimum run size. Meaning what? EBQ. How much is that? Together you both did a mistake. Huh? Okay, fine. 18,915. Guys, are you all clear with this? Okay, guys, right. Okay, then. Hello. Yes, next. Assuming that the company has a policy of manufacturing 40,000 pistons per run. What is EBQ? 18,915. But they are saying, no, we will manufacture it only in lots of 40,000. You tell me, the total cost will be more or less? It will obviously be more, because if you deviate from your EBQ, whether you are producing more or less than your EBQ level, the cost will be more. Calculate the extra cost the company would be incurring as compared to the optimum run suggested in one above. Now look at this, guys. If I am operating at EBQ level of 18,915, setup cost will be what? It is nothing but demand divided by batch quantity into my SR setup cost. So it's going to be 3,500, correct? Here it's going to be how much? 9,20,000 divided by 40 into 3,500. They have got something. Correct? Next, so they have got this figure. 1,70,000, 80,500. Next, carrying cost is what? Average 1/2 into batch quantity into what? into carrying cost per unit per annum. So here they have done 18,915 by 2 into 18. Here they have done 40,000 divided by 2 into 18. So if you see it here, what happens? This is the carrying cost and 3,60,000 is the carrying cost if your total output is going to be 40,000. So if you see your total relevant cost, if you are following economic batch quantity, it is only 3,40,470. Whereas if you are deviating from that and have a policy of manufacturing 40,000, the overall cost is 4,40,500. So the extra cost is 4,40,500 minus 3,40,470. Are you clear with this? Guys, are you all clear with this? Extra cost, how much is it? Calculate the cost for both the levels and you can find the incremental extra cost. Always, if you are deviating from your EBQ, the overall cost will only be more. Are you clear with this? Guys, are you all understanding? Madam, yes, you guys are understanding this. You guys are understanding? Yes, guys? Fine. Now, what else have they asked in this question? Identify the variability of the cost. So, we will see that on a batch level and unit level. Now, look at this. Inventory carrying cost. Now, unit wise it is variable, batch wise also it is variable. Why? Guys, your inventory carrying cost, no, it is mentioned as per unit per annum. Now, if you have more number of units, proportionately it will increase, correct? If you have more number of batches, also proportionately it will increase. Why? Batch indicates the underlying units only, no? So, the variability is, it is variable with respect to, if you keep the cost object as unit, then also it is variable. If you change the cost object to batch, then also it is variable. Next, designing cost for a particular job. If you see, now let's say this, I told you this example of, let's say this shirt, okay, designing they are doing, okay, for one particular batch exclusively they are designing, correct? Do they incur the cost for every unit? No. For that batch, entire designing is done, correct or not? So, if you look at it from a batch level, it is variable, but underlying unit wise, if you see, it is fixed. Are you clear with this, Purilia? Yes, are you all understanding this? Are you all understanding? That's why I told all the costs are both fixed and variable. It is just the perspective from which you look at it. If you change the cost object, it will change. When did I tell you this? When did I tell you? Which chapter? Excellent. I told this to you when we did ABC, activity based costing. Next, machinery setup cost, batch level variable, unit level fixed. Depreciation, it is fixed from both the perspective. It has nothing to do with unit or batch. Are you clear with this? So, this kind of questions can also come. Maybe for 5 marks, you can just expect these kind of questions. And idu mattum illappa, mottama sedu 5 marks. The entire question is for 5 marks. Are you clear with this? Guys, are you all clear with this? Are you all clear with this? Yes, you guys are understanding? Yes, you guys are understanding it. Now, finally, job costing. This is nothing, guys. Same as unit costing, but what I told you, what is unique in job costing? You don't find the total cost and divide it by units. Job wise, you go and find out the cost. That is nothing but you prepare the cost sheet job wise. There is no question of saying units and all there. One job itself is one unit. So, there will not be any kind of closing stock, opening stock and all, because that stock itself, that entire job itself is one unit, correct? So, you can't have partly completed, partly incomplete, segregation and all is not there. If it is complete, take it to your cost of sales. If it is not complete, it will still remain. Are you clear with this? Are you clear with this? So, the entire cost sheet concept, we are applying it on a job level. For individual job, we are valuing. Just look at this question. As a newly appointed cost accountant, you find the selling price of job number 9662 has been calculated on the following basis. They have given you material cost, direct wages. They have given you 22 hours at the rate of 25 pice per hour. How did they get this 22 hours? 10 plus 4 plus 8. This is how they got this 22 hours. Then they have got some cost. On top of this, they have added 33% is prime cost and they have arrived at the selling price. This is given data, okay. Now, they have given an analysis of the previous year's profit and loss account shows the following. Material, so much. Wages, department-wise, so much. Factory overhead, department-wise, so much. Selling cost, totally, so much they have given. First, draw up a job cost sheet. Calculate and enter the revised cost using the previous year's figure at the base. Add to the job 10% for profit to give the final selling price. Now, what you need to do, first material, you will take actual. Prime cost, you will take actuals, correct or not? Material, labor, it will not change. If you look at this, material cost is same, labor cost is same. So prime cost you got as 17.58. Clear? Now, I will value every unit at what? Full manufacturing cost, correct or not? Correct or not? Fine. So what will I do? I need to apportion the production overheads, correct? Now, how will I apportion the production overheads? I only have the totals here. But what is the base quantity that I can take? Guys, what is the base quantity? Labor hours of. I can take the labor cost itself, no? And I can say that factory overheads is a percentage of direct labor, direct wages, correct or not? So apply this and find out the absorption rate. Can I say this is nothing but, so your 5,000, so 2,500 divided by 5,000, it's 50%, 4,000 by 6,000, 66.67%, 1,000 by 4,000, 25%, correct or not? So I have a department wise absorption rate, correct? Now I also have the department wise labor cost. Do I have the department wise labor cost? Yes, it's given here. Department wise labor cost, how much is this? This is 4, this is 1, this is 8 into 0.25. How much is 8 into 0.25? 2 only, correct? So you do 4 into 50%. This is what they have done here. Oh, idve tappa. First this is 2.5, correct? So look how they have calculated here. Look at this. Okay, so this is the answer. So they have 50% of 2.5, 1.25, 66.67% of 1, it is 0.67, 25% of 2, it is 0.5. You add the 3, you will get this. Are you clear with this? That is the department wise wages multiply with the absorption rate, you will get your department wise factory overhead absorbed. It is equal to 2.42. Are you clear with this? And on top of this, they have added the selling overheads. Now, selling overheads, what is the absorption rate? What they have done, guys, selling overheads generally, nothing is mentioned. What they have done is, they have absorbed it as a percentage of the total cost, works cost, that is total works cost. What they have done, you look at this. In the previous period, what was the total works cost? 77,500 plus 5,000 plus 6,000 plus 4,000 plus 2,500 plus 4 plus 1. How much is it? Add all your manufacturing costs. How much is it? 1 lakh, correct? Now what they have done, they have kept this 1 lakh as the base. This is your works cost, and selling cost, what they have done, they have made it as a percentage of works cost, and they are saying that it is 30% of works cost. Fine, they have arrived at this absorption rate. So it is 30% on 26 rupees. Add it to it. Here you get 26. The profit, they have asked you to apply 10% on cost at 26. It's going to be 2.6. You arrive at your final selling price. Are you clear with this? So here there is no question of units and all. For the job, you just prepare the entire cost sheet. It's called as a job cost sheet. Are you clear with this, guys? Anything new here? Nothing. Ideally, nothing is new here. Are you clear with this?